quarter on quarter, right? But we'll still take you through how great they've done. Up 156% to come in at 47 crores. Revenues jumped 71% to 523 crores. EBITDA has spiked over 100% to come in at 81 crores. So they've doubled on their EBITDA. So operationally as well, great performance being pulled out by Electra Greentech. Margins have also seen an expansion, which is obvious, right? Because of the kind of EBITDA recording we've seen, have come in at 15.5 versus 13.2. I know this is an expensive stock. It's a very expensive stock as compared to its peers. And it, I think, looks even more expensive because its peers have sold off quite significantly in the last 1 month. Electra in the last 1 month hasn't done too badly. It's only down 3% despite being a expensive stock, but I guess the belief or the argument here is with the growth potential of this one, which some may believe justifies the kind of valuation that trades at. It looks expensive as compared to the peers, but the numbers are phenomenal, to say the least. What was disappointing was what Shoppers Stop did, and I don't think we were very excited about this one, even ahead of numbers, but we'll take you through what they reported. Revenues were marginally up, single digit, 7%. EBITDA declined 7% at 150 crores. Margins have also dropped quite sharply. So this could be on back of maybe season's sales, getting rid of old stock. They also have significant competition now in the unlisted market in that sense at 13.4 versus 15.5. There's also a net loss of 20 crores that they've posted versus a profit of 2.7. So Shoppers Stop is going to have it rough this morning is what I'm pretty certain about. A quick update on Paytm, and I think this is the big story. A big positive reaction can be expected on 197 communication. The National Payments Corporation of India, which is NPCI, has finally granted the much anticipated approval to Paytm parent 197 Communications to onboard new UPI users. So they're back in business in terms of adding new customers.
Yeah, and Harsh is going to speak about that, but just watch out. Gujarat Fluoro, Reliance Infra, Sonata Software are some of the other names that you want to keep on your list for sure. But yeah.
I'll just quickly add two more. They're small, but they usually react to this. One is RITES. They won a big order for 55 crores. So after yesterday's trashing, there might be some recovery on this one on order wins. And RailTel as well has been recently bagging orders. 36 odd crores. The last time I bagged a 40 crore order, the stock was up 10%. Let's see if it responds well to this one. It's a 36 crore rupee order for RailTel. So RailTel and RITES could move on order wins, Neeraj, this morning.
Yeah, let's go across to Harsh now because financials is the big sector that we're tracking in addition to IT, by the way, which will get a leg up because of Coforge and Persistent. But financials, and Harsh, over to you for what some of the results have looked like and the commentary more importantly.
Well, yes, I'll first start off with Bajaj Finance, and on the negative side, we are seeing elevated credit costs, and that seems to continue spill over in Q2 as well. Though Bajaj Finance believes the worst is now already factored. They've hiked their credit cost guidance 2% in Q1 FY25, 2.13% in Q2. They had guided for a band of 1.75 to 1.85 for FY25 full year. That looks unlikely now. They've therefore hiked their credit cost guidance to 2.05% for full year FY25. That's a substantial hike, a 20 basis point hike, 10% higher than what they had anticipated. Not looking good on that count. What's looking good though, cost of funds has peaked and therefore margins should therefore only get better from here. A rate cut, 25 basis points, should lead to a 12 basis points increase in margins, which is critical now. Not the full 25 because they're going more into secured products. They're changing strategy also a little bit. Change strategy likely to be announced in January of 2025. I'll switch over to M&M Financial because that's where you're also seeing some bit of pain. ROA guidance was 2.5% at the start of this financial year, was trimmed to 2.2% aspirational in Q1 FY25, now changed to 1.8 to 2%. Credit costs continue to rise for this one. What they were anticipating was a credit cost of almost 2%. In terms of where it goes from here, they're expecting H2 to be better, recoveries to start to kick in. They're focusing more on collections is what they're saying. They're investing also more on collections. They're tapering OPEX and therefore likely a 1.8 to 2% ROA is what they're guiding for. But they've sharply reduced it from the 2.5% aspiration at the start of this financial year. So that one will also be in focus. Stock has already been under some bit of pressure. Asset quality problems across the board, whether you're talking about CVs, whether you're talking about personal loans. That's really the takeaway from here.
Okay. Okay. So M&M Financial, Bajaj Finance, Harsh, credit cost peaking out is so therefore, Harsh, very quickly before we get to Paytm, just one quick thing. I mean, most notes that I read seem to suggest Morgan Stanley, for example, is saying that this is the bottom for Bajaj Finance. MK seem to believe that credit costs are peaking and therefore things will turn even if there's a lower target price. Because the current price is also not like 8,000 odd. So could it happen that the street will look at that and therefore the stock may actually do slightly better?
That's a great observation, Neeraj. In fact, I missed saying that. So the EPS trim by some of these analysts are just maybe 1 to 3 or 4%. So it's not a very large trim on the EPS count. Also, they believe that valuations are starting to look attractive because the stock hasn't performed at all. You're looking at 6,700 on a roughly 12 to 1300 crore book value. 12 to 1300 rupee book value, and therefore your valuations are at likely all-time lows. Never seen Bajaj Finance trade at 5 times price to book, and therefore they are starting to see possibly a very solid upside from here. For example, Morgan Stanley's target price of 9,000 is a 35% upside from here. So some of these brokerages really keeping or holding on to their target prices while trimming EPS by just a wee bit. Even Citi's target price is roughly 8,200. So good strong upside from here is what they are factoring in. Likely a positive reaction just on the basis of the underperformance on the stock, but that doesn't take away from what the commentary seems to be suggesting.
Okay, Harsh, and what about Paytm? Samina mentioned the news, but what will this mean for Paytm?
Well, Neeraj, all this time, what Paytm has been doing for its users is they've only been able to use their wallets. Now UPI comes on stream, which is a big positive. This will, of course, lead to more transactions on the platform itself. So, and mind you, Paytm attracts customers because it can offer payments. That's its primary attraction to customers, and therefore, customers likely to get or use the Paytm app far more, given that UPI is now available. Of course, I have to wait and watch for trends as to how that plays out over the next maybe 2 quarters. But at least what MK and Bernstein, the 2 brokerage notes that I have read since morning, seem to be suggesting is that they are constructive with regard to monthly transacting users, and more users on the platform means more business for Paytm even in other products. So likely a positive reaction on Paytm on the back of this. It's really constructive. One, more users on the platform, more people adopting Paytm because UPI is available. Second, you'll have more users looking at more products and therefore revenue will get better. So monthly transacting users as well as revenue likely positive. Whether it's bottomed, I'm not so sure in terms of stock price, but what in terms of numbers, in terms of quarterly numbers, whether the numbers have bottomed or not, likely is what most analysts on the street are saying. So that's another positive.
Thanks for that, Harsh. There are a bunch of positives on Paytm. The stock, for sure, certain, should be reacting positively. But it's not just Paytm, relief on Paytm. It's also Gujarat Fluoro. Neeraj, you want to highlight the story that you've been talking about? Yeah. Because it stands out from what you told me.
Yeah, I mean, ideally it should stand out. Maybe first let's go to Varsha, Samina, because I think she's got the details of the development that has happened. Varsha, tell us, why is Gujarat Fluorochem in focus today?
Well, thanks Neeraj for that. So Gujarat Fluorochemicals subsidiary company, which is a GFCL EV, is going to raise 1,000 crore at 25,000 crore valuation that they've given. Now fundraise will be led by Inox GFL promoters and key investors. Now this fund will support capex in EV and ESS sector. Now what are the key products that they're going to sell is, one is electrolyte salts, cathode materials and binders. Now all these chemicals are used to make lithium ion batteries. Now already company is into these products, but they're gonna expand at a huge scale. Now, if I were to speak about the capex plan that company has been highlighting in their con calls, they're going to invest around 6,000 crores over the next 4 to 5 years, out of which 2,400 crore capex will be done over next 2 years, and they're aiming 2x asset turnover at 25% EBITDA margin. Now, already they are in talks with the global customers for this EV battery chemical business, and they're engaging with 20 plus global EV customers, and revenues are expected from second second half of FY25. If I were to talk about the market outlook, EV battery market is expected to reach at $300 billion by 2030, and lithium battery demand is projected to grow 5 to 6x by 2030. Now, just a rough calculation, if they were to do 2,400 of capex in the next 2 years, so assuming by FY27 or 28, they're going to do almost 4,800 crores of revenue when it comes to EV chemical battery business. So at a 25% EBITDA margin, they will have an EBITDA of around 1,200 crore only from the EV business.
Well, certainly watch out for this one, Varsha. So thanks for putting this into perspective. I mean, interesting, right? 50,000 crores market cap. EV subsidiary valuation in the current times at 25,000 crores.
And they've raised?
Yeah, they're raising 1,000 crores.
And we don't know who's giving them the 1,000 crores, so we don't know which investors have come on board just yet.
Yeah, for sure, I don't know if she's still there. I don't think the names of the investors are out as yet, but be that as it may, the point being that for us, for a business which isn't contributing majorly to that business, valued at 25,000 crores, should be construed positively. I would reckon the stock could react. So let's wait and watch. Okay. Focus on the derivative space, and as is the case, Agam Vakil is standing by for his call on this. And Agam, how are you observing the pocket today, and what strategies for us today?
Right, well, tough markets right now, and while the benchmarks have come off around 1.25%, we're also looking at deep cashes in the broader markets. It's going to be one of those days where I reckon that a lot of traders will have to grapple with the current data in the kind of traction that we're seeing. But I'm going to very quickly take you through what's happened yesterday. So 1.25% decline for the Nifty. It's seen a little bit of an increase in open interest when it comes to the futures. The Bank Nifty is again where we are seeing a little bit of weakness coming in, with a decline of around 1.4%, about 3.4% added in open interest towards shorts. Moving on to the options market. Naturally, we did see a lot more writing in terms of calls yesterday, even as the Nifty weakened significantly. And it does seem like at the moment, 24,500 is becoming a little bit of an important level, because not only are we seeing a lot of those puts which were earlier written unwind yesterday, but the 50 daily moving average is just a mark short of the 24,500 level, so which means that strike becomes important. But as you can see, maximum open interest for puts have shifted to all the way down to 24,000. Moving on to the Bank Nifty, again, it's been a tricky index, but again, because of the weakness that we saw yesterday, a lot more call writing coming through in comparison to puts being written. Moving on to the stocks, well, a lot more losers yesterday. We had a very weak market breadth, not only on the benchmarks, but also in the broader markets. Tata Chemicals looking at shorts once again, Ipca Labs, Bajaj Auto, Dr. Lal Path Labs, all of them looking at significant amount of weakness. City Union Bank as an exception, moving up 12% and seeing longs. But on the other hand, in terms of stocks, we're seeing unwinding, a lot of long unwinding coming in for Balrampur Chini, Tata Communications, Adani Realty, as well as NTPC. So, well, the structure isn't looking very good, but let's take this conversation forward and see whether or not there are opportunities that you can take advantage of in these markets. We have Avni Bhatt of GM Financial, who joins us on the show this morning. Avni Bhatt, good morning, and thank you so much for joining in. What's the first stock on your radar, and what kind of an option structure that you're deploying here?
Good morning, Agam, and a very good morning to all the viewers as well. A slight view on Nifty first. So Nifty is in a very oversold zone. RSI is in an oversold zone. OIPCR overall has come down to 0.73, and for the weekly expiry tomorrow, it has come down to 0.5. So again, very oversold. So I think some bit of, if at all we see some gap down opening today, or maybe another 100 to 150 points correction on Nifty, post that there is a possibility of a dead cat bounce. That could take Nifty right up to around 24,600 to 650 levels. So assuming that this dead cat bounce plays out, the stocks that have held on to their grounds and not really corrected much from the top, one of those stocks is Bharti Airtel. So the view is mildly bullish in this case, and that's why we go for a ratio call ratio spread in this particular stock. wherein we buy one lot of October 1700 call. It closed at around 23 yesterday, and we sell two lots of 1740 call at around 10 rupees. So the view is that the stock would recover up to around 720 to 1725, but it will not cross 1740 level. And given that the number of days to expiry is very short, I think going for a plain vanilla call would be dangerous. The time value will depreciate very fast. So we are offsetting that by selling two lots of 1740. We are balancing out the theta component over here. And the maximum profit would be anywhere between 1720 to 1740. And safely, for the sake of simplicity, I've kept the target as anywhere between 14,000 to 16,000. Once you see that kind of profit, you can book out. And the maximum loss is fixed in this case. Anywhere if the stock goes down, the maximum loss is going to be 3 rupees. So in this kind of market, I think it's better to stick to stocks wherein you have to bother only about your own direction and not bother about if at all the view does not play out and it goes down, then at least you are not bothered about incremental losses in this case, because your loss is fixed and that's a very minimal loss, just 3 points. So that's the strategy for Bharti Airtel. I have one more stock on radar, which is on the short side. That is Coal India. Coal India has given a fresh breakdown below the weekly support level of 475 yesterday. And with meaningful open interest addition on the short side in futures. So we are expecting the stock to further go down to around 455 levels. And in this case, we again go for a bear spread. We are not going for vanilla options because of the time value factor.
No point.
So we buy 470 put and we sell 460 put at a difference of 4 rupees. Maximum profit in this case is around rupees 12,000, and you can keep a stop loss of rupees 6,600.
Avni, I just have a follow-up question on your first strategy when it comes to Bharti Airtel. You know, at the small chance, the very small chance that Bharti Airtel in fact does go ahead and hits 1740 under those circumstances, because of the fact that we are selling two calls, you know, there's always that possibility of a little bit of an extended loss out there. And I know the time value is pertinent here in this case, but what if we do see a very sharp spike, and under those circumstances, what is the break even at which you would want to once again potentially book out from that position if we do see a very sharp spike upwards as well?
So 1740 is the resistance as per the options data. There's a huge open interest built up at that level. So 1740 would be a trigger point. If at all it crosses that, only then we may see a further spike in the stock. But the expectation is it won't go beyond that. And in any case, in this particular strategy, the break even on the upside is 1777. So it's a difference between 1740 and 1700. That is 40 is the strike difference, plus the 1740 strike which you are selling. So that gives you 1780, and we are giving 3 rupees from our pocket. So that gives you a break even of 1777, which I do not think that it will be crossed in this particular expiry.
Thank you so much for joining us and taking us through those two ideas that we can deploy in these markets. Of course, if you do have queries with respect to F&O, don't forget to write to us on that number which is being flashed for you on your screen, and we'll be sure to take up your queries on the F&O show today at 10:30. But with that, it's back to you all.
Hi, thank you for that, Agam. Sorry. The market, of course, even Avni saying it's easy to stick with stock-specific action as opposed to betting on the direction of the market, even though a part of me which still believes that there could be a little bit of a recovery that comes through today in trade, especially after the kind of fall that we've seen over the last 2 days, not just on the Nifty, but also in terms of Bank Nifty, PSU banks, real estate, metals, the whole host of the sectors were under pressure. One stock that's going to be on top recall this morning will be Zomato. Posted numbers that on the face of it were a clear beat to what the street was expecting, but a couple of things have stood out. The fact that they've gone out with an aggressive fundraising plans despite sitting on cash. Secondly, they also have a significant portion, which is 10% of their top line, is part of treasury income. All of those things does mean that shareholder value is probably going to see some erosion. Management also talked about the fact that operational EBITDA has been lower because they're on an expansion spree. So what we are seeing is some amount of cash burn that could be taking place for Zomato. But the expert Gaurav Malhotra, ED of Axis Capital, now joins in to talk to us about what he makes of Zomato's earnings and the fact that they've gone out with an aggressive fundraising plan. Hi Gaurav, good morning. Thanks for joining in. I'll start with the most pertinent question. The company is looking to raise 10,000, is already sitting on 10,000 crores roughly. But they've announced a fundraise plan of 8,500 crores over the next couple of weeks and months. What is Mr. Goyal thinking? What is the plan of the company? Because if you already have so much of cash you're sitting on, why dilute stakeholder value in that sense, right? I mean, is there a cash burn we're anticipating? What is your reading?
See, this is more of a signaling issue in our view, right? You have their two major competitors, Swiggy raising around 5,000 crores of fresh money. Zepto has raised reasonable sum of money, and as media reports say, they are raising a little bit more. So I think this is more of a signaling issue. If you recall, this is a very InfoEdge-ish way of doing things, right? And InfoEdge is a owner in Zomato as well. That whenever you see that there could be some of chance of increased competition, you don't wait for that event to take place. You sort of beef up your balance sheet in case you have to use it. Not saying that they will have to use it, but this is more of a signaling issue in our view.
Okay. The question that comes to mind is whether this fundraise and the commentary, more importantly, right? So are they linked to very high competitive intensity? I'm just trying to understand. There are 3 or 4 other biggies which are trying to get into quick commerce. We know that QC or Blinkit is the way forward or the big growth trigger for Zomato perceptibly. So if the heightened competitive intensity is going to be there in the quick commerce space, could it be a telecom of the 2000s, wherein there are a lot of players, lot of growth opportunities, great for the consumer, maybe not as good for the business? How do you think about this?
See, the thing is, this is not so we don't think so that this is in anticipation of some major competitive intensity spiking up, right? I think so everyone understands, including the companies in the private market, unlisted companies, that right now, while investors even in the private space would be interested and excited on the quick commerce opportunity, but this is not the time of 2021, etc., when you would have gotten a lot of money for basically just buying GOV without any associated profitability or path to profitability. So we don't think that is what is going to happen. Even yesterday, the company said that it's not as if with this fundraise, their dark store expansion, which they have guided to say 1,000 by March 25, 2,000 by December 26, those get accelerated, because any which ways, if you see, they are already sitting on more than 10,000 crores of cash. So it's not as if this will help them expand or accelerate it faster. Like I said, see, this is you have other players raising money. You also want to ensure and give a signal that, look, your balance sheet is actually the strongest amongst everyone. So everyone needs to be careful from a competitive trying to increase the competitive intensity perspective.
Gaurav, I just want to ask you this, and of course, if you have a view on this one, because what also stood out for me is, while the numbers on the face of it look very healthy and promising, adjusted EBITDA in this segment is negative. It's about negative 8 crores of loss. Management has indicated that they are struggling with expanding margins. They're also on an expansion spree, not just with regard to dark stores, but also with increasing the warehousing capacity. Now, do you feel like this could be a concern for the next couple of quarters, because this is an expensive stock, and I don't know how much will shareholders be willing to wait or pay that premium while the company is going through that expansion phase, which anyway should be in the price?
Yeah. See, so the way to think about is that, the company is growing very rapidly, right? It's growing its GOV more than 100% year on year. The dark store numbers is in fact expanding. So if in this environment, right, they are managing to keep that margin at that break-even-ish level, which is that 0.1% adjusted EBITDA margin for quick commerce, I think so that's fine, right? I think so it's to be expected that when you're expanding so quickly, obviously the margins will take a little bit of a backseat. But having said that, it's not as if that expansion is leading to dilution in margins, which is where the concern would be. So these margins have remained pretty flattish over the last, say, at least from last quarter onward, the margins have remained flattish despite this big expansion. So I don't think so that is something to be worried about.
That they're sitting on 400 crores of treasury, and some may say that they are masking their performance on back of course, how a lot of the treasury income is coming in, which may mean that operationally things are still tough.
See, any which way, this is a company wherein people, investors, us analysts are essentially looking at the EBITDA and the above EBITDA metrics, right? It's not as if this company is profitable and hence you are sort of valuing it on PE basis. So obviously the treasury income is a large component given the kind of cash which is on the books. But I don't think so that in itself is being looked upon, either positively or negatively from the perspective of valuing the business.
So, Gaurav, what is your view on HyperPure? Can this have the potential to become the next Zomato actually?
See, this is obviously a business which is very fast growing, and we do feel that it has certain synergies with the dark store potentially, right? Because the dark store can then become the way for Zomato to to give the restaurants what they require. So this is something which is a longer term opportunity. Obviously, the top line growth is very strong here, but right now the margins are not improving. So this is something which will take time to sort of evolve over a period of time.
Gaurav, very quick word on District, because that's the next best thing investors are betting on. Are you anticipating any roadblocks? Dipinder Goel has said that in the next 4 weeks they should roll out and have the play. It should be a plug and play model that they would be at. Are you anticipating anything that stands out for you that could probably create a resistance in these plans?
No, really don't think so. What we had actually seen when this whole news was announced of them acquiring Paytm's business is that there are a lot of synergies between the two businesses in terms of who the target audience is and what they are sort of offering in terms of events, experiences, etc. And obviously the company has shown very good execution in its history. Transitioning from a classified to food delivery to quick commerce. So we do expect that there should not be any major roadblocks in the execution and rollout of District.
Lastly, Gaurav, quick take on the call at the current price. What are you expecting and what is your target?
So our target is 319 rupees, which is around 25% upside from here. So we remain bullish on the business. I think so. All the operating metrics are going in the right direction. There is a large opportunity in quick commerce. It's relatively underpenetrated. And obviously, Zomato has shown very good execution.
We'll leave it at that. Thanks so much for joining in today and giving us your thoughts. Really appreciate your time. And that's the Axis Capital view on Zomato. It's the big development of yesterday, but a lot of other things to focus on. And let's do a bit of a rapid fire because it's 8:50 already. Kush Bora Johnson on the technicals, on the fundamentals, Mayuresh Joshi on the derivatives, Chandan Taparia. Gentlemen, all three of you, thanks so much for taking the time out and being with us. Kush, very quickly, let's nail it down. We are doing a bit of a rapid fire here. If the markets start off flattish today, is there a call on the Nifty or the Bank Nifty that you would give out?
Sure, Neeraj. Nifty, we'll see during the day how the day sets up and progresses. Bank Nifty is setting up for a long trade because it's gone into oversold territories as per the PCR, which is 0.59 and thereabouts. So with a stop loss around 50,800 odd, you could trade for 51,800, 52,200 kind of levels. Nifty, as I said, we'll need to see as to how the day progresses.
So you're constructive on the Bank Nifty with a stop loss. Nifty, you are waiting and watching.
Absolutely, have been for a while. Continue to remain so on Bank Nifty.
Okay, thanks for being that brisk, Kush. Just the nature of the day today. Chandan, come to you and I'll request you to maybe again a rapid fire. How are you trading the Nifty or the Bank Nifty today?
So first start with Nifty. Good morning, everyone. So setup is negative. The index has been making lower top, lower bottom, and we have noticed that every small bounce is being sold and levels are drifting lower. Index is holding well below its 50-day exponential moving average. So till the immediate level is not surpassed, I'll be with the short-term trend. Until Nifty remains below 24,650, I'll look for a downside move towards 24,200. In Bank Nifty, the momentum is getting hold, upside is being kept. However, multiple supports are there at 51,000, but bounce could be sold with hurdle of 51,600 for 51,000. So weakness may persist in both the indices as of now, looking at the market selling intensifying.
Mayuresh, how are you feeling? 7% lower from record highs. Are you buying the Nifty passively through an ETF?
Morning, Samina. Morning, Neeraj. Morning, Koish. Morning, Chandan. So I think we are waiting out for the markets to settle down on its own. So we're not trying to rush in. But I completely agree with Koish and Chandan as well. Even our technical team feels that a bounce back is around the corner. Banks have surprisingly given good set of numbers, barring a few. So I think banks should perform well within the two indices.
So in light of this, what are the stock calls for the morning? Kush, can I come to you first? What are the stocks that you're trading today?
Sure. It's not a bad idea to start nibbling at some of the stocks that you've wanted and, are perhaps seeing some cool off. This is a market where you'd want to perhaps do that. So I've got a long and a short idea both. On the long side, we've got Poly Medicure. Now this stock has had a good run. It's just about to complete that rounding, bottom formation and, could see a breakout from there. So slightly preemptive, but on the back of good volumes yesterday, the stock was up. So for positional targets of 2650 and 2775, you could look at a long trade on this one. Stop loss comes in at 2400. On the short side, you've got Ramco Cements. The stock broke below the 200-day moving average 2 days ago. Continues to reel under pressure on the back of strong volume. So I think, from a near-term perspective, 814 and 805 are your targets. 835 is where you place your stop loss.
Right. Chandan, very quickly, what are your top trades? Do you have any? It's okay not to.
Yeah, so two trade on both the side, one on the sell and one on the buy side. Buy side, I'll focus on ICICI Bank. The stock is bottomed out and comparatively holding well with a consolidation breakout of last 14-15 days. So with support of 1240, we are expecting a move towards 1320 in ICICI Bank. UPL is sell call from our side. The sector is comparatively underperforming and witnessing sustained selling. And the stock has been making lower top, lower bottom formation. We have seen huge build-up of short position. The stock has been pulling down from 630 to 530 and more weakness could continue. So with hurdle of 545, one can sell UPL and it can dip down towards 500 marks.
One buy, sell UPL. That's the call coming from Chandan. Mayuresh, do we go in for a break? Okay, we'll just do a quick check on the implied as well. It's indicating to a flat start, so not too much expected in terms of market action. But Mayuresh, while there are opportunities, stock-specific opportunities, have you spotted anything? While the Nifty is down 7%, there are stocks that have halved from the recent highs.
Also, I think one stock that comes to our radar, which is being put on our list, is Swaraj Engines. I think good set of numbers as far as the second quarter and the first half is concerned. Top line growth was very decent. In fact, if you look at the volumes that they've probably sold, close to 47,000 odd units in quarter two, compared to around 38,000 units. For the first half, they have done 88,000 units compared to 78,000 units. The management sounds very, very confident because of what we've probably seen in terms of monsoons. And this trend might very well continue in terms of tractor sales going forward as well. So I think decent balance sheet, Rogan's balance sheet, volume growth has been decent, would continue probably in the next few quarters. This is one stock that we're keeping on our watches.
Okay, watch out for Swaraj Engines as something that Mayuresh is keeping on his radar. Take a break. On the other side of the break, some specific stories, including one on IDBI Bank. Stay tuned.
In a world of shifting power dynamics, India stands tall as a global force. Join us at the NDTV World Summit 2024, where Prime Minister Narendra Modi will unveil his transformative vision for the India century. Be a part of a summit of thought leaders and visionaries, shaping the world's future. NDTV World Summit, October 21st and 22nd on the NDTV network.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
In a world of shifting power dynamics, India stands tall as a global force. Join us at the NDTV World Summit 2024, where Prime Minister
Welcome back. You're watching NDTV Profit. It's not looking good on the implied Nifty, but these are just early ticks, so we shouldn't be too disappointed with what we are seeing on the screen just yet. We'll come back to this. There'll be lots of stock-specific reaction that'll be interesting to track this morning. Stocks like Bajaj Finance, Zomato, Gujarat Fluoro, 197 Communication are some of the counters that will see a good reaction in trade. Zomato up about 1% post its earnings reporting. Paytm, look at that, 11% up move as the regulator now allows them to add new UPI customers. Bajaj Finance is well higher by 2%. Gujarat Fluoro, that's the big one to track this morning on back of the fundraising plans, the EV vertical. The subsidiary, of course, being valued close to 25,000 crores is what could be a big positive. For now, muted in that trade. But let's move on very quickly. We'll come back and track pre-open trade and talk to our guest, but on to NDTV Profit exclusive. The IDBI stake sale proceeds is gaining pace with the government to call financial bids by the last quarter of FY25. My colleague Shrimi filed this report. Listen in.
Much awaited IDBI Bank stake sale seems to have gained pace. As what we are picking up from our sources is that, government is going to call for financial bid in this financial year itself. In fact, in the fourth quarter is what they anticipated. In fact, they are going to give the virtual access of data to all the potential bidders by November itself. And then they are going to have a draft share purchase agreement where the RBI and the other regulatory approval will be, assessed by these bidders. Remember, the expression of interest was invited in January 2023, where all these candidates have expressed their interest towards this stake sale and the disinvestment part. And now the potential candidate have also gone for the fit and proper criteria, which they now secured it. 4 to 5 candidates are what we are picking up from our sources has secured that fit and proper criteria, and then now they are moving towards the financial bids side of it, and we will soon get some sense that whether this the entire stake sale process will be moved to the next financial year, because after financial bid also it will take 6 to 8 months of timeline to conclude the deal. So we are tracking the story and will get more details on that.
All right, IDBI, and that's certainly an important one. And financials are the important ones today, more importantly, so keep that in mind. Marish, any quick thoughts? IDBI or Bajaj Finance or M&M Finance?
No, so within NBFCs, Neeraj, my own sense is that there will be a gradual recovery, specifically on the rural part of the business, because as the Kharif season is unfolding, as realizations become better, you've already seen one round of MSP increases happen, and the expectations of a good Rabi harvest and output will probably mean that the second half will be relatively better for rural discretionary spending. And therefore, I think a few of these rural-focused NBFCs might actually start delivering in terms of both the growth numbers versus stability and asset quality, and therefore better numbers in terms of return ratios as well. I think a few of these rural-focused stocks, something like a Chola investment, is something that I will keep on my radar. Within the banks, within the mid-cap universe, I think Karur has given a good set of numbers. As a disclaimer, we continue to think that is unavailable. And a few of the other PSU banks as well. The Bank of Baroda as an example, and Bank of Baroda.
Okay. That's financials. Now, amongst the other stocks, and we should pull up Amber Enterprises to just see if there are initial reactions. It's only 4 minutes. But remember, it's a very volatile stock. Now was up day before, down yesterday. It's now clocked in at the Q2 numbers, 82% uptick in revenues, margins stable, and has turned profitable, if you will, on a YOY basis versus a loss. Puneet Johnson to tell us about this and what to expect from other companies. Puneet, 90 seconds, Amber plus others.
Well, definitely, for Amber specifically, a very big beat, because revenues were expected to grow by about 41%, and they've come in at an 81% growth compared to the same time last year. When EBITDA margins were expected to grow about 40%, they've also come in at roughly 97% growth compared to last year. That's another beat. And profitability, as you rightly said, coming in at 20 crores versus expectation of just about a couple of crores of profit. So it's a beat on all fronts, and that's driven by the consumer as well as the electronic business of the company. The electronics has the PCBA assembly business, which is catering to products of these. So that's one of the key things, and that's where the beat is coming. On margins as well, it's seen a 160 basis point improvement in the consumer business, while the electronic business has seen a 250 basis point improvement. The railway business has been subdued because of lower ordering of the Vande Bharat, and they're expecting the second half to be much more profitable in this particular entity. For the EMS space as a whole, Dixon and Keynes are the two companies that are expected to show strong growth. Dixon is expected to show 84% revenue growth compared to the same time last year, while margins will be stable at around the 3.8 to 3.9%, while its profits are also expected to grow 80% compared to last year. On Keynes Technologies, again a 65% beat in revenue according to Bloomberg, while its profits are also expected to grow 88%, showing strong operating leverage for the company. And finally, Syrma, I want to just highlight because they're expected to report results this Friday, expecting a 40% growth in revenues, but margins are going to contract by 90 basis points, and in the first quarter as well, we saw 400 basis point reduction in margins because of the higher concentration of the consumer vertical. So overall, EMS players are expected to report really strong revenue growth, some more than others, and we can see that in Amber numbers as well. Back to you.
Well, that's all the action in the EMS space that we're tracking. Amber is going to be one stock you want to track early this morning. Well, a quick check of how implied Nifty is looking, and then we'll move on to quickly talking about stocks with our guest. That's it. Negative starts up 24,400 is what we're likely to get started at this morning, but the selling should abate over the course of the day. That's really what we believe in. But of course, the handover globally as well has been not much to write home about just yet. But you've had a whole lot of earnings that the markets would positively react to. Chandan, very quickly, two stocks, Amber and Zomato. How do you read into them? What are the charts indicating on both those counters? Chandan, you're on mute.
Yeah, so looking at these two names, Amber, the major trend is positive, but on last trading session, we have seen a volatile swings in the counter. I believe buy on decline could continue because support could be there. So I believe with support of 56.20, one can look for an upside target towards 6,000 to 61.50 marks in Amber. Talking about Zomato, major trend has turned slightly negative. It can decline, and I believe a decline near 240 may provide a buying opportunity. Somewhere one can buy because already corrected from higher levels. Zomato, we need more corrective move to get for bargain hunting in the counter.
Okay. As the first 8 minutes are settling down, you also keep an eye out for, like we said, Bajaj Finance. You keep an eye out for Amber Enterprises. You keep an eye out for M&M Financial.
Looking bad,
Zomato.
7%.
Yeah, so M&M Financial, relatively a bit of a miss out there relative to the high expectations that were there, and which is why this dip that has come in. Mayuresh, rather Kush, any thoughts here on M&M Financial on the charts?
Well, not really as encouraging. I mean, the numbers obviously have one story to tell, but the stock itself was trading below the 200-day moving average for the last 8-10 odd sessions, and the 290 mark was acting as a resistance. I wouldn't be the first one to jump and buy even at this decline, because the support zone of 265 is taken out, and the next one really comes in at 250. So you might want to hold up on that purchase even on this decline.
Okay, and just keep in mind three stocks before I go to Harsh on Aditya Birla Real Estate. Electra Green Tech, revenues up 70%, net profit expanded. Let's see how that stock is settling up, 4.5% higher. Indus Towers is the other one, strong margin and PAT performance, and Indus Tower 4% higher. GMDC, revenues up 54%, PAT up 71%. Really strong show, that's up 3% as well. We are seeing evidence starkly different from yesterday. Earning beats are getting rewarded. Yesterday was a day of earning misses getting really punished. Okay, Aditya Birla Real Estate pre-sales numbers look very strong. Nomura has come out with a note. Harsh Johnson for that big brokerage call of the morning. Harsh, good morning.
Hi, good morning, Neeraj. Yeah, so extremely strong numbers, of course, as you iterated. What Nomura seems to suggest is Q2 pre-sales came in at 1,400 crore. You saw H1 pre-sales come in roughly 1,700 crore. Now, the guidance from the management is 7,000 to 8,000 crore of pre-sales, FY25 full year. How do they get there? 6,000 crore of pre-sales essentially required in H2, roughly. Nomura believes that's completely doable given the kind of pipeline that Aditya Birla Real Estate has, of course, along with a stronger balance sheet. They also are expecting operational cash flow positivity by end of FY25 and a margin of around 29% on the real estate business. In terms of the pulp and paper business, because that also is some part of the business here, subdued demand is what they're anticipating. Also, rising input cost pressure will kind of put a lid with regard to margin. 7% margin is what they are anticipating on this one. Why are they bullish? They believe long-term visibility in terms of new projects as well as launches. Second, large scale and disciplined in terms of their quality of accepting projects and strong business development. These are some of the reasons why they believe it's a constructive buy. Stock trading at roughly 13 times residential EV to EBITDA, which is slightly higher than Godrej Properties, but very, very constructive, 35% upside on this one.
Right. Thanks for that, Harsh. That's Aditya Birla Real Estate. Stock you want to watch. Nomura's thoughts on that one. There are lots of stocks reacting. While Neeraj, of course, wants to look at the glasses half full, he's telling you all about the counters that are getting rewarded. There are some that are also getting beaten down. So Chennai Petroleum down 10%. Numbers were disappointing. The sector is under some pain. The stock is reacting badly. M&M Finance down 7%, ICICI Pru down 4%, Cochin Shipyard continues its downward journey down 4%. Quick check on Shoppers Stop, they reported numbers as well that disappointed the street. Welspun Corp 2%, numbers weren't too impressive, the stock is going to be seeing some pressure this morning, down about 2%. And also a quick look on how Shoppers Stop is trading in early trade this morning. You have a couple of other ones that will be Shoppers Stop down 7%. So that's kind of painful. But Chandan, yesterday the only bank or one of the few stocks, one of the two stocks that was in positive territory on the Nifty was ICICI Bank. Today, if you have to trade banks, would you trade specific banks, and if yes, which bank are you buying?
Yeah, so already I've given the recommendation on ICICI Bank because they're the only counter which is finding some support at lower levels, and we believe that declines could be bought and major support already placed at 1220 level. So I'll go with ICICI Bank. I'll buy on a small dip with support of 1240 for an upside target towards 1300 to 1320. And apart from ICICI Bank, I think for other banks we need to wait and watch for right level to get an entry.
What about, Chandan, very quickly, what about Ambuja? What did you do with the stock yesterday? Because the news flow was very positive. The stock obviously was trading higher until there was blanket selling in the market. This morning, do you think Ambuja could be a good stock to trade on? Because some of the cement stocks should be getting a little bit of relief is what we'd expect fundamentally at least.
But technically speaking, the stock has been making lower top, lower bottom. However, it has gone to the oversold territory, but not getting any sign of the reversal as of now. So I'll wait for a conditional trade setup. If it moves above 575, then only I'll attempt for bargain hunting or contra trade to go for buy stance in the counter.
Mayuresh, what did you make of the deal, Ambuja acquiring Orient Cement? This is the third in a row. On the valuations, on the pricing, I think long-term structurally it's a great story, but between now and then, what's the view?
I think it would remain constructive because I think the deal has come at a very attractive price at $114 per MT. Obviously, out of the 8.5, 8.1 MT is absolutely operational. What they also get is access to the limestone mines, which probably can cater to further 6 MT in terms of incremental cement demand if they choose to do that. At the same time, the expectations in terms of ramping up the overall synergies as far as their pan-India presence is concerned, and expectations in terms of taking their EBITDA per ton beyond 1,500 odd rupees, I think that can be a plausible presumption to make because the expectation in terms of the industry construct as a whole, a lot of consolidation happening, and therefore pricing should remain constant. Even if input costs go a tad bit higher, they will get passed through because demand remains and would remain extremely strong. So I think it's a win-win for both the players. Ambuja specifically, I think earnings should respond meaningfully with this acquisition in the next few quarters.
Okay. 38 seconds left for the markets to kickstart trade, and just quickly mark some stocks that you should keep on your eye. Remember, this is the profit watch list. Paytm, Bernstein and MK have constructive because of the development. Amber, Q2 results beat on all fronts. Adani Green, good capacity additions and decent numbers. NMDC iron ore price hike. Zomato brokerage is positive as well. So a few stocks that you should keep in mind, as also Indus Towers and Gujarat Fluoro. Keep all of these in mind as the markets start trade. On the negative side, maybe, or not negative really, but may see a bit of a hit. Bajaj Finance and M&M Finance, which has certainly seen a bit of a hit. Here's how the markets are starting off this Wednesday morning. Well, a bit of a downward bias. Banks are flat, but it's actually a flat start. Nifty IT could come up on your screen because IT, the mid-sized companies have given good numbers. No wonder Nifty IT is up about 0.5%. Bring up the mid-cap and the small-cap indices. They were clobbered yesterday. For now, a bit of a relief that portfolios are not getting wonked on open. Let's get the heat map up on the screen and see what the large caps are doing. A lot of red though, very little green. Seems like some heavyweights are doing okay. Bajaj Finance, the commentary about credit costs peaking and the brokerage view is leading the stock to do what it has done, 3% higher. Bajaj Finserv following suit. Tech Mahindra, Apollo Hospitals, Bajaj Auto are amongst the others, and then some strength by large cap IT like Infi and Wipro giving that support. Adani Enterprises up 0.5% as well. The quantum of green increasing slowly. What is not doing well? M&M, another 1.5% lower. Power Grid, iShare, Bharat Electronics. It's not an all-out auto sale, but certainly M&M, iShare and Maruti pull up the list of the losers. HUL ahead of the numbers is in the red as well. Reliance is in the red. But Bajaj Finance is marching away 4% higher now on the commentary around credit costs peaking. Samina, this one is the standout mover on the back of the brokerage calls.
Good to see. In fact, all the three Bajaj Group stocks are looking really good this morning. We'll check out what is happening in the rest of the market. It's subdued. Of the Nifty 500, 0.3% cut is what we already have this morning. The hope is that the selling abates at some stage and you consolidate after the recent fall of 5% we've seen over the last 2 days. Sectorally as well, the picture is not much to talk about. Nifty IT is marginally higher. Metals, after a fall of 3% yesterday, is up about 0.3%. Finance is looking okay. The rest of the universe still looking weak. Real estate continues its fall. So does auto, so does consumer durables, so does everything else from the look of it. A quick check before I go into stock movers. I want to do a check of how the Hyundai IPO is doing this morning. It fell 7% as it launched on the exchanges yesterday. We did think that there would be some buying on that counter as well, or look for retail participants who will be looking to add this to their long-term portfolio. But that didn't happen, and this morning settling is what we have at 1822 on the Hyundai IPO. A whole lot of earnings, a whole lot of reactions on the Nifty 500. Remember, the Nifty 500 is still trading with a cut of 0.3%, but you have a few reactions. Electra Green Tech numbers were very, very solid. The stock has been resilient in the recent fall, is trading with a gain of 5%. Zomato in pre-open was expected to see a gap up, but we did believe that with the aggressive fundraise plan that they've played out, this is not positive shareholders, and hence the counter is seeing a cut of 3.5%. So that's what you have on Electra positive, Zomato negative. Indus Towers, you'd imagine the reaction be far better and bigger on the fact that their numbers were extremely good. Operational performance is worth taking a note of. Approval has come in where Bharti will acquire or increase their stake to 50.005, but the stock trading flat on that. Coforge numbers rolled out this morning much before the markets opened up, and the markets like what they see. The counter is seeing a gain of 6%. GMDC reported good earnings. The stock is up 4%. Supreme Industries, I'm not sure why what is happening. Management commentary was very strong, but the stock is seeing a 5% cut in pre-open trade. This was expected to see a big gap up, but contrary to a big gap up, it's got a big gap down from what we are looking at. Chennai Petroleum reported numbers, huge disappointment. The numbers were weak, expectations are running low, but the counter still gets beaten down 10% is what we have. M&M Financial reported numbers below street expectation, counter is down 6%. ICICI Prudential, same story, numbers weren't too impressive, the counter sees a flat reaction. Paytm, they've got an approval to go out and acquire new UPI customers, on back of which the stock sees a big gain of 4%. I'm going to do a quick check on Gujarat Fluoro. Neeraj just highlighted how this deal where they managed to get some funds or do a fundraising plans for their EV vertical should be viewed as a positive. I don't know why the market is not seeing that through. It's down 5% in early trade. RITES has won an order of 500 odd crores. The stock is not responding to that. A quick check on RailTel. Order win, stock is marginally higher. Sonata Software signed a multi-year AI deal, on back of which you're getting a marginally higher reaction this morning, 1% higher. Neeraj, as much as I'd like to believe that we are rewarding good news, we're not rewarding all the good news we're getting. That's my limited point here. I know the Bajaj group is looking good, but look at the broader markets. I mean, look at a Gujarat Fluoro case in point. Look at a RailTel. These are stocks that respond very sharply to any sort of positive news flow, but that's not happening yet.
I wonder if it's a sell on news for Gujarat Fluoro, because the news is constructive, Samina. But yeah, maybe you're right. And important to notice, it's not a one-way street. Shouldn't be as well. The texture of the market very different. But let's get in opening thoughts. Chandan, before we thank you, what is the one thing you're watching out for? If a bounce comes in, is it a dead cat bounce which you sell into, or you will see the texture and then decide?
So I think I need to see the texture, because the index is continuously making lower top, lower bottom. I'll closely watch 24,600 zone. If market manages to move above the same, then I'll change the stance. But yes, selective IT and auto will be the name where I can go for bargain buying. Even counter like Persistent System, Coforge, or name like ICICI Bank, where I'm closely watching. Or Dixon is one name if market has to move, this stock will give first signal because overall having the strength. So this is what I need to play for the day.
Chandan, I know we talked about Amber just before markets open. The stock is up 8%. And Max Financial, I think the street has liked what they've seen with their earnings. The stock is up 6%. Also, interestingly, 197 started off flat, but now up 6%. So 3 stocks for you. Kush, you want to comment on that one actually? Intraday trades on any of these because they are picking up steam as we in the last 5-6 minutes itself.
So I think Amber is one stock that you can still look at. There has been a quick sharp rebound on some of these names, but around that 6,200 mark there is some sort of resistance that comes in. So if you do have it, not a bad idea to book partially and then hold the rest for targets of 6,400. So Amber is perhaps one stock that you want to consider, from a near to a medium term perspective as well.
Chandan, you want to give us a quick update on Amber because you did talk about it before we went to market opening. And just to add to that list, Canfin Homes, good number, stock is up 4%. NMDC and GMDC both are looking good as we see it. Any trading opportunity here, Chandan?
Yeah, positive on the Amber. As I was looking for target to 6,200 already, it rallied well. I believe further momentum could continue. One can keep the support near 59.50 and this time it can head to 6,500 marks. Talking about GMDC, NMDC, buying interest is visible after the weakness of last couple of days. I'll go with buying of NMDC with support of 216. It can head to 234 kind of level.
Right. Well, that's the view on GMDC and NMDC. Anything else, Chandan, that you've spotted in the first 5 minutes that's looking constructive to you?
Yeah, I mentioned that I'll focus on selective IT name, whether I talk about the Coforge, Persistent System or Dixon. I believe Nifty IT will be the first to get the stability. Dixon I can talk about. One can buy with support of 14,900 and Dixon has all potential to rally towards 15,600 to 16,000 to head towards the new lifetime high territory.
Okay. Sorry. So Coforge, Dixon Tech, he's constructive there. The numbers are expected to be solid for Dixon. Remember that. And Persistent I should bring up as well because that came out with a very good set of numbers too. Persistent 5% higher, expensive stock up 5%. Mayuresh Joshi, Coforge, Persistent, showing that in a sector which is clouded and if valuations are expensive, but if you're delivering numbers, the street is rewarding. The question is, would you buy them at these levels or are they very expensive now? Coforge and Persistent.
So Neeraj, obviously I think from a valuation perspective, they are expensive at this juncture. Right? But again, I think if you probably look at the construct, there is a very interesting slide that I found in Emphasis presentation. They're saying that tech is disrupting tech. And therefore, I think all our IT outsourcing companies are coming out with innovative solutions when it probably comes to cloud computing, AI, generative AI. And therefore, I think the kind of tech solutions that these guys are coming out with, both in terms of products as well as platforms, are going to be game changers for a lot of companies and industries across the globe. And therefore, I think the entire take that probably comes through when you read through the management calls and management transcripts as well, is that there is sufficient amount of headroom in terms of order wins from respective sectors. These orders will come at a decent price, which means pricing should not be an issue. With more orders coming their way and all these companies executing well, the earnings trajectory should probably be on a very, very steady footing in terms of both constant currency and dollar revenue growth with very, very stable margins as well. Which brings us to the point that expensive can become more expensive as earnings keep on getting delivered by these companies. A little bit of a catch-22 situation here. I think the valuation is expensive, late-stage basis as we see it at markets with India. But anybody holding these stocks should continue holding. As a very clear disclaimer, Neeraj, Persistent, Coforge, Emphasis is something that we continue holding in our portfolio.
Kush, just before we went into market opening, you wanted to share with us a little bit of a write-up on the Nifty and Bank Nifty that you put together. You want to tell us a little bit more about it and where do you see this trend? Because this is a tough market. I think the number of traders making money, anyway, the ratio was fairly low as compared to the regulator. I don't even want to know what it looks like right now.
No, actually the whole thought stemmed from something that Neeraj mentioned yesterday during the closing show, which is the social media buzzes that, why aren't there as many short calls, at least on the Nifty, right? I mean, stocks is a different story. I think the reason more than tactical or technical is actually more behavioral, which is the recency bias. For the last 4 years, if you see, the money has not really been made on the short side. Even if we had dips, they were swift, short-lived, and then the recoveries were equally sharp. So, giving a short call on Nifty became a bit of a tricky situation, and hence, most of the calls were either on the long side or wait and watch kind of a setup. But clubbed with that, the Nifty RSI, and if you recall, we've spoken about this a few times, which is the Nifty monthly RSI was near 83, which is close to the all-time high, seriously overbought territories, and now we are seeing a bit of a dip, in that, which is close to 72 levels. The support comes in at 67, which means that there is perhaps some more downside left in the markets. Now, while there is most certainly pain in the portfolios, I think a lot of people expected this and are perhaps even considering this as healthy. So it's not a bad idea to start nibbling into stocks and sectors. Maybe start with financials and select chemical names where you were waiting for that dip to come in. And look, you will never perhaps be able to get the bottom of the market or the bottom prices of the stocks. But when you are seeing this dip and the index off 7% from its highs, is perhaps a good time to start entering into some of these names. And the limited point is that the downturn may not be over yet, but perhaps we are close to a point where you could start nibbling into some of these names. And while there is some recovery on the cards in the name of short covering, stocks will perhaps start to consolidate from here on rather than see a much bigger dent.
Consolidate instead of a dent. It may not help you make money, though, viewers, remember that. And the key is, but if it consolidates, are there pockets to bet on? So Mayuresh spoke about Swaraj Engines as one of the stocks that he's keeping on his radar to buy. So watch out for that one. Mayuresh, maybe at a short time then, but for the viewers who tuned in right now, maybe it's a repeat, but why Swaraj Engines? And are you nibbling current levels, or are you biding your time because of the market situation?
So we are biding our time. So we are keeping that on our watch list. And the rationale behind why Swaraj Engines, I think expectations of tractor sales are expected to be pretty decent as we head into not just the next few quarters, in fact, the next few couple of years as well. The expectations in terms of the portfolio that they've got is between 22 horsepower to 65 horsepower. And typically what you've seen in the Indian ecosystem is that anything below 50 horsepower works wonderfully well because of the land sizes that we've got. A large part of our farmer community has land sizes of less than a hectare, which means less than 50 horsepower tractors are a very, very lucrative choice. Second element, obviously, is the volumes that they've probably done. They've done decent volumes in the second quarter. They've done decent volumes in the first half at 88,000 odd units compared to 78,000 units same period last year. And that brings us to a fair bit of an estimate that as the second half unfolds, volume growth will remain extremely strong. What they've reported as an annualized EPS in FY24 at around 113, 115 odd rupees. They've already done 75, 80 odd rupees for the first half. So even if they replicate this performance, the earnings growth, what we map in Market India through our EPS rating parameters, should be significantly higher, and that gives a good amount of estimates that the next year should also probably unfold to be a little bit better when it probably comes to this part of the segment. So I think earnings trajectory, balance sheet growth, expectations in terms of return ratios improving. I think all these parameters might actually play out in the case of Swaraj.
News is the Nifty has turned positive, 24,500. That would be a little bit of a relief for traders on the street that probably initiated fresh longs at closing yesterday. So 42 points higher is what we have. Okay, now it's gone back below 24,500, but still attempting to do a little bit of a recovery. A quick check on how the VIX is doing. There was a spike on the VIX yesterday as well. This morning, VIX continues to rise, 2.8% higher on the India VIX. A check on the broader market, mid-cap and small-cap index too. I would imagine the recovery should be coming there too because they did lead the fall in yesterday's trade. Mid and small trading flat. The Nifty still doing slightly better than the broader markets in trade. The breadth of the markets improved. There are a few stocks that continue to trade under pressure on the Nifty 50, but I think that the Bajaj trio is doing a good job of keeping the Nifty up and about. Bajaj Finance up 3%, Finserv up 2%, Bajaj Auto up 1.5%, and Adani Enterprise carrying its weight. Trias, the second largest gain on the Nifty 50, up about 1.5%. Metal counters aren't doing too badly. Some of your other names in the banking space are picking up some interest. On the sell side, Shriram Finance, M&M, ONGC, Asian Paints, HUL is looking a little soft ahead of numbers. Tech is taking a little bit of a breather. At least that's what we have this morning. But all in all, as expected, there is some sort of a semblance coming into play as we see it now. Whether this holds or whether this still is a sell, any sort of uptake, and if that is the ideology that traders are working with, then I don't think this these gains also may sustain through the course of the day. But from what we see, I don't think it's looking too bad just yet. Relative. It's all relative right now, and we're going with that.
Yeah, not looking bad at all. GMDC is up 5% as well. But a quick view here, Mayuresh. IFL Securities, and we'll make this quick. IFL Securities is down 3.5%. This is my last question, really. But capital market plays have delivered a very solid quarter. Mayuresh, quick 60 seconds. Are you a buyer into capital market companies?
So asset management, yes, on declines, Neeraj, because I think the show has been solid. The expectations largely, at least being built in and baked in right now, are that SIPs will continue flowing in to these asset management players. And as India evolves over the next few years, what we've probably seen in terms of these asset managers, if you go through the presentations of most of the wealth managers as well, Anandarati Wealth, you've got IFL Wealth as well, which is 360 WAM. I think if you look at the pyramid and the trajectory in terms of the Indian households that can actually move up the value chain in terms of discretionary incomes over the next few years, I think there is a huge scope in terms of professional wealth managers actually doing well over the next few years. So yeah, I think asset management as a space is something that we continue.
Both of you, thank you so much for taking the time out and being with us. Really appreciate your time this morning. Okay, so that's the view from our experts for the morning. But small caps under a bit of a cloud. Today might be a respite. Is this the end of the pain? Is it possible to even say that? Manish Sontalia, Chief Investment Officer at MK Investment Managers, joins us right now on the show. And Manish has attended a clutch of investor conferences in the recent past. He's spoken to a clutch of companies which are mid-sized and small-sized. And Manish, my question to you is this the dip that somebody like you might have been waiting to get stocks at better prices? Or can this dip get better for somebody who wants to buy?
So Neeraj, 7% correction on the Nifty has created a lot of heartburn, but as we all know, markets don't just move one way. They go through ups and downs. I think, again, like many other dips, this is another buy on dips sort of a situation. Because I genuinely don't believe that if India is to grow at 7% in FY25 and 6.5% in FY26, that is what the IMF reiterated. And we are actually looking at earnings, of around 1100 in FY25 and around 1250 in FY26. How can markets really peak at 1920p? I mean, that's not done. What is the problem? The problem is that a lot of FIs have taken out a lot of money. There's some sort of a liquidity squeeze because bunching up of IPOs. Yesterday was one such IPO which actually listed at a discount. You'll have a few others like this. A lot of QIPs not getting through. A lot of IPOs coming at a discount. Some sort of a madness in this whole liquidity scramble where everybody is just looking to shore up some of the capital because the markets have been very euphoric. I think some cooling down on this either the FI front in terms of selling or the IPOs getting pushed out will again bring back sanity in the market. I think there's a lot of value in the markets, but as we all say, that India's market has become very broad. Now we have 57 sectors to deal with. We can't just say that Indian markets are overvalued and everything is overvalued, or Indian markets are undervalued and everything is undervalued. There'll be a lot of rotation that will happen, but particularly in mid and small caps, it's not a sectoral call. It is about the individual companies. But Yeah, I would believe that this dip again should be bought into. India has a long way to go in terms of market cap creation. Many years out, in the medium to long term, there's still money to be made.
Hi, it's also Samina joining in. Completely agree. I mean, I think we're all in a consensus view where the long-term story is that India is in a structural bull run. So any opportunity or weakness should be bought into. But what I want to understand from you is from early this year, we've been complaining about how FIs have been dumping India. Now, of course, up until now, the concern was valuations. Now we're justifying it, saying that China has become the giant we need to again start looking out for. But retail participation has supported the market at every dip. Even today, DIs are buying. What do you think is going on? Because if DIs are continuing to buy, FIs have always sold, then where is this pressure coming from? And if DIs are selling, what are they doing with the cash is what I want to know, because most were sitting on piles of some dry powder to allocate when the opportunity arises. So I'm just confused of what is going on operationally in this market.
No, so a few things out here. Obviously, FIs have been selling for quite some time, and new money into Indian markets, roughly speaking, closer to around 10,000 crores of continued SIP plus lump sum new money coming into the Indian markets. Every month, you get a fresh inflow of 25,000 odd crores. Mutual funds have been sitting on closer to 2 lakh crores of cash. I mean, that's perfectly fine, and Indian markets were going good. Liquidity was tight. That was the stance maintained by the Central Bank of India, which is basically RBI. But now liquidity has also started easing at the margin. What is suddenly changed is this $10 billion worth of IPOs. And it's not to say that this will not get normalized, but suddenly everything is coming together. First of all, we are in the middle of the earnings season. Numbers that have come out so far have not been that great. Secondly, 1 lakh crores plus of selling that has already been done by the FIs in this month. So 17, 18 days of this month, there's a lot of selling. Plus, you had mega issues that were coming out with IPOs and still coming out this month. You had a Hyundai, you had a Wari, you have Afcons, and a plethora of them lined up, totaling $10 billion. On top of that, you have announcements of QIP by Zomato, XYZ. So I think this is the main problem. It is not about retail investors not looking to buy or retail investors actually panicking. None of that. It's just that too much of outflows have got bunched up together at the same point in time, and that is what is causing a bit of a flutter, and given that rate cuts in the US is also not a given. We all believe that emerging markets will see, increased bouts of flows because China has a problem, so India will be a beneficiary, and because rate cuts will continue in the US, India will stand to gain in terms of flows, but then none of that. Economic data in the US is very, very strong. So really don't know whether this 50 basis point cut out there is going to get followed with another rate cut soon. I mean, we can't assume that. And in India, obviously, rate cuts will happen only in the first quarter of calendar 25, nothing before that. So all in all, that's the major problem. I don't see the medium-term picture getting blurred at all. And, the whole point is that if real GDP growth is between 6.5%, 7%, Prime Minister talks out at your summit in Delhi saying that, investors will make money in the medium to long term. I mean, let's believe that. And, we all have our own sectoral picks and bottom-up stock picking, but that's about it. I don't really think there's any case of major selling or panic in the markets just yet. It is just an ordinary correction within the overall scheme of things. Don't really see how another 5% or more can fall from these levels. We have already fallen 7%. So on the headline numbers, maybe we could fall another 3-4%. That's a given, but nothing more than that is what I'm.
And you're right. It really doesn't matter if you're a long-term investor. Nobody's going to remember this 5% fall or the level they entered the market at when they look back, right? But we've seen quite a bit of the earnings season, and it's been a mixed bag so far. This morning, of course, Neeraj and me were discussing how the commentary of a lot of the managements post-closing yesterday seemed positive. Any sector, any stock or any management that has stood out for you where you would be adding incremental capital to because you're genuinely impressed by their earnings and you're believing in the promise that things will get better going ahead into the second half of this year?
So, standout sectoral results coming out from capital market intermediaries. I mean, it's stunning. And I think once you have the numbers come out from CDSL and BSC and all, that would be an icing on the cake. So I think capital market platform companies, wealth management platform is AMCs, broking entities, so on and so forth, they will actually see a massive re-rating. This is one more additional sector to look at. Purely from a wealth creation point of view, it's up for re-rating. I mean, this is one which I can sense is how this whole sector is performing, whatever numbers we have seen so far. I think there are two other platforms that came out with numbers. Again, Zomato was a stunner in terms of positives, and so was the case of Paytm. Again, a lot of incremental positives to take away in both these numbers. So as I've been alluding to in the past also, platform companies are going to be the real wealth creators when it comes to the next 5 years or so in India's context. So that's one. I think technology companies have been a mixed bag. You can't really paint a whole lot of positives out here. A book to bill still remains, but execution is still a challenge. Banking, for the first time, we are actually seeing some PSU banks report NPAs in corporate accounts. We always believe that retail NPA would have seen the trough of the benign credit cycle, but corporate accounts seeing increased NPAs, and RBI has been talking about cautiousness to be maintained on the retail side, MFI, NBFC. So it's a mixed bag of the financials, lending institutions, not so great, and again a mixed bag for your technology companies. But otherwise, it has been a soft quarter. You have a Supreme, etc., which reported numbers, not so great numbers that we have seen this result season. So,
Manish, just one question. We were talking to Supreme yesterday, and con call of Kajaria, a couple of other companies. All of them seem to suggest that elections Q1, excess rainfall Q2, hampered first half. Second half, significantly better. In fact, Supreme went on to say that they will grow 41% in H2 over H1, which is the highest in the last 3 years that they've grown. Of course, a low base of H1. My question is, are the negatives in the price, or do you believe the valuations are anyways too stretched, and therefore these corrective moves don't make this stock, attractive enough?
No, so you're right that there were elections and there was rainfall, and government's budgetary allocation didn't get spent through. The interim budget of last year didn't get spent through, and now that the elections are over, you have a new budget. Now the roadmap is very clear, and expectations are that spending in the second half is going to be much better than what the spending had been in the first half. That's a given. But I think given the state of uncertainties regarding delivery of numbers, and of course, all of this was well known, and when markets went into expectations in terms of execution from building material companies and pipe companies, they already had some muted expectations. But if the numbers have not come out, even on muted expectation, that has come out as a disappointment. I think, again, the benefit of doubt will go to the companies and the managements who allude to the fact that second half is going to be much better. But I think seeing is believing. Markets will see the numbers and then maybe re-rate the companies. Of course, just an anecdote in this regard was that rural economy is going to turn and is looking much better, but we believe that nothing of that is basically coming through from the rural front as well. Some of the numbers that have come out from Nestle's or even today's HUL don't really paint a picture where rural seems to be coming back, and on top of that you have a very inflationary environment, a reasonably good inflation sort of a situation where margins may be under pressure. So I think consumer again and capital growth, particularly on the government spending side, would be sort of a disappointment in the first half, all well known. And though the benefit of management, but I think markets would only see the numbers in the second half and then maybe take a call in terms of review.
Right, Manish, always great talking to you. We have a good festive few weeks ahead, and we'll hopefully connect back with you in November when things settle a little bit from here on. But good seeing you. Have a good week. With that, thank you. We keep the focus on earnings. Responsive Industries reported numbers which are largely ahead of what the street was expecting. Actually, the growth that the company has seen has been pretty healthy, and the outlook is what we'd want to get a sense of. The stock is trading flat, but Atit Agarwal, promoter of Responsive Industries, now joins in. Atit, thank you very much for joining us this morning. This is an interesting company. Recently, of course, there were a couple of brokerages as well that have been very constructive on your growth going ahead. And this, of course, is backed by the fact that India's infrastructure plans seem to be on point for now. But talk to me about your earnings. Can you give me a detailed breakdown of your revenue by product line, geography, or customer segment?
So basically, the company has done very well, as you can see in the numbers in the quarter-on-quarter, year-on-year, and as well as the first half H1 FY25. The company focuses on key segments such as resilient sheet vinyl, artificial leather, SPC, LVP floors, waterproofing membranes, and the synthetic rope segments. Primarily, the resilient sheet vinyl is used in segments such as the Indian Railways, predominantly the Vande Bharat trains and other such segments. Also, we are suppliers to companies like Electra Green Tech and other companies for the bus floors. The artificial leather is also a segment that goes into these railways and bus bodybuilders. Also, the key segment that has been also a growth driver for the company has been the SPC and the LVP floors, which has shown a great market in the US, where basically the China plus one requirement has been looked at. And the customers in US have actually started looking at companies other than China for this requirement. A key point being that independent reports mention that the market for this product is about $7.5 billion in the US, and predominantly was supplied by China and Thailand and Vietnam. So the potential. Sorry.
Yes, Atit, just before we talk about the global potential, I think there's some merit in you explaining to your investors, us and our viewers, what is this PVC membrane? I understand that it goes into tunnel construction, and you have two very high-profile projects, one in Sikkim and one in Rishikesh. You want to tell me the size of these two projects? What is the contribution to the top line? And I also believe you're entering the vinyl business on the B2C side. Again, I'm a little perplexed about the various things you do, and it's obviously a big gamut of offering that your company has. So tell me, how much does PVC membrane contribute? What do these two big lines do for your top line and the new business vertical that you've launched?
So this is one of the margin accretive products that we have launched, which is called the waterproofing membrane. This is predominantly used in tunnel waterproofing, and the projects that you mentioned should account over the next couple of years to the tune of about 50 to 75 crores to the top line. And like you mentioned that the potential is pretty huge in these segments. Also, when you mention about the B2C, what is the SPC LVP floors that we make is what we are looking at getting into, because predominantly the company has been a B2B company. And the idea is over the next 3 years to make it more towards B2C and have these products in the Indian market and launch them from B2C segments. These predominantly go in houses and retail stores. We are focusing on affordable housing, tier 2, tier 3 cities, and rental homes. The key issue being that the floors in these places you cannot replace, especially in a rental home, whereas you can replace anything else. And the idea is that these are click and lock flooring, which goes above the existing floors, and you can keep it in place till you're in the house, and then you can remove it and take it with you if you decide to change homes.
Got it.
The idea of the company, finishing on that point, was that the idea of the company is to set up about 100 stores between tier 1, tier 2, tier 3 cities over the next 3 years under the COCO and the 4-4 format.
Okay. Are you the market leader currently, Atit? Good morning. Or what is your pecking order in terms of the hero product that you have?
Good morning, Neeraj. Yes, we would like to say we are the market leaders.
Okay.
We are a complete vinyl flooring company where we make products from the beginning till the end and all other aspects included in the product.
Okay, fair call. Now, so I heard you mention that you want to expand now on the B2C side in India predominantly. If I'm not wrong, your export domestic mix was 60-40, 60% exports, 40% domestic at the end of FY24 at least, right? So if this happens, does it mean that your presence in the domestic market goes up over the course of the next 3 years? Part one of the question is that. Part two is that a more margin accretive business? You're currently at what, 20 odd %? Does it enhance margins for you?
So predominantly the export domestic ratio should remain same going forward because obviously the global market in this segment is much bigger. The idea is to create category creation in this segment going forward in the next 3 years. Margins are pretty good in this segment. We are targeting at about EBITDA level of about 20 to 25% in this segment. Globally, the market margins in this is around 25 to 30%.
What's the guidance that you're giving then? Because you're talking about very strong growth domestically, but you're saying you will maintain the mix, which means you expect the same kind of growth on the export side as well, right? So what is the guidance that you're giving? Is there an aspirational target or a realistic target for not just FY25, maybe the next 3 years?
So if you've seen historically, the company has grown at a CAGR of 20-25% over the last 2 years. The idea is to maintain that growth on the top line and on the bottom line as well over the next 3 years. The idea is in the next 5 years to see if we can double our top line.
Say double your business?
Yes, in the next 5 years.
But sorry, just one very quick follow-up there. That would mean that you will not grow at, you will probably grow at 15% instead of the 25%.
No, so the idea is that we are targeting 5 years, but the idea is to do it quicker. The order books are strong. The business looks good. The government push for the domestic markets is looking good. The government's push towards Vande Bharat and the green technology for converting the buses is also looking good. So presuming all this comes online, in the next 3 to 5 years, we should double our top line and the bottom line should maintain with current margins.
Right. Atit, you did mention that the order book is looking quite healthy. You want to tell us what your order book stands at? And you said the government pipeline also is healthy. What percentage of your order book is coming from governments and what does the total order book stand at? And what is the visibility of that?
So the current order book stands at about 500 crores and the government contributes to about 15 to 20% of that. The order book is looking good in the idea that we tend to keep a 3 to 6 month order book in it.
Also, what I want to ask you is, what is, of course, your plans are ambitious and hopefully it all placed to plan. You want to tell me where capacity utilization is at? Because if you're growing at that pace, would you need to add more capacity? Where do you stand?
So current capacity utilization is at about 55%. So we are fairly placed in the current situation. Capex requirement does not seem very required right now going forward for the next few years.
Okay, Atit, you mentioned that you remain debt-free and the intention is to remain debt-free. Would you need to raise any capital in the next 6 to 12 months to fund any of your capacity expansion or acquisition plans?
Nothing as of right now. We are fairly placed. The books look good. The capital requirement, what we require is already there through internal accruals. So no plans as of right now to raise any debt or any of that.
No debt, no capital fundraise as well. You will fund your entire expansion as things stand via internal accruals and cash flows.
Absolutely.
Okay. Including the 100 stores that you will set up, whether it's company owned or franchisee owned.
But Neeraj, that's over the next 3 years. So that's not something that's coming up. Whatever we set up.
But that expansion plan, sorry to cut you because paucity of time, but that expansion time you will fund via debt or would you fund via equity fundraise? Just trying to understand that.
It depends. The idea is that in the next 3 years, depending how the plans go and how many FOFO stores come in and how many COCO stores come in, because like I mentioned, it's a 70-30 ratio. So we will see going forward. The capital outlay for that will not be very high.
Not be very high. Okay. Well, Atit, good plans. Wishing you all the best for that and more. Thanks so much for speaking to us today.
Thank you so much. Have a great day.
Thank you. You too. That's Responsive Industries. Fairly confident about numbers. Grown at 25%. But when asked about why is it that only doubling in the next 5 years, he was candid enough to say it could happen earlier, but they're just playing it safe. Understandable in a scenario like this.
No, and I think the numbers are phenomenal. It's a debt-free company. They've got capacity that they're sitting on. So lots of other operationally good matrices as well that we should be looking at. Our government orders are coming in quite significantly. Their domestic order book is big. So all in all, I think Responsive looks good. I think a couple of weeks ago there was also a smaller brokerage, but a Ventura actually upped their target price by 50%. So that's Responsive for you. But a quick check on the markets. It's all looking green for a change, at least from the ticker that I'm seeing on the bottom. Nifty 50 is marginally higher this morning. We've reclaimed 24,500 for now. We'll be watching that closely. Bank Nifty also not doing too badly. Sectorally, most sectors are trading higher, barring maybe a few here and there. And the reaction to earnings is also largely positive, as we'd expected. With that, we're completely out of time. Thanks for watching. But up next, Neeraj will be in conversation with the market guest on Talking Point. Parag Thakkar up next.
In a world of shifting power dynamics, India stands tall as a global force. Join us at the NDTV World Summit 2024, where Prime Minister Narendra Modi will unveil his transformative vision for the India century. Be a part of a summit of thought leaders and visionaries, shaping the world's future. NDTV World Summit, October 21st and 22nd on the NDTV network.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
important voice who's been constructive on financials. Parag Thakkar of Santulan AIF joins in right now on the show. Parag, good having you. Thanks so much for taking the time out. How have you viewed the results of some of the financials that have come out? I want to start off with, I don't know if you, look at it individually. And by the way, none of these are recommendations from you, Parag. But trying to understand, let's start off with Bajaj Finance because that's the main big boy of the day today. And then we'll move on to some of the others. What did you think of the numbers? What did you think of the commentary more importantly?
So, first of all, as you have rightly said, this just a disclaimer from my side that these are my personal views and one has to take buy call or based on advice of financial advisors. I'm not recommending any stocks here. One overarching point in this results will be asset quality. I think that is where market was not so much focused in last 2 to 3 years when everybody was focused on growth and margins. Asset quality will be the main driver now because since we have started seeing some stress in some unsecured segments as highlighted by RBI very rightly earlier. So I would say that Bajaj Finance, coming back to Bajaj Finance specifically, I think market was anticipating a higher I would say NPAs, the higher credit cost guidance, and it came at a lower end of the credit cost guidance, and the growth rate has remained same in terms of guidance, and the stock was brutally sold and completely oversold, I would say. So for a quality franchise like Bajaj Finance, when you report a number which is better than what market anticipated, the stock is likely to react positively. And same, just to extend this thing, we saw results of Axis Bank, HDFC Bank also. Gradually, everybody will start seeing asset quality is a most important thing. It is again coming back into full action. And that is where nobody can beat HDFC Bank because the gross slippage ratio are at 1.2, 1.3% versus 1.8 to 2% for many other large banks also. So on growth, definitely ICICI Bank has more levers because their CD ratios are more comfortable. And on asset quality side, definitely HDFC Bank is undoubtedly the best. So I would say that, and I'm constructive on financials, as you rightly said, because see, their multiples are 35% cheaper than overall Nifty. So whatever earning disappointments or slow growth is priced in the stocks, and now that very rightly RBI has changed the stance from withdrawal of accommodation to neutral, so there is a surplus liquidity. So I would say the deposit problem is gradually easing, and which is very good for banks because that was a big issue up till now. So any bank which is lending prudently, which is a strong deposit franchise, ideally HDFC Bank or ICICI Bank kind of names, should do really well. And even in mid-cap and small-cap space, I would like to draw your attention that last time when we spoke, we did not speak too much about mid-caps and small-caps. But after yesterday's carnage, there are many mid-caps and small-caps which are also emerging as a value buys. Just to name a few better.
Parag, already, did you find the commentary of some of these mid-caps? Sorry, before you get into the names, did you find the commentary of some of these companies constructive, or is it that the valuations have become reasonable?
I feel valuations have become attractive because I'll tell you, from election standpoint, after election, the government spending is slow, right? Festive season is yet to see its. It is halfway through. So and the vibes which we are getting from commentaries of various two-wheeler companies or car companies is not that great. So I would say that this is today you have to buy financials because they are undervalued, not because the commentaries are going to be great. Because definitely, as I said, and I'm expecting this from many banks which are going to report numbers. Like ICICI Bank and all, that more and more focus will turn towards asset quality. So I would say that on one hand, for example, just to give you, I was naming some housing finance companies like LIC Housing or PNB Housing and those kind of names. You see the P multiples. LIC housing trades at 7 P trailing. Now imagine a situation. They are lending to home loan buyers who are salaried. 80% of them are salaried. The tenure of the loan is 7 years, 8 years, right? So your market cap which you are paying today is going to come back to you in 7 years, even if they shut down the business. Just that you have to just take a call that the housing loan borrowers don't default. And I don't think in India, macro-wise or micro-wise, it is such a bad situation that somebody will default on their house meaningfully, I would say. So PNB housing also, there is a 17-18% growth. PE is just 10. So I would say that this is a valuation play. And remember, Viraj, in my view, you can make money in stocks from long-term perspective only when things are a little bit shaky on the ground. And so the valuations are reflecting that pessimism, which is coming in short term.
Parag, the question that comes to mind is the valuations, let's say on HDFC Bank, right, have been very constructive for a while. Yeah. So people who've bought in HDFC Bank on valuations have not really made enough money or reasonable money relative to other sectors. So why now is the question.
Yeah, so that is why now is a very good question. See, when the merger happened, right? The merger happened with the logic that 4.5 lakh crore mortgage book will come, which will have a stable 8-year maturity. So it will give them good stability in terms of earnings and the loan book AUM growth. The point which happened after the merger, like liquidity got tightened significantly as US increased interest rates by 5%. In India, there was a rate hike of 2.5%. So suddenly the liquidity dried up. And when they needed it the most, right, CD ratio went up to 110%. Now they are quickly bringing it fast back to below 100. Right now they are at exactly just close to 100%. And the management endeavor is to bring down that as fast as possible so that they can again come back to growth phase. Right. So what I think, in my view, the latest quarter result, where they raised 1,20,000 crore deposits, brought CD ratio down, asset quality remained stable, and deposits grew with good asset quality. And combined with that, valuations, I'll tell you, very simply put, FY27 EPS, in my view, is around 115. If you just give 15 times to it and add 250 to 300 rupees subsidiary value, it comes to 2,000 rupees. So from stock price perspective, also it offers good value as it is a large cap. Plus, management has done excellent steps in last 6 months. See, these are and I love this genuine businesses which underperform, right? So because underlying value of the business keeps increasing while market is just focused on 2-3 parameters and they just don't take care of it, right? Because market wants excitement, market wants growth. Now here in the best thing in favor of HDFC Bank is that people know that growth is going to be slow because they want to bring the CD ratio down. So if they do execute very well as they did in last quarter on deposits, asset quality and NIMs, I think we have a long way to go.
Okay. So you are buying financials despite asset quality not necessary, or despite commentary not being as solid because valuations are favorable. So that is one part of the bucket. You mentioned some thoughts around what you may find favorable, and viewers have to do their own due diligence. Beyond financials, Parag, I was looking at the results yesterday of a Kajaria Ceramics, of a Supreme Industries, of a Responsive Industries this morning. So building material related pockets, their first half has been very disappointing, but they are all guiding to a very strong second half. All of them are real estate ancillaries. The cycle still seems to be decent, even if it may be coming off slightly at the margin. How constructive or not constructive are you on some of the building material companies which are guiding to a strong second half?
I would say, because I don't track building material space very closely. Of course, Supreme Industries is a fantastic company, super franchise, 30% ROC track record from last 25 years. And I have huge respect for that company. The only thing is that this space, I would say that this is one of the space which might hold on, because we have seen the last 2-3 years the real estate sales have picked up, and now people will be shifting and people will be doing interiors, and so building space is a space which can pick up, which can show some resilience and some momentum. Festive season is also going on, so I think. But the problem, Neeraj, with most of the sectors today, apart from financials as we speak, is valuations, right? So in many cases, which I would not like to name, in many cases the earnings are at bottom by valuation, while the stock price is at all-time high. So, and that is one of the reason I keep coming on to financials, where you feel, the stocks, just to say, as I told you, LIC Housing trailing P is 7, Federal Bank P is 10, 11. And now with Mr. Manian kind of person coming in, and of course, Shyam has run it beautifully, I would say very conservatively, strong deposit franchise, and very conservative underwriting, I would say. But the only problem was ROI was not expanding, which I would say that in Mr. Manian's term, in the next 3 to 4 years, the ROIs will expand. So I'm saying that the problem with the market was, and of course it has corrected a bit now, which is good. But I would say that most of the market was running on narrative. And that is why when Nifty hit 26,000, we raised a huge amount of cash in the portfolio, which we are deploying now. Because we felt that everything was running ahead of its time. But now that after yesterday's carnage, I am seeing a lot of value emerging in the market. But still, see, I'll tell you, in a financial company, it's a leverage company, so you give lower multiple, that I agree. Because it's a leverage business, and it's a just 1 or 2 or 3% ROI business. But the point is that there you are getting 15% growth for PE, which is less than 15, like in the case of, say, HDFC Bank or ICICI Bank. And these are very good names, right? So otherwise, in any other sector, if you go, for a 15% growth, you are paying 35, 40, 50 times. Which does not actually fit into my framework.
Got it. Okay. So Parag, it seems that you are largely focusing on financials because there is a good quality at a reasonable valuation opportunity available. Okay. Is there any other pocket where you find the same construct?
So I would say that IT, as we discussed last time, TCS, Wipro kind of stocks.
No, but mid-sized IT, Parag?
So banking and IT are majority of the sectors. There can be some stocks here or there in other sectors.
Parag, sorry. What I meant to ask was when I speak to persistent systems today, when you hear Coforge and their commentary and the growth, they are delivering growth already, even if they are expensive. Would you bet on that because they are delivering consistently, or would you want to bet on valuations, even if growth may or may not turn very favorable at the time horizon that you want in large cap IT?
So all credit goes to, I would say, Persistent after Mr. Kalra has come and Coforge after the CEO has come. They have turned around the companies beautifully. Full marks to them. And the results were also fantastic. I saw a 5% constant currency growth in such environment. And now when the Fed is at a tipping point and Fed is ready to turn dovish, they already started doing a 50 basis rate cut to save, or I would say to protect US economic growth and job market. So I would say that IT is a fantastic space. They see, on one hand, financials is a leveraged space. On the other hand, IT generates huge amount of free cash flows and so dividend yield and all that. So I would say that I have stuck to TCS, Wipro kind of names. But 100% I will agree with you that Persistent and Coforge have lived up to their expectation. In fact, they have exceeded their expectations. The only problem with me is that I cannot buy a 35, 40 kind of P multiples.
Got it.
But there is no taking away from the fact that these companies have done beautifully.
Sure. Okay. Parag, I have one last question. Coming back to financials, but non-lending financials, and I want to specifically focus on capital marketplace. Almost everybody who's been in the market and has seen for so many years now says that the next 5, 7, 10 years also, the growth could be explosive. Now, do you buy this theory, and therefore, do you buy or hold any capital market related plays, brokerages, AMCs, utilities in your portfolios?
So basically, see, this is the space which is where I belong to, right?
Exactly.
So I cannot be a pessimist in that space because I belong to wealth management business. But generally, my view is that I don't see, as such, we are invested in markets, as such, we are putting money in markets. Now, to play proxies or to play the same thing is not my DNA. So because we are already there, right? Why should we over leverage ourselves for stock market and for capital markets? That is my view. I see business is like AMC, for example, and I work with ICICI too. The businesses are excellent, right? It is infinite ROC business. So business, there is no doubt on business, but at what value you buy and in what kind of cycle you buy. I think we have seen a huge amount of retail participation already in the market, and already regulators are a little bit worried about it. So I would not put my money into capital market related business now. I know this is a very, very contrarian view from others, and all the people whom I respect in the market and I have a huge respect for, they mostly are bullish on capital market related businesses. But because one fact is that they are high ROC businesses, high cash flow generating businesses like IT. But in my view, stock markets have their own cycles and they are very difficult to predict. And so after such a big euphoria of demat accounts and after such a big euphoria of new investors coming in the market post-COVID, I will not be very excited about this space.
Got it. Okay. Fair point. Parag Thakkar, such a pleasure talking to you. Thanks so much for joining in and giving us your perspective. And we continue our conversation on financials, by the way, on this talking point. Union Bank is the company in focus. The lender posted second quarter numbers and profits jumped 34%. We asked Nitesh Ranjan, Executive Director, to put these numbers into perspective and about the growth outlook. Listen in.
So for the quarter ended September 2024, Union Bank of India has reported good set of numbers, both in profitability as well as the business. And also the most of the guidance parameters, including the recovery and slippages, bank has reported in line with the guidance. So far as margin is concerned, you will recall that we had given a guidance that during the current fiscal, our NIM will be in the range of 2.8 to 3%. And in fact, for the Q2 also, our numbers have been 2.9, which is in the mid-range of that guidance. Having said that, there is still pressure on the cost of funds while a large quantum of deposits have got repriced over the last 1 year, but still the deposit rates remain elevated. Our sense is that deposit rates have perhaps peaked out, but it is going to remain elevated for quite some time, maybe around 6 months or so from now, till the time we see some action from RBI in terms of the rate cut.
Okay. All right. I just wanted to understand, you've said that your guidance is, between 2.8 to 3%. Just wanted to understand what is the rationale behind this, given that your RAM, you're saying that, you expect to, bank on RAM advances going forward, and it's a high yielding book for you. That is also seeing a bit of a slowdown on a sequential basis. So what is the rationale behind sticking to this guidance?
So if you look at the RAM book, we have been growing in the range of 12 to 15% for the past many quarters if you look at the annualized growth rate. This year in the first few months have been very lean actually. But we have started seeing the pickup from mid of August in retail as well as the MSME sector. And now being in the middle of the festive season, we feel that this trend is going to continue only. And we are seeing a good traction in terms of the new sanctions, both in retail as well as in MSME. So this should help us in achieving the guidance level.
So also wanted to understand, after the whole MTNL fiasco, Union Bank of India has actually, let go of some of the corporate loan book exposure. So just wanted your sense on that as to, going forward, what is your sense on corporate loan growth? Are you seeing some slowdown there? What is your outlook on the same?
See, 45% of our loan book is to the corporates. Right. And over the last 6 months or 12 months of also, if you look at, we have seen good demand coming from few sectors within the corporate, be it road sector, iron and steel, chemicals, some of the renewables energy, data center, logistics. So there is a good demand that we are witnessing. And of the 11 to 13% the guidance that we are giving for the overall loan growth, I think corporate is going to contribute a lot. Yes, during the quarter, you might have seen there's some subdued growth in the corporate sector. That is because we have let go some of the low yielding corporate loans opportunity in the market, because we have to ensure that we are in the guided range of NIM of 2.8 to 3%. Otherwise, there is a good opportunity in the corporate.
So going forward, which sectors are you looking at in terms of corporate loans that are attractive right now?
As I said, there is no particular preference for the sector. It depends on the opportunity, the promoter, and all these things. And I already shared some of the sectors from where we are seeing the good proposals are coming to us. As of now, we have close to around 35 to 40,000 crores of proposals under discussion for the sanction. And these are typically into the road sector, iron and steel, chemical, renewable energy, logistics, and so on.
Sir, also would like an update on on the MTNL bit. Sir, what is the recovery plan on that? If you could just provide a status on that.
I'm afraid I will not be able to speak about a particular account.
Okay, no worries, sir. I completely understand. Sir, moving forward on the MSME lending space, MSME is also witnessing some slowdown. What do you think is the reason because of that, and when can we see a revival on the same?
Yeah, as I said that in the retail, agri and MSME segment, first few months of this half year, we have seen very lean progress. But from middle of the August, there is a good traction, there is a good demand. And that's why you'll notice that even in MSME, sequential growth rate during the quarter is around 2.8%, which on an annualized basis is a good number. And as of now, we are focusing on various MSME clusters across the country. And we are hopeful that there will be good sanction and disbursement in MSME during the second half of the year.
Okay. So one thing, the slippages, your slippage ratio has touched a 2-year high, in the second quarter. Credit costs are also rising. This is also impacting asset quality. I mean, it's not just for Union Bank of India. We are seeing this trend, taking place across, the banking sector. Just wanted your sense on that. Would you say that, good asset quality numbers are kind of behind us now? And how do you see asset quality, the trend going forward from here on, given that the whole economy is witnessing a slowdown?
Yeah, first of all, you look at our guidance for the gross NPA, which is for 4%, and we are moving towards that. Continuously, we are bringing down the gross NPA quarter after quarter, and this quarter it is 4.36%. Secondly, I think from our bank data, I can tell you we are not seeing any kind of serious asset quality concern for any book in the bank. Yes, there was a large account which we had highlighted during the Q1 con call also, that is in stress, and that stress has actually materialized, and that account turned NPA. That is why the delinquency ratio, credit cost, everything looks higher for the quarter. But if you remove that one of large account, I think delinquency as well as the credit cost either in line with what we have reported in Q1 or in fact better than that.
Sir, I understand that unsecured retail book exposure is not as high for Union Bank of India. If you could just throw some light on what other segments, are leading to the rise in slippages?
So if you look at the numbers for Q2, even compared to the sequential basis Q1, in fact, there is decline in the new slippages in retail, agri, as well as in MSME. Only in the corporate there is increase, and as I said, that is because of the one large account. Otherwise, we are not seeing any increase in the slippages. In fact, if you remove that one large account, then the slippage for the quarter for Union Bank of India is around 1,800 crores, which even compared to Q1 is lower, which was around 2,100, and previous year itself it was a little higher. So actually, we are seeing stability at the current level of, you can say, on an average 2,000 crores of slippages per quarter.
Okay.
Well, tonight we shift our focus to a seismic geopolitical shift, the rising prominence of India and the broader global south. In the last decade, India has emerged not just as an economic powerhouse, but as a strategic player on the world stage, with a GDP growth rate that outpaces many developed nations. India's digital revolution, space prowess, and our pharma industries are making headlines around the world. But it's not just about economics or our cultural exports through Bollywood, yoga, or our vast diaspora, which are influencing global culture like never before. Parallel to India's rise is the rise of the global south, and that encompasses Africa, Latin America, parts of Asia. They're all part of redefining our role in this. These regions are leveraging their demographic dividends, natural resources, and increasing tech adoption to stake a larger stake in global affairs. From climate initiatives in Brazil to tech hubs in Nairobi, the global south is no longer just at the receiving end of global policy, but is actively shaping it. We've got Amitabh Kant with us, the Sherpa of India Sherpa at the G20, former Niti Aayog CEO. Thanks very much, Dr. Kant, very much for being with us. When we use the words India century, what does that imply?
Well, it implies that India is the only country in the world which is today the 5th largest economy, which in the next 2.5 years will be the 3rd largest economy in the world, growing at about 8.2% last year. But it's the only country which is today making about 35 kilometers of road and 12 kilometers of railway lines per day, which does about 50% of the real-time fast payments in the world, which has done 31x of solar generation in the last 7 years, which is actually, if you look at it in terms of airport construction, makes about close to 9 airports and about 3 metros a year. Nowhere else in the world is this happening. The population scale impact at low prices, what India is doing, it's truly India's, not merely India's decade, but India's century, because the demographics are very young. The rest of the world is aging, but India is getting very, very young and will keep getting young.
In fact, that's my next question. In terms of India's demographic dividend, that's probably the biggest benefit that we have. The numbers we have are that 65% of our population is under 35 years of age. And that's wonderful, because that means there's a real future if we are able to employ them and if we are able to skill them appropriately. So as we talk about demographic dividend, how important is it for us to talk about reskilling?
That's the most important issue, Vishnu, because India can't grow only on the back of services. India needs to become a manufacturing nation. 17.5% of your GDP comes from manufacturing. You need to take it to 25%. You need to urbanize, because 500 million people are going to get into the process of urbanization. In the next 5 decades, that means India's challenge is to create 2 Americas in the next 5 decades. You need to enhance your agriculture productivity. The number of people dependent on agriculture at close to 45% is very, very high. So you need to fire on all cylinders. Service.
Welcome. You're watching the FNO show. It's still a difficult day of trade. Agam, we weren't anticipating the kind of sell-off that we saw yesterday. In fact, exactly on the show yesterday, we were of the opinion that 24,700 would hold.
Yeah.
Most of the technical analysts we said to as well said that Bank Nifty is a buy with a 300, 400 point cut. But all those levels were taken out yesterday. The Nifty ended much lower than we would have liked. It's down 7% from its record highs, with 5% of the cut coming in over the last 2 trading days. Broader markets have also declined substantially. The small cap index that was resilient, at least so far, cracked pretty badly yesterday. What we are seeing this morning is there's a little bit of an attempt by the bulls to defend significant levels, but the struggle is real. The markets are pretty much consolidating after that big fall. No material recovery is evident on the street just yet. The breadth of the market has improved from 9:15 this morning, but still not looking comfortable enough. Bank Nifty is trading marginally higher. Sectorally, most sectors are doing okay, but nothing much, like I said, in terms of a material recovery after yesterday's fall. So, Agam, while we've all been maintaining that the index may be a tough area to be exposed to at this stage, the street still remains stock specific, and I think one glimmer of hope is that earnings that were good yesterday are being rewarded this morning at least.
Yes, absolutely. And so today was going to be one of those tougher days to trade because of the fact that we've actually started seeing a decline, and now there's a question whether or not on an intraday basis there could be some sort of short covering, or can we expect a little bit more weakness. But it does seem like it still is not an easy one to deal with, but there are a whole host of stocks out there which actually did come out with very good earnings, and some of them are certainly being rewarded. But I'm going to start by taking a look at the benchmarks. And a lot of analysts over the past couple of days have been suggesting that these markets are not about benchmark indices. These markets are about stocks specifically and the kind of trading that you can carry out there. For now, the futures again is not looking at too much traction coming down to the Nifty. Near less than 2% added in open interest there. And the Bank Nifty once again is where we are seeing a decline of around 2.5% in open interest. In terms of the options market, as I've been mentioning, we've been seeing that resistance around 25,000, but we're also seeing Nifty take support at 24,500, which also happens to be the 50 daily moving average mark, somewhere below that. And we're starting to see a little bit more, writing around that particular option. But, if you just consider some of the option premiums in the Bank Nifty, which are say about 1,000 points away from these current market levels, they are still very, very volatile. The option premiums are very, very volatile, and they're all over the place. So, even market participants, especially option traders, are having a hard time in terms of dealing with today's intraday expiration. That said, again, we need to keep an eye on several of these other factors as well. But, given the fact that the middle point at the moment does seem like it's 51,200, 51,300, we do have a lot more writing around. Levels of 51,500 on the higher end, that's the call specifically, and 51,000 put is there where we're seeing a little bit more action. But besides that, in general, overall, it's still a very, very mixed market, and the queue is a lot more stock specific for now, Samina.
You're right. It's all about stock specific trade. The broader market still not giving us too much to hold on to. In the Nifty 500 universe, which was under serious pressure yesterday, is looking better this morning. Coforge, for example, is up 12% on back of earnings that the street has liked. Manappuram, Wockhardt have both picked up steam, 5% higher. Persistent numbers have gone down very well with the street. The counter sees a gain of 12%. So is Amber and Max Financial Services. GMDC, NMDC, both are looking good. Rail stocks are seeing some steam returning back after the big fall that we saw yesterday. Chennai Petroleum is down 20%. The numbers were weak. Gujarat Fluoro, in terms of raising funds, the EV segment would have been positive, but the fact remains that this could be buy the rumor, sell the news, and hence you're seeing profit taking on Gujarat Fluoro. Action Construction, PNC Infra continue to sell off. Cochin Shipyard, Sundaram Fasteners are some of the other losers in the Nifty 500. But we have with us Ajit Mishra and Brijesh Ayal both joining us with their technical view on the market. Ajit, I'll start with you first. I think the general consensus remains that avoid the index because that's far tougher to call at this stage and stick to stocks. But nevertheless, the Nifty is struggling to hold that 24,500 mark. How much of that is going to play out in your opinion? Is it going to be consolidate for most part of today and then maybe eke out a little bit of gains, or could it go the other way around since the temperament of the market is sell the rally? Not like there's any major rally, but sell the recovery, if I may.
Yeah, good morning, Zamina. Good morning, Agam. So yes, till yesterday, we were also anticipating that there could be some consolidation, but the way market, slipped and in fact tested the 100 EMA after almost 4 or 5 months. So that indicates definitely, serious pressure because after a long period of steady up move, we are down roughly around 7% from the record highs. And, after testing 100 EMA, it seems like that, the way the broader indices were under tremendous pressure yesterday. So all this indicates that this sell-on rise is something that one should continue with until we decisively break 25,100 level on the index. Intermediate also, we have multiple resistance to look at positionally, and downside 24,000 is something that one can, maintain as a target. Intraday, if we talk about Zamina, so I feel that due to this outperformance from the select banking majors and rebound in the select heavyweights, we might defend this 24,353 level on the intraday basis, but upside also seems capped. So 51,000 in the banking index and 24,350 in the Nifty is something that Nifty might, the indices might defend. But overall tone is like remain negative. So yes, the prudent approach is still to look for stock specific opportunities and maintaining position on both sides.
Well, moving on, let's get Brijesh into the conversation as well. Brijesh, morning. How are you looking at trade for the Nifty 50 at the moment?
Morning, Anand. So, yeah, definitely, I think the bias remains negative. So, but then my understanding is that yesterday, for the very first time, we broke that 100-day EMA level. And today, after the gap down opening, since we are in the oversold zone from the intraday perspective, from the hourly time frame, some bounce is expected. There are slight strengths seen in Bank Nifty. So, probably that may pull up the market on a little bit on the higher side. But then just a trading opportunity. Directionally, I have a understanding that sooner or later we might approach 24,000 on the directionally 24,000 for the Nifty, somewhere closer to those points. So positional long bets should be taken only when we see those levels. So till that time, positional bets should not be taken is what I believe. And since we have fallen for the last 3-4 days and we are in the oversold, some bounce back trade is expected more with the Bank Nifty. Nifty, I would like to avoid. Bank Nifty, specifically 51,000 looks quite strong as of now at this point. So any long trade should be taken with 51,000 as a stop loss, and some 300-400 points bounce is expected. I believe the stocks like HDFC Bank, ICICI, and Axis are showing strength. So maybe because of that, Bank Nifty will see some strength.
Ajit, do you have a trading strategy on Bank Nifty this morning?
So Samina, we are trying to hold this 51,000 mark, but I feel that the upside still seems capped because we have resistance close to around 51,600 and we are currently in the middle of the band. So closer to 51,600, one can look to go short with 51,800 as a stop, and closer to 51,000 level, one can look to go long with 50,800 as a stop loss and 51,600 target. So one should play the range.
Okay, let's move on and talk about stocks then, and maybe if we can start by taking a look at all the stocks which are very active in the future space, specifically those stocks which are, seeing traction in open interest with respect to their, spots. So Coforge is standing out clearly, up 11% on the back of earnings. We have a 9.5% increase in open interest towards longs. MCX is the other one. It's up around 3.5%. It's resumed its uptrend after the recent volatility. We are looking at an increase in open interest there as well towards longs. But M&M Financial is taking a knock. Shorts there, shorts for SAIL as well as BHEL as well. So a mixed market, but in general, more shorts than longs. Of course, in terms of stocks which are seeing unwinding, we have a whole host of companies which are seeing about a short covering. That would include Canfin Homes, Bajaj Finance, Exide, as well as Deepak Nitrite. An interesting point made by my colleague earlier, Harsh, where he said that, when it comes to valuations, Bajaj Finance valuations have been the lowest ever when you consider something like the price to book. Of course, this is only on a relative basis because it's still going at a price to book around 5 times, 4.5, 5 times. But and while it may on an absolute basis look higher, relatively it is, as I've suggested, lowest ever. So that's potentially the reason why we are seeing that 5% up move in Bajaj Finance. Anyway, let's take the views of our experts then. And Ajit, I'll come to you on stocks which are on your radar this morning.
So yes, Agam, so considering the market tone, I feel that stocks, sectors, themes which are holding strong is something that one should focus on, even for the long trades. And one such candidate wherein we have seen a fresh breakout is MFSL. So the stock was trading in a very tight range around its record highs, and today we have seen a decisive breakout. So this indicates that the overall tone which the stock has been holding for last several months is likely to continue. The stock is trading at the record highs. So this is another positive. So 1360 is what we are eyeing as an immediate target. So with stop at 1210, one can go long in MFSL. At the same time, PSU Bank, they have started showing sign of distribution, fresh breakdowns in the last couple of trading sessions. And Bank of Baroda is one such candidate wherein we are seeing, potential breakdown in a near future. So 212 is what we are eyeing in Bank of Baroda as a target. So with stop at 242, one can go short in Bank of Baroda at current levels.
Rajesh, what about you? What are your top stock trading ideas this morning?
So my first bet is on the Axis Bank. So somewhere I believe that this is again from a day or two kind of a view. So I think there can be a small opportunity in Axis at current level. The stock is slowly showing strength. And this 1200 strike price, the call writers are slowly reducing their positions. So there is slow reduction in the call writers volume. So my understanding is that if Bank Nifty performs or Bank Nifty there's a move, Axis Bank can see some opportunity. One should go long at current price with stoppers of 1165, and the target would be 1207. And one more thing which I'm liking is the Bharti Airtel. So even yesterday when the market corrected, it was sideways. That deeper correction or maybe like deeper profit booking was not visible. So even today, if there is a bounce, then Bharti should see some bounce. So one can take the long at 1690 with a stop loss of 1678 for the target of 1723. Again, these are both a trading kind of opportunity from 1 or 2 days kind of perspective.
Okay. That's as far as some of our experts' views are concerned. Let's move on and talk about a handful of names which actually do come up for you or come up for us in terms of our radar. And in terms of some key F&O movers, and there are quite a few in today's day of trade, we of course have Bajaj Finance right at the top of the list, which is actually seeing some sharp moves. And then of course we have Bandhan Bank, which is also up around 2.5% right now at the moment. And ICICI Prudential is also moving favorably with respect to the kind of moves that we've seen here. And among those stocks which are being under pressure, we have ABB, which is down around 1.8%, Power Grid, which is down around 1.5%. If we can actually take up perhaps, maybe we'll take up ABB itself, because we're actually looking at a little bit of weakness here. Brijesh, I'll come to you on your view on ABB. What we've seen is, a sharp decline a few days ago, and after that, there hasn't been as much recovery. Do you think that this fall is being arrested and there could be an opportunity somewhere here, or do you think that you would potentially want to stay short in this counter?
So the view technically, I believe this 8,000 level might get broken because if you look at the demand zone, 7,500, 7,600 is a reasonable level where normally this stock takes the support. So it's too early to comment. There has been a distribution, and I think the results are going to come by 4th of November or something. So the structure is negative. There can be a small pullback, but then there are high probability that we might break 8,000 mark. So that 8,000 mark might get break. Another 200, 300 odd points correction can be seen. So one should wait for that kind of opportunity, and then some bottom fishing or some trading bounce if somebody needs to take, that can be reviewed. But then I would wait for this 8,000 level to be broken once.
We have a few queries now, so we should start quickly taking them on before we get the management of Coforge to talk to us about the earnings. Remember, the stock is up 11%. And we'll get a view from Rajesh and Ajit, both on the counter. But over to queries first. We have the first query coming in from Sunil, who writes in from Pune. He's holding Axis Bank 1250 calls at 3. Should he hold? Should he exit? If we can just quickly look at what the 1250 calls of Axis Bank are currently trading at, they're deeply out of the money. Ajit, you want to have a go? What should Sunil do? Hold on to Axis Bank? The spot price as well is not seeing too much movement just yet in trade. At a strike of 3, what does one do?
Samina, as I can see on my screens, quoting at less than 1 now. So it's too late in case if you have bought it at current levels for any recovery also. I always recommend that stick with the ATM or ITM stock options if you are anticipating any rebound and playing it for a day or two. So here, since it's already related and it's too far OTM now, so you can continue to hold in case if there are any positive surprises in a couple of days.
All right. Ajit, as well as Brijesh, hang on. We're going to take a little bit of a detour and address Coforge's earnings. Of course, we've also spoken to the management. The earnings are, well, fairly reasonably good. There's no doubt about it. And you're seeing that which is very evident in the stock reaction too, which is up as much as 11%. And in terms of the kind of traction that we've seen with respect to the earnings, there has been growth. There is also a little bit more clarity with respect to what clients are doing and the kind of conversations they are having with the management and the company. The potential with respect to what we can, in fact, expect going forward too. Of course, a lot more clarity awaits before we see the US elections, but for now, Coforge seems to have come up with the goods. My colleague Tushar spoke to the CEO of Coforge, Sudhir Singh, and this is a slice of that conversation. Listen in.
Well, the outperformance, Tushar, is broadly in line with the numbers that we've delivered over the last 7 quarters. The last 7 quarters have been very tough quarters for the industry. But 7 quarters back, Coforge had just crossed the $1 billion run rate mark. And 7 quarters later, despite what's happened in the broader macros, we have with these numbers almost touched $1.5 billion. So the outperformance has been driven by broad-based growth, every industry vertical, every geographical unit, every technology unit is growing. It's not just one vector, one engine driving growth. It's broad-based. It is therefore a growth trajectory that we believe that will sustain as well.
Okay. Let's talk about, is this outperformance on the back of the Cigniti acquisition as well? Would you attribute the outperformance to the acquisition that you have made? I mean, it's the largest that you have done so far.
I won't attribute it to the acquisition, though I will give you 2 numbers that I think will tell the whole story. Coforge organic business, excluding Cigniti, has grown 6.3% sequentially. These are not YOY numbers, sequentially this quarter. The Cigniti business, which we acquired, again has grown 6.1% sequentially. So this is the tale of 2 separate businesses coming together, both of which are in the pink of health, and the synergy of getting 2 very strong businesses feeding off each other is what is reflected in the almost 27% sequential growth that you alluded to at the beginning of this conversation.
Okay. So what sets you apart actually from the industry? You say that the industry has been in the throes, if I may so, a slowdown, but you have quite clearly buckled the trend, so to speak. So what's working for you and what's not working exactly for the industry at this point of time?
I can tell you what's worked for us for the last 7 years. For 29 quarters, the Coforge story is not a new growth story. For 29 quarters, we have delivered irrespective of the macro environment. What sets us apart is our execution intensity. It's not the strategy. The strategy is the same for just about anyone you speak to. Everyone talks AI, data, cloud, and experience. The difference lies in the execution. And execution at Coforge has 3 arms. There is delivery execution, and the quality of that delivery is best exemplified by the fact that our repeat business is 95.5%. There is a quality of capability built. The approach at Coforge has always been driven by an internal paradigm that we call a big bet. We don't try to emulate the large caps. We don't want to be a large cap equivalent in terms of capability. We call out a few big bets, and success there is it's not negotiable. We have to succeed, and over the last 7 years, every big bet that we've taken, we do succeed in. And the third aspect of execution that sets us apart is our sales execution. The Coforge sales engine is not the legacy sales engine of the IT industry. We sell through a client services group concept, not just a sales only concept. It's not just the farming engine, it's the hunting engine that works in conjunction with capability and with delivery. And that's a model that's done well for us, not just in this quarter, but now for about 29 quarters running.
All right, well, that's the management of Coforge. But telling us about how they are going to differentiate with themselves with respect to the rest of the peers in the industry. And they have suggested that they don't want to operate like some of the large cap names. But with that, we shift focus to the commodity space. Plenty happening there. And for that, we have Ajay Kedia. He's the director at Kedia Advisory, who joins us on the show. Ajay, good morning. Thanks for joining in. Well, plenty of traction with respect to gold this morning. We continue to see gains as well. But how are you placed on it now?
Yeah, very good morning, and definitely it's a glittering morning, we can say, because yesterday we have seen silver testing 1 lakh rupees and gold is very closer to test 80,000 mark. With a given geopolitical tension, central bank buying, ETF buying, everything is favoring gold and silver. No doubt, technically market is severely overbought, but I think the fundamentals are too supportive as of now. So still we expect for today, one can buy gold at 78,500 with a stop loss of 78,200. Prices might test 79,000 as of now, but be cautious because technically market is in overbought condition. Similarly, if we talk about silver, gold-silver ratio has dropped significantly and trading at 79, which suggests silver will outperform gold. And already we have seen with the China pushing all efforts to recover their economy, silver is getting industrial demand benefit. So I think 99,000 would be a prudent level to buy with a stop loss strictly at 98,200, and might be again today we can see 1,01,000 as an immediate target.
Ajay, what about crude? A 7% fall last week, a 2% rise on Monday, stabilizing yesterday and today. Do you think a long trade on crude is warranted?
See, I think crude is trading in a very narrow range because everything has been factored in. We have already seen Israel, Iran concerns are going on, Chinese demand concern. Even yesterday, we have seen IMF came out with a forecast that 24-25 demand would be slightly, global growth would be slightly lagging only. But I think the range technically shows prices as long as holding above 6,000 can give us an upside limited to 6120. So I think with a given data set or event, I think be on a positive side, but in the evening, inventory data would be on slightly concerning. So limited upside would be there for crude oil towards 6120 we can buy.
Anything in base metals, Ajay? Anything that you like? Because there's also so much of back and forth of what's happening on the LME. I know at least medium term, some of these commodities could be reacting positively to all the measures China has taken.
Yeah, surely, because majorly in last couple of months, whatever we have seen a rally in the month of August, September was purely because of China's efforts that has been continuous to putting them in the economy to lift the consumption. But I think still the demand concern are prevailing what the data suggests as of now. But despite that, I think the metal like zinc is outperforming very well. Copper is slightly more volatile. But I think given from here, I don't expect major fallback because as we land in Q4, generally consumption also increase and supply side concerns also increases. So I think copper around 812 is good to buy, targeting 818, 820 as of now. But I'm more bullish on zinc where we have seen shortages are been there and consumption from property sectors have been improving. So around 289 is good to buy, and for today we may see a target of 292, but if we talk about next 1 week period, maybe we can see level like 300 on domestic and 6.
Ajay, the same views when it comes to aluminum and lead as well, right?
Yeah, I think a leader for base metal would be zinc and copper, but aluminum is thoroughly getting slowly and steadily wave at 240 level. I think one can take a long at 239 with a target of 242. Lead is slightly lackluster as of now, but with the EV demand improving, I think lead should be again a good positive bet when where one can buy around 181 with a stop loss of 180, targeting 183 on the higher side.
Thank you so much for joining us and taking us through your views on those commodities. Well, with that, it's a wrap on this edition of the FNO Show. But lots more lined up on the other side. Stay with us, and we'll be back in just a bit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Welcome. This is NDTV Profit. We start with Persistent Systems. The IT firm reported a 6% sequential increase in net profit for the quarter ended September. On a year-on-year basis, net profit surged over 23%, driven by the company's focus on AI-led services as well as the strategy. We spoke to the CEO, Sandeep Kalra, about the quarter gone by and his outlook on the second half. Listen into that conversation.
The quarter, as you rightly said, came in well. We had another good, strong revenue growth quarter, 18.4% year-on-year in dollar terms, 20% plus in rupee terms. And on a quarter-on-quarter basis, it was roughly about 5.3% in dollar terms. Now, this was led by our healthcare life sciences segment, followed by BFSI. We saw reasonably good growth in both the segments, followed by tech, which we are seeing a good revival. The EBIT for the quarter also came in healthy, a 22.8% year-on-year growth at 14%, which is flat quarter-on-quarter despite the salary increase, which dings us by about 210 basis points. So we were able to overcome the negative effect of the wage hike that we had given effective July 1st. And for you and your viewers, we basically kept the timeline that we had for the wage hike. We did not defer the wage hikes as some other peers in our sector have done. So overall, broadly a good quarter. Good segmental growth across and good client growth across. Happy to answer any questions.
Yeah. I want to start off with the geographical areas because for you, both America and Europe did well. The belief was that for all companies, product companies, services companies, US will probably do materially better only after the November election verdict is out of the way, uncertainty is out of the way, clients will take calls on budget there. What's happening there? Because you seem to have done well.
So Neeraj, see, in the last several years, if you look at it, there have been many different phenomena. There was the COVID phenomena, there was a post-COVID, there was a fears of recession, now it is the US elections. So all we have to do is, and sincerely, we are a small company in a much bigger, sector. All we have to see is where the customers' minds are at. What is it that they are looking at? If they are looking at revenue growth versus, cost optimization versus, saving from some areas, investing in places like AI and so on and so forth, we have to be able to work with them and we have to build in the capabilities that we have been, if you look at our AI capabilities, we have been investing in that, and that has held us in good stead. Good market, bad market, and so on. So we are reasonably confident that will be the case going ahead as well. We don't control the economy. We don't control what happens in the macro in the world, whether it is in APAC or wherever else, Middle East and so on. But we control our reaction, and so far as a team, we've done well with our customers and they've grown with us. And we hope that to continue.
Yeah, but even sectorally, so not US has done well, BFSI has done well. What is this? Is this a uptrending piece? Because most people were thinking that it will actually trend lower. So how do you look at BFSI and US combined? Because that will be a big driver, not just from your perspective, I'm saying, but for the sectoral perspective.
Yeah, from the sectoral perspective, look, we are seeing some amount of spend easen up. Yeah, the people are worried about the elections, but you know what? With whoever comes in, the markets have to continue, the people have to do their business. So we are definitely seeing some amount of uptick in terms of, people looking beyond the short term. And we have been a gainer of that. We have also been a gainer of cost optimization. We have been a gainer of vendor consolidation. And I do think, people who are investing in AI capabilities, etc., will continue to gain market share. So yes, there'll be a little bit of loosening in the shorter term. Longer term, we'll see. But within that, people who are focused on their customers, on next generation technologies, services which kind of add value to their customers will keep growing.
Okay. Now, before I come to margins, a couple of other questions, Sandeep. One of them is on technology. I heard you mention in your opening remark that tech seems to have starting to perform, I think, 1% sequential growth. But the belief in the commentary that I've read from the analyst community is that the bottoming out process is underway. It'll probably bottom out in the next couple of quarters. Is there a dichotomy between what the street is understanding versus what you're thinking about?
No, so for us, if you look at it, we have been investing in our AI platform called Sasva. We have been evangelizing that with our tech customers. We've got very good traction on that. We are winning some good large deals, including in the quarter gone by. And we do believe, from what we see, the ramp up will happen over the next 2 to 3 quarters, big time in those. So we are expecting tech sector to kind of turn around for us, because tech for us versus tech for our larger peers are two different things. We are in the heart of the engine. We are in product engineering. We are their extended teams for product development, maintenance, professional services, 9 yards. Whereas tech for our other peers means IT into their CIO organization. And we are heavily focused on CTO, VP engineering, the business lines, and somewhat in the CIO organization. So we are confident that will turn around for us, and we'll see a secular growth across all the 3 segments.
But happens, bottoming out in quarter 2, in the next couple of quarters, or already bottomed out, Sandeep?
It's kind of bottomed out. We should see, obviously December quarter is a furlough quarter. Some of the tech companies also have furloughs. But if you look at the overall thing from our vantage point, from our bookings, from our pipeline, I do think it has kind of bottomed out.
But furloughs, you reckon, are similar to what you've seen in the previous year?
So far, yes. But these things get firmed up towards November and December mid. So we'll let it flow. From what we see today, the discussions with our customers, we do believe they'll be in similar lines as the last year.
Okay. Operational metrics. Last couple of questions, Sandeep. Operational metrics, margins, no complaints there. The question only is, or the one thing is that maybe, are you hitting the sweetest spot on the utilization, and therefore would that need to change a little bit? Would you need to do more hirings? How would that process shape up?
Yeah, so right now we are roughly in the range of 84% plus. It will be in a band of plus minus 2%.
Okay.
Now, obviously, we will have to hire as we go along, as we keep, ramping up. But our hope is that as we are using more AI platform that we have, we need not necessarily have a linear increase in headcount with respect to our revenue increase. So from that perspective, we are trying to use the latest technologies that we are evangelizing to our customers to be operationally efficient, whether it's our own operation, whether it's our service delivery to our customers. And that's where, we believe there is scope, while we keep the utilization where it is, to have better margins as we go along, as we use more technology for service delivery.
Well, the last question, TCE was very solid. I believe in the commentary you mentioned that Q3 will actually see substantial deal flow as well. Can you talk a bit about the landscape and the nature of the deal wins now and anticipated?
So if you look at our historical, financials, we have been declaring all our wins or all our, bookings, whether it is renewals versus new. October, November, December, given the fact that 80% of our revenues are US based, October, November, December is the final quarter for the year for many companies. That's where a majority of our renewals happen. What I had said on the earnings call is we'll see a bulk of our renewals happen in this quarter. That will take the ACV up. Even if we were to do the same, amount in new wins as we did in the earlier quarters, an average of that, our overall ACV bookings will be higher given the nature or the seasonality of the booking quarter. And overall, the pipeline is healthy. That's all I would like to say, because otherwise I'll be giving forward-looking statements, which we don't.
But 14% QOQ growth and ramp up anticipated there too, I presume. Sandeep, just before we wrap up, anything that has happened which is of note and I haven't managed to figure that out and ask you? If there is something else that stood out for you in the quarter, please do tell us.
Yeah, so see, from various perspectives, if you look at it, our industry is at a very interesting cusp. On one side, people keep talking about the macro economic environment, the US elections. There's a much bigger pivot that is happening on the technology side. And that is basically the AI/Gen AI. And I would rather say the AI pivot at the Uber level. And we have been investing in that significantly more so in the last 6 quarters. That is helping us very well. We are seeing good traction based on our AI for tech platform called Sasva and our AI for business, platforms like Iora, Gen AI Hub, and so on. That, in my mind, for Persistent will be the growth story, very differentiated from the sector, and that should give us sustainable growth going ahead. So that's the only other thing that I'll add to the commentary.
Okay, well, that's the management of Persistent Systems telling us about how the quarter's gone by and what we can expect going forward. But from there on, we pivot towards the NBFC space. We've had earnings from some very important and key members of the NBFC sector overnight, and we are going to now take stock of that with Jignesh Shial. He's the Director of Research and Head of the BFSI sector at InCred. Jignesh, good morning and thanks for taking the time out. Let's start with your stance on Bajaj Finance. Some interesting updates as well coming through. What are you making of the earnings firstly?
Obviously, thanks for the invite that I got. Bajaj, yesterday's numbers have been pretty good. There had been some rise on the stress level, but obviously what management has been highlighting, there had been a rural stress which has been building up since a while, but now, it looks to be, as far as what management is talking about, that more or less for Bajaj at least, the stress has already been peaked out, and going forward, we will see that the trend has been improving. Obviously, they are cautiously optimistic for now, but Bajaj being one of the largest NBFCs, having a significant presence in rural India, they have a relatively fine understanding of the trend and all, and they have been highlighting that stress has been peaked out, and going forward we should see a decline. So that's definitely a good news, and that's what I guess the stock is basically reflecting.
Right. Jignesh, also there is a suggestion that they are looking to do away with the two-wheeler finance now. And it's actually a little bit of a surprise because, of course, naturally a lot of that is towards Bajaj Auto. But if they do away with that, what does this mean for the sector? Because there's a significantly large player here moving out of that. What are you making of this?
No, I mean, they are not saying that they are moving away from the two-wheeler space. Basically, what is happening is that Bajaj Finance has basically started as a captive financing NBFC for Bajaj Auto. But now Bajaj Auto is basically starting with their own NBFC, which is under the separate group altogether. They will be doing two-wheeler financing for their own vehicles and all, a two-wheeler, three-wheeler, and that's where Bajaj Finance as an entity is moving away from it. But obviously, I think from 22 onwards, they have started with their own two-wheeler financing business, which is for other than Bajaj Auto two-wheelers, which they're doing it up. So they will be consistently improving the penetration and all. They're just moving away from Bajaj Auto financing part, which is captive NBFC arm that they have started with it. So definitely that is the area where they are going to do away with it. But overall two-wheeler financing still remains intact for them.
But specific to Bajaj Finance, then Jignesh, will it not impact operations, because there should be some wind down of that they're catering to two-wheelers, at least from Bajaj's finances point of view, right?
Yeah, definitely there will be some impact, which will, I think, the rundown will have an impact on the profitability and all over a period of time. But as even yesterday's call, the management has highlighted, obviously moving away from captive has always been a difficult task because they've been funding it up pretty well. But on the growth front, definitely that rundown will have a bit of an impact, on the profitability side. But even on the credit quality side, that will be a good news for them, because obviously, in general, whenever it has happened that there is when you do a capital financing funding and all, the credit quality gets a bit of a compromise on that particular part. So moving away from that particular piece and getting into a two-wheeler financing for other than Bajaj Auto, the impact will be positive on the credit quality front. But obviously, profitability and growth will impact at least for next couple of quarters till the time the entire rundown happens. But on the asset quality side, that will be a good news. Yeah.
The other thing that came through in the conference call yesterday, and please correct me if I'm wrong, we understand that clients with more than 3 live unsecured loans are now showing a higher propensity for default. That said, even as against that, the point to counter that is the customers with exposure to more than 3 unsecured loans is now just 9% of the book, as against 13% earlier. So how are you looking at this change and this to and fro between this particular aspect?
Look, this is, I think, it's a bit of taken, adversely, but it's not that way. I mean, typically, when there is a flow, so Bajaj has highlighted clearly that there are, set of customers which generally has 2 or 3 loans or more than 3 loans as well, where Bajaj has been exposed to it. Obviously, before pre-COVID also, there was roughly around 8% kind of a book. Which extended till 13% when, obviously when the liquidity was pretty good. And there was definitely a good demand and people were, were asking for it and the environment was also good. It went up, it stretched up to 12, 13%. But when obviously when since last couple of quarters, management was, very much cautious. So they realized that there is a, overheating which has already been happening, specifically in rural India and all. So they started cutting that particular exposure. So from 13, it has again fallen down to around 9-10% currently, which is close to what they used to do it, earlier pre-COVID and all. But having 2 or 3 loans, that doesn't mean that that customer is always bad or even, there is no specific default which is happening. It's on a conscious side. They have taken a call whereby they don't want to, get into that particular over-leveraged customers more. And where the cut down has already happened from around 13% to around 9-10% right now. Until the time, being a seasoned player into unsecured financing for so long, obviously they know when to pull the plug out or when again to start doing it up and all. So when they see the market has been improving, probably this particular share will improve. But for now, it has gone up from 8% to 13, and now again back to 9-10, which is a kind of a good news.
Point taken, Jignesh, and well pointed out as well, of course. But let's move on then to M&M Finance. And again, your initial take on the earnings.
Obviously, this quarter had been a relatively bad quarter for them. There had been a rise in defaults, and obviously that has resulted into provision increase. And the net losses, as far as write-offs and all are concerned, still been captured or still been capped. But provision obviously has taken a toll, and that's the reason of profitability has been lesser. What management has been highlighting, it's a kind of delayed payments or repayments and not defaults as such. So there is a probability that the reversal will happen in the second half. But for now, definitely it's a kind of a concern that market is seeing it up, and that's the reason why the reflection is coming up. But what we see it up more is that, I guess, unlike other auto finance players, the diversity is still relatively lesser. Major of the book is still into auto financing segments at altogether. And that basically is impacting M&M more, because when the auto cycle slows down or the auto demand slows down, compared to other NBFCs, M&M has a larger impact, and that is what is getting reflected here.
All right. But your view on collections, I know that the management has suggested that the first 15 days of the second half recoveries have been quite good. But there's also, there's always this concern with respect to collections when it comes to agrarian states. Secondly, their auto segments, the CV segment specifically, it's not been encouraging. Can you talk to us specifically about some of these factors?
No, yeah, this you're saying is absolutely right. We need to keep an eye on it because, look, second half generally remains better than the first half. That has always been a tendency. That has been the historical track record also suggests. What we are seeing it up that, the growth has been consolidating, and more importantly, the underwriting itself has been seeing a significant improvement in M&M overall, if you'll see it up compared to how historically they were done it up. But obviously, when the volatility happened and cyclicity is visible, we have to wait and watch out for whether the collection is going through or not. And if they are able to demonstrate that, the numbers are pretty good for probably a quarter or two, then probably, I guess, we'll have a little bit more confidence on what they're saying in delivery. For now, we'll keep an eye on it, but I'll still stay on a positive bias that because it's more cyclicity and not specifically a default, I think there is a large probability, or there is a higher probability that they will be able to recover it up in the second half, but we'll remain very watchful of it.
Okay. Jignesh, among the counters that still have to announce earnings any which are on your radar and your expectations from some of them? Can we expect same trends? I know a lot of these factors will depend from company to company, but largely what are you expecting from the balance of the earnings season?
Look, I think obviously we have been seeing it up, and we've been highlighting also since a while that even management has been saying it up that credit costs or defaults are going to see a kind of a normalization like pre-COVID or not. So obviously there will be some hiccups which is visible specifically for those lenders who are more present into semi-urban and rural areas altogether. So defaults are definitely seen a kind of a spike, and that's what is visible. The expectation is that the second half will be better, so the commentary will be relatively good for the second half, but we have to watch out for. But what is more interesting is that the seasoned players, like whether it is Bajaj, whether it is from among the banking side, whether it's HDFC, even ICICI is supposed to come out with numbers over this weekend. I think the seasoned players who had built up this book since a while, since a quite long period of time, they are relatively better off at this point of time compared to those guys who has built up this entire book in the last 2 years or 3 years, where the major of the lending has happened and still seasoning has not happened. Those players are more vulnerable compared to those guys where the overall book is relatively more having more vintage and has seasoned out over a period of last couple of years. So we'll stick to the quality. That is the call. I think large names with a better underwriting and all, those are the guys who will be able to come out pretty quickly or pretty impressively compared to those guys where vintage is relatively lesser.
Right. Well, Jignesh, you lead that. Thank you so much for joining us and taking us through your view on not just those two heavyweights in the NBFC space, but the sector as a whole. Thank you so much for joining us here. All right. Well, from there on, we move on to Swaraj Estates and Developers. They have raised about 343 crores through a preferential issue. And we spoke to the whole-time director, Rahul Thomas, to discuss how these funds will be utilized and the timeline for deploying them. Listen into a slice of that conversation.
So we have raised 343 crores, 100 crores out of which is share warrants, and the balance is through preferential raise of equity shares. The primary goal is to use 40% of these proceeds for land acquisition, lands which are very prime and which we have already identified. The balance would be for working capital requirements and the general corporate purpose.
So are you targeting any particular land parcels you've been eyeing on, any progress on that front? And can you elaborate more on the working capital requirements needed for this?
Yes, so we have identified certain lands. We see a buoyant commercial demand. So to cater to this demand, we have identified certain land parcels. So I think primarily that would be the projects where the capital will be deployed. In terms of working capital, it's mainly for making certain payments for premium payments to the MCGM and other business requirements is the main reason why we would require the working capital.
Well, sure, that's understandable. But now coming to your pre-sales performance, you've reported a 5% growth in Q1. While we refrain on discussing the Q2 figures for FY25, you've guided for 850 crore of pre-sales, which is about a 76% growth compared to last year. Do you maintain this guidance, and can we expect an acceleration from H2 onwards? Also, can you give us an outline of some of the key launches which you're currently focusing on?
Yes. So our guidance was 850 crores. So we're quite confident on achieving those numbers. Of course, I cannot be very specific on the pre-sale numbers for this quarter because our results will be announced the first week of November. So around that, we will be giving the specifics. But I can only tell you that we are poised for a good growth and we are in the right trajectory for achieving the target. In terms of our launches, we have 1,150 crores of launches planned in obviously H2. We plan to launch this. These are obviously a commercial project on Tosi Pipe Road would be one of the biggest launches which we will be doing. Also one in Shivaji Park in the residential segment. So these are the two big launches which we are going to be busy with.
Okay, so when can we expect the two big launches that you mentioned about? Is it in these next 2 quarters itself?
Absolutely. Our target is to bring it between the third and the fourth quarter would be the right timeline where we could see both these launches and obviously the registrations to be done.
Along with the launches that you've mentioned, I want to also understand your progress on the expansion into Bandra sub-market with first phase of approvals received. What is the GDV potential from this that can be expected from this sub-market?
So we already have the land tied up in Bandra. So our target is to be launching it next year. It's a bit early to give you the exact GDV, but because there is some amalgamation of plots also to be done, certain new acquisitions also going on as we speak. So I think it's a bit early to give you the exact thing on the GDV, but maybe in due course we will be giving out the exact numbers.
Well, that's understandable. Now, considering the overall real estate sector, if you look at the pricing growth, there have been reports suggesting that this is expected to stabilize to a single-digit growth versus the previous peak seen earlier. Even you've reported a double-digit growth with realizations at about 50,000 square feet of level. How do you see the pricing level going forward and its impact on launches for the next 1 to 2 years?
So I think pricing overall as an industry, it has gone up in the residential segment. Our average realizations, if you see our quarter-on-quarter numbers also has gone up. But it's a fine balance which we have to strike between velocity and pricing. So our target would be velocity because the pricing realization in the areas we are operating are already good. We already stand with a good margin. So velocity is key, and also to make sure that we launch all our projects which is planned for the H2. So I think cash flows real estate is entirely a cash flow game, and I think that's why we'll go with the velocity.
All right, well, that's Swaraj Estates and Developers. But with that, it's a wrap on this edition of Small and Mid Cap Show. Keep watching NDTV Profit. We'll be back in just a bit.
I truly believe that this is not only India's decade, but India's century, because of several radical reforms that India has carried out, structural reforms, digitization, the focus on infrastructure, and it is going to be India's century. And I really compliment NDTV for launching the NDTV World Channel. This will enable us to take the message of India to the rest of the world.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards...
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that'll help you move with the tide.
An unmissable trade.
If you want to be in the money.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Lord Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Hi, good morning. Thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew, and with me is Mahima Vachrajani. I thought I'd gotten through the opening just right, but then I stumbled at the end. Mahima Vachrajani, and we will take you through the next 1 hour of trade. And it feels a little better to be introducing the show today because finally we have a break in the selling. And we have the equity markets that are trading in the green as I speak to you. Let's pull up the Nifty 50 and see where it's currently trading. Not very big gains, I must say. Just about 0.5% or so, but very close to the high point of the day. What is more interesting and what is more heartening to see is the fact that the broader markets, you're not seeing as much selling, right? So you're seeing the mid-cap index that is currently gaining about 0.9% or so, and it's rebounded very sharply from just about 10 o'clock. If you see on the screen, even the small cap index trading with gains of about 1.4% or thereabouts. The question is, do we continue to see this kind of strength in the remainder of the session? That really remains to be seen, because even in trade yesterday, in the last hour of trade, you saw quite a bit of frenetic selling that saw the benchmark index also lose about 1%. So as of yesterday, from the high point for the small cap index, we're down about 7.5% or thereabouts, and the Nifty 50 was down as much as 6.8% yesterday, so we recovered somewhat from that point. But let's take a look at some of the key movers today, and the indices will give you a bit of flavor as to what's moving. IT clearly leading the pack and doing quite well for itself, up about 2.5%, 2.7% now. In fact, you have metals that are doing well, media, auto, as well as finance that is doing well, but the Nifty Bank is lagging behind. It's just about flat in trade right now. Not doing too much, and energy is the one pocket that is underperforming. Now there are several individual names that are moving very sharply. I'll name just a few of them. Amber Enterprises on the back of earnings doing incredibly well, 17%. You have Hyundai Motor, which is up about 4%. You have Paytm on the back of an update and the NPCI approval for onboarding UPI customers. It's up about 9.6%. A couple of brokerage notes also coming through that are positive on Paytm. But M&M Finance is not done too well. On the losing side, you have M&M Finance is losing about 2.4% off the low point of the day, but on the back of earnings. And a little pain in the microfinance space is what the issue is. Bajaj Finance, I was quite curious about this, Mahima. It's up as I speak about 6%, and of course it was being pointed out by Harsh just a short while back that it had gotten beaten down quite a bit as of yesterday, and yes, there were certain issues on asset quality, but by and large it's met estimates.
Absolutely. So in terms of numbers, by and large, they are in line with the estimates overall. Credit cost was the only dampener in the result. However, the stock is reacting positively otherwise to the results. There has been adverse guidance as well on the credit cost, and most brokerages believe that the worst is likely behind now. In terms of the numbers, net interest income has gone up 23% YOY and 6% around QOQ. Operating profit has significantly gone up 25% by YOY, which is quite a significant jump, and QOQ also it has gone up by 5%. Provisions are up around 13% QOQ, and PAT overall has gone up 13% YOY and 3% QOQ. Now ROAs, however, have taken a slight hit. It's at around 4.48% versus that of 4.63%. So down 15 basis points QOQ. Gross NPA is up by around 1.06%.
No, it's up by 20 basis points to 1.06%.
To 1.06%. And net NPA is up by just 8 basis points. So that's the overall picture. Plus loan loss to an average AUF is at around 2.16% versus that of 1.99%. And AUM has seen an uptick of almost 29% YOY and 6% QOQ. So overall numbers are looking good. The guidance on credit cost is the only thing which is a damper.
And ultimately that is what the NBFC space has to watch for. Saurabh Jain, Equity Head Research at the SMC Global Securities, and Ayush Mehta, Technical Research Analyst at Nirmal Bang, joining us this morning. Thank you so much, gentlemen, for taking the time. I'll come to you first, Saurabh, on Bajaj Finance. What do you make of the numbers? And were you concerned at all with the guidance on credit costs going up to as much as 2.05%?
Hi, good morning, Alex. I mean, certain factors that company has already elaborated is that on some parameters they have done good. On the cost of deposit sides, the company is not that happy. And one thing which I think market would have liked is that the company has started, has worked a lot on the customers which have 3 or more live unsecured loan, because this is the basket where delinquencies rise a lot. In the second quarter also, the company has seen same kind of a phenomena. The delinquencies have risen, and that is why we are seeing that PAT coming at a growth of 14%, while pre-provisioning operating profits shown growth of 20-25%. So in that sense, I think there is a bit of concern on the cost of deposit on the credit cost side, but I think the valuations are close to where where they were in the 2020. So valuation comfort is there, and growth is coming back, and the management is saying that things will be better going forward.
Right, so there is valuation comfort and growth is coming back for Bajaj Finance as per Saurabh.
I'm so sorry, Saurabh, do you want to complete that view? Is it a buy according to you at this price? At what level would you accumulate Bajaj Finance? And what is the upside potential that you see right now?
I think I'll put that the downside is protected. It is a value buy. I mean, one can accumulate the stock for the long term, and once the things start moving up, in which the management has said, and then we'll see some kind of a re-rating in the valuation too, and that is the time when we'll see good gains coming in.
Got it. So value buy for Bajaj Finance is the view coming in. Viewers, just for viewers' context, to ask your queries, you can WhatsApp us on the number that is flashing on your screen right now. Moving on, let's take the first query of the day. It's from Raj Shekhar, who's from Bangalore. He's bought Hudco 500 shares at 116 a piece, and he's not sold it when it was at its peak, and now it's falling every day. That's his question. Now, he has made significant amount of profits, is what he's saying, but he wants to understand whether to keep holding that, sell or purchase more. So Ayush, I'll come to you with this one. How does Hudco look to you on the charts?
Well, talking about Hudco, definitely it has retraced a lot from the higher levels of approximately 353. It had made a higher in approximately July month and currently trading at around 203. But the important point to note here, it is currently taking a support of its previous support. So I think this 200 rupees level is a very important support zone. If that is broken, then I would recommend to book some partial profits and re-enter Hudco at around 150, 170 levels if they get the chance. Otherwise, below 200, you should book a profit there.
Okay, all right. So that's the view on Hudco. It's down about 34% in the last 3 months or so. Let's talk about Tanla Platforms, and this is a question from Ankit. He's writing in from Hyderabad, and the stock is currently trading at 756. He's got the acquisition price is 1,100, which is quite significant and quite high. He's asking if the question is being asked right now? I'm responding yes. Ankit, hope you can tune in time for the answer. Saurabh, on the fundamentals, would you say that he should hold on to this? Should he buy at this price? What should he do?
I think it is a small company in the IT category. Not all companies are doing that great, and market is not, perceiving that there is any kind of a turnaround in the on the operational side, and that is why we are seeing that the stock is tanking. I think it is better to get rid out of the stock in case you find any kind of a rally.
All right. The next question is from Ajmal, who's from Chennai, and he wants a long-term view on Waaree Renewables. So Saurabh, I'll come to you for this one. Long-term view, and especially, today is the last day of its parent company's IPO subscription as well. If you have a view on that also, it would be great to get a view on that as well.
I think it is the space in which the company works is in. It is a space of interest for everyone. I think the sector has a tremendous potential going forward, and that is why we saw some very good re-rating coming in the Waaree. And essentially, the parent company is garnering a lot of traction. The grey market premium is close to 100%. I think it is good to apply in that IPO.
All right. But any view on the listed stock right now? Would you buy into Waaree Renewables right now?
I think the interest, in my opinion, will shift to the parent company now.
Okay, all right, fair point. Manoj from, I'm going to actually take this next. Abhishek Bhatia has got the next question. National Fertilizer is the name that he's talking about, and he's bought an average price of 134. The stock is currently trading at 108 or thereabouts, and he's asking for an update as to what he should do with this. On the technicals, Ayush, would you suggest holding on at this point?
Well, talking about NFL, so NFL has again shown some strong profit booking from the higher levels. The important support zone of this stock is at 105 rupees. That is on the closing basis. If there's a closing below 105, then he should definitely exit. But I'm expecting a bounce back at around those levels, and Sensex should give a bounce back here.
All right. Well, the next question is from Manoj, who's from Bangalore, and he wants to know, he wants to have a long-term view on Ujjivan Small Finance Bank for the next 3 to 5 years. He's holding around 500 shares that he bought at 42 rupees, and currently his loss stands at roughly 1800 rupees. So, Saurabh, your view on Ujjivan Small Finance?
I think it is a very small NBFC, and the market is not happy with the company's growth. And there was always a question pertaining to the asset quality. The delinquencies in the past have risen a lot, and that is why we saw that the stock got beaten down heavily, and it has underperformed if you compare it with the any other good NBFC also. So, in my opinion, I think it is better to get out of it.
Yeah. All right. I'm just curious about what you say about the technicals. I know we took a view on the fundamentals of Tanla Platforms just a short while back. Ankit is asking whether or not it makes sense at all on the technicals. Ayush, can you take a quick look at the charts and see whether a sell at this point is the best price? Is there a better price that you can suggest?
Well, I think Tanla platform has broken all the support zones here, and even today it is not performing well. Despite there's a bounce back in the market, even I feel he should exit from the stock.
All right. Well, the next question is from Guru, and he's asking whether this is the right time and right price to buy ABFRL. Well, lots going on with the company. Company has demerged its premium segment. It's also acquired TCNS Clothing. But I think from a technical perspective, is this the right time and price to buy the stock? Ayush, your view?
Talking about ABFRL, it is on the sideways move right now on the long-term charts, but the stock is currently taking a good support of its. There's a good support from 295 to 300 levels. If we can hold it with a stop loss of 295, then definitely it's a good buy, and you can average it around 300 as well. But 295 will act as a very important strict stop loss for this stock. Again, we can see the higher levels of 365 in this, so I think you should buy it from this levels.
All right, Bajaj Housing Finance, recent listing and a stock in focus. Jaishil Amin is wondering whether this is the right price to buy it at. Saurabh, the results came out yesterday, assets under management crossing that 1 lakh crore mark, but the loan growth wasn't very substantial, right? And Okay, the space is interesting. It's not, at least it's not as worrisome as the unsecured side. So would you suggest a buy at this price? And what is the long-term prospect that you would talk about?
I think long-term prospect for the Bajaj housing, it looks good to me. I think the company has shown consistent growth and above average the industry growth in the past, and the recent results are no different. I expect that similar kind of a growth to continue. On the valuation side, I am not feeling that comfort because, the IPO came, and after the IPO, there was a good listing, good premium has already been there. So I would rather suggest to wait for corrections and buy in a staggered manner.
All right, the next question is from Satya, and he, his question is very particular. He wants a view on Meghamani Organics. He's bought it recently at a price of 114, and he wants a support as well as a resistance level for the particular stock. And he's also asking, if not this, should he switch to Reddington? Ayush, your view on both of these? How do both of these look on charts?
Let's talk about MOL first, that is Make Money Organics. Make Money Organics has performed really well in recent times, although due to the market pressure, we have seen some profit booking from the higher levels of 115, although the stock is looking positive at the current levels as well. It is taking a good support of a upward sloping trend line. So definitely, if someone wants to buy the current levels, can definitely buy at these levels. I'm expecting another 120 rupees in this stock. And if you're talking about Reddington here, Reddington long-term chart is weak, although it's trading in the upper channel, but it is currently near the support zone. And if you get it on 160, then I think that would be an ideal buying zone for Reddington. So we should enter Reddington at around 160 levels, and MOL can be bought today.
All right. The next question is on, Make Money oh no, this is already done. All right. I want to take this because I'm asking for more clarifications. Hemendra Nanavati is written in, and this is the kind of question that I love to take because the kind of valuation or the kind of value increase that they've seen, the wealth creation that they've seen is absolutely phenomenal. We've got Hemendra, who's bought Thermax at IPO price in 1995. He's got 1,000 shares. He says he thinks that the IPO price was 190 rupees for 10 rupee face value. I was asking for a little bit of a clarification there, but the stock has gained, get the 17,428%. Now try and calculate how much of a gain that is. He's sitting on, so he's saying his initial 200 shares has become 1,000 after the split or after corporate action over the years. And now he's wondering whether to sell at this juncture. I'm assuming he's in no rush. So sort of from that perspective, would you take money off the table? Would you reinvest it elsewhere for a stock that has done so incredibly well for this viewer?
See, yes, the stock has done incredibly well, and this is a very good company. But I think when he has asked that it is a good time to book some profit, in my opinion, maybe he may be in need of some kind of a money. So I would rather suggest that maybe you can take some money off the table because the kind of a growth that is now expected from the Thermax is close to 15-20% kind of a CAGR. And the valuation here are quite expensive, never seen in the past. So it's a very good bull run for the capital good companies that we have seen. And from the last few quarters, it is oscillating in a range only. So if you want to take some money from the table, maybe 20-30%, yes, you can.
I think it's really commendable, the kind of patience that he's had. And
exactly.
This is way before even I was born. So
okay.
It's very interesting.
You can speak for yourself, okay? I'm not that young. Unfortunately, I wish that I was, but then no.
But,
all the gray, you can't see the gray hair. It's all there. 1995.
But kudos to Hemendra for having so much of patience and holding the stock. And of course, he's getting such profits and he's getting that as a reward. But moving on, the next query is on IDFC First Bank. He's bought, so this is from Akash Katyan, who's from Pune, and he's bought 525 stocks of IDFC First Bank at a price of 85.2. And he wants to know a long-term view, and he also wants to know whether he should add more to his portfolio or not. Saurabh, I'll stick with you for this one. Your view on IDFC First?
I think we have a constructive view on the banking stock. Maybe there is some kind of a pressure because of their on their net interest margin and higher cost of deposits, and the credit growth is not happening normally it doesn't happen in the first half of any of the financial year, and it starts growing in the second half of the financial year. So in case of IDFC, I think the balance sheet is quite good and the valuations are also comforting. The bank has made quite a lot of progress in the last few quarters, and it makes a case to for a hold in case of IDFC. I think if you want to buy some more, you can surely buy some more, and maybe we'll see some kind of activity resuming in again when we jump into the fourth quarter and when the budget is likely to come. So maybe some kind of activity we'll see firework in the banking stocks.
Interesting. The update coming in at the bottom of the screen, government to review scrapping of windfall tax on crude. This is the tax that is levied on oil, the oil explorers. So ONGC, let's pull it up. It's reacted somewhat, 0.6% or thereabouts. Remember, it was put in place by the government to look at a situation where crude oil prices were moving up very sharply, but they have been benign in the recent past, and you've had, in fact, crude oil prices hover around that $74, $75, $73 per barrel mark. I'm talking about Brent here. So it's been benign despite the fact that you've got geopolitical tensions, but all the same, it would be a positive in the event that there would be a removal, if at all, of the windfall tax. Bandhan Bank is the next counter that we're talking about. 238 is the buy price, and we've got Kishore who's writing in, and he's wondering whether to hold on to this. Is this the right time to buy more, and what amount can be bought at this point? The stock is currently trading up about 3.5%. Certain developments, Ayush, based on the quarterly update, if I remember correctly, and since then it's done reasonably well for itself. What would you say should be done in the charts right now?
So while talking about the charts of Bandhan Bank, the charts are looking a little bit weaker here. It has given a breakdown, but the monthly closing is very important here. If we get it below 180, then definitely it's an exit, because I can see more downside in the stock. The bigger upside will be only seen once the stock crosses 215, which is the monthly downward sloping trend line. If that is broken, then we can see higher level as well. So 215 is the make or break level, and the monthly closing 180 is a very important support zone. So if that is broken, then you should exit on monthly closing basis.
All right. So that's the view coming in on Bandhan Bank. The next question is from Suresh. He wants to understand if this is the right time and right level to purchase Suzlon. And this is from a long-term view. I think a lot of people want to know after the kind of run-up the stock has already seen. Saurabh, I'll come to you with this one. Do you think it's the right level to buy Suzlon from a long-term perspective?
I think it is a good company. The company has shown some kind of a turnaround, and so does this stock price. The valuation now is at the premium higher side. And in this market correction, we have seen some kind of a good selling coming in the stock price also. I mean, you can certainly go with the company, but I think the price is certainly higher. In case we do like utilities, similar segment, I feel that money can be made in the companies like maybe Satluj Jal Vikas Nigam or NHPC.
All right. The next question we're taking is on Cochin Shipyard, and this is a question coming in from Braj Kishore, who's writing in from Visakhapatnam. He says he's 45 years old. He's bought at a price of 1,400, and he says that he wants to hold this for the next 1 to 2 years, which he has defined as a long-term period. Saurabh, on the fundamentals, would you suggest holding on? It's been under pressure. It's been under pressure in the last couple of sessions, yeah.
Fundamentally, there is no problem with the company like Cochin Shipyard. They have good contracts and good revenue visibility. It's only that these stocks got re-rated, to the extreme in the last 2-3 years. It is the valuation which is now which was at high premium, because of which these stocks are cracking down. I think 1 year period is slightly less. I think you should have a horizon of 3 to 5 years. Maybe the stock, if the correction in the broader market continues, this stock can further fall down. So it is always good to buy a good company at a good price. And since this company doesn't look cheap at this juncture also, So it is better to accumulate in a staggered manner.
All right, so it's an accumulate for the stock. I think the stock has just taken the beating since its OFS. Otherwise, for an year, it's been up around 106%. So good stock anyway. Well, the next question is from Saranya.
I think we should take the next one, IEX. It's
right.
a shorter term question and
All
it's
right.
going to be in focus because of the earnings today as well.
Right. Got it. So the next question then is on IEX and that's from Gotham. And they want to understand that they're holding 150 shares of IEX bought at 210. Should I hold or should I exit? So this is more of a technical question. So I'll come to you, Ayush, on this one. Your view on how IEX is looking on charts.
So talking about IEX has a very good rounding bottom formation on its weekly and monthly chart. But 175 is a very important support zone for this stock. If that is broken, then we can see more downside towards 140. So I would recommend to hold it with a strict stop loss of 175 here.
All right. The next one is on pharmaceutical company Cipla. Saranya is asking. She's wondering whether to buy for the next 3 to 5 years. Saurabh, a lot's been said about the pharma pack as a whole and whether or not it's an opportune time to, ahead of time, get into this before a full-blown recovery comes through. Already some of these names have seen quite a bit of interest over the last 6 months. Would you suggest that Cipla is a good buy?
I mean, the pharmaceutical sector per se is looking good to me. There are many stocks which are doing good. For example, the IPCA, maybe Natco Pharma, Alembic Pharma, and Cipla is no different. I think the stock got re-rated lastly because of some news that the promoters are willing to sell, but that news doesn't materialize, in my opinion. So some kind of a premium has already been built in the stock price. So in my opinion, I think it is better to wait for correction. And if you want to go into the pharmaceutical pack, I think Natco, Alembic, IPCA offers better opportunities.
All right. On that note, we have to slip into a very quick break. Saurabh, Ayush, do stay with us. We'll continue queries on the other side. Viewers who've already written in, do stay with us. And if you are thinking of writing in, by the way, let me quickly pull that number across the screen and you can send your questions to us in the break and we'll be back on the other side to take more of them. So do stay tuned.
This Diwali, embrace the spirit of new beginnings.
A time for fresh opportunities.
Bold ambitions
and renewed dreams.
See the world through a brighter lens.
As you turn your efforts into profits.
Transform your goals into wealth.
And spark joy in your journey
towards happiness.
1, 2, 3, 4.
This festive season.
Let money work for you.
And light up your future with prosperity.
Let's celebrate growth,
wealth,
and true happiness.
Profit Wali Diwali.
NDTV Profit's first Diwali.
From our home to yours.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Long Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Long Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay.
Welcome back. You're watching Ask Profit, a show where we answer all your stock related queries. For the viewers who just tuned in, you can ask all your stock related queries, whether they're fundamental or technical, on the number that's flashing on your screen. And moving on, we'll take the next question. The next question is from Ribin Dev, and he wants to know whether this is the right price to enter SBI or not, or should he wait for another price decrease in the stock. Ayush, I'll come to you with this one. Your view on SBI, how does it look on charts?
Well, SBI has taken a good support of its 200-day moving average in today's session, and it has shown a good bounce back. So can buy SBI at the current levels for a target of 820, and the stop loss should be at 778.
Was that a slip of the tongue, or do you actually mean HDFC Bank? I'm just curious. Ayush, is it also a buy on HDFC Bank?
Well, definitely HDFC Bank is definitely a buy. Even yesterday's market, it has held well, and today's market also, we are seeing a good rally. Definitely should buy HDFC Bank for a target of 1800 here.
All right. So I'm coming back to you on the next one. This is on Unicommerce e-solution, which we've got Leena. She's asking a question. She's writing in from Kolkata. She's bought at a price of 200, and she's wondering what kind of a target can she expect over a period of 6 months to 12 months. Ayush, do you have the chart in front of you?
Unfortunately, I don't have much data on this stock.
Okay, fine. Take care. Saurabh, any view on this particular counter? And it's a relatively short holding period that is being planned, 6 to 12 months. What's the view?
Alex, I haven't seen this company.
Okay, no, that's a fair point. Let me take the next question then. And sometimes this is going to happen if you are invested in small companies. Do bear in mind, we can't always get your view. IndusInd Bank is the name of the next counter that we're talking about, and Shyam Gopal from Hyderabad has bought at a price of 1,406. He's wondering whether to hold or exit at this point. The stock is currently trading below its buy price at 1,281. Ayush, on the technicals, what's the view on IndusInd Bank?
Well, IndusInd Bank is currently trading in a downward sloping channel, and it has broken the downward trend line of that channel, and it is currently trading below that. If we see a bounce back at around 1300 levels and the closing is above 1300 levels of this October month, then definitely we can expect a bounce back. If there's a closing below 1300 levels in the monthly closing, then definitely you should exit from the stock.
Well, the next question is from Amit Pathak. We already took a funda view on Suzlon, but Ayush, I'll stick to you with this one. He wants a suggestion on Suzlon. How does Suzlon look on charts to you? He's made a significant profits already. Around 1,11,000 are his profits currently. So going forward, how does it look on charts?
Well, talking about Suzlon, we do not have a very concrete recommendation on Suzlon, but looking at the charts currently, it has taken a good support of the 100-day moving average, and on the daily chart, it has formed a good double bottom formation. So I think it should give a bounce back here till the levels of 75. So I think you should hold it with a strict stop loss of 64 here.
All right, let's pull up the next question, and it's from Kaushik, who's writing in from Pune, and he's asking about IDFC First Bank. And quite a few people have talked about the fact on this program, Saurabh, on the fundamentals, they are positive on IDFC First Bank. But Kaushik has bought at price of 80, and he's been averaging, he says, for some time. The stock is currently trading at 67 or thereabouts. Would you suggest that he holds on?
I think my view remains the same. In a few minutes back only, I said that it's a good bank. Quarter they have shown good amount of progress. It is a stock which you can carry for next 2, 3, 4, 5 years. And one thing I would like to mention is that if he is keep on averaging, one should remember that a particular stock should not be in your portfolio of more than 6 to 7% of your portfolio value. So that should not be the case. Ideally, you should not buy one stock more than that. That is the only point I want to make.
Right. I think we should declare today as the banking day. We've got a lot of queries on the banking sector. But well, the next question is from Mahesh Babu, and he wants an advice on Sula Vineyards. Now he's bought
That's as far away from banking as you can get.
Well, it's the festive season, some festive stocks probably. So he wants an advice on Sula Vineyards. Bought it at around 502, and he's bought 100 shares. Currently, the stock is trading at 417. So I believe that he is, incurring some losses. So he wants to know whether he should keep holding it or sell. Ayush, I'll come to you on this one. How does Sula Vineyards look on chart?
Well, the chart of this stock is slightly on the weaker side. It has taken a good resistance of its downward sloping trend line and everything. So looking at the charts at the current levels, by taking RSI and everything into consideration, the stock is definitely weak at the current levels. Should definitely exit from the stock.
All right, Murthy from Hyderabad has got the next question, and he's asking, okay, it's a specific question to the news break that you saw on the bottom of your screen. I'm going to ask Saurabh to take this, and I did mention the oil exploring companies will stand to benefit from a scrapping of the windfall tax in crude. Will it be a sizable benefit though, Saurabh?
I think these windfall gains were levied because these companies were enjoying higher realization because the crude prices were higher. And now that has not been the case. If you see, the crude has already fallen into $70 and these companies are not making any extra bit of money. And that is why there is no point of government going with the windfall gain tax. That is not certainly now a case. So that is why the government has removed it, and I don't think so. It will be any trigger for stock prices to rise. In case crude oil prices marches upwards, then it makes sense to chip into the upstream oil marketing oil companies.
Well, the next question is from Rajesh, who's from Andhra Pradesh. He's bought Sai Silks limited stocks at rupees 203 per share, and he wants to understand whether it's good to hold or sell or buy in correction. So Ayush, how does Sai Silks look to you on the charts?
Yeah, so talking about Sai Silks, the stock is definitely doing well. Though because of the correction, we have seen some profit booking in this stock. So we should definitely hold this stock. We do have a buying recommendation from our fundamental team as well on this stock. Should definitely hold Sai Silks. The first minimum target we're expecting is $200, and if that is seen, then we can expect the higher levels to 240 as well. But it's going to take some time. So I want I would recommend to be patient and hold stock.
All right. We've got the next question to talk about. Did we take Reliance Industries? No, right? Okay, so Reliance Industries is the name of the counter, and I would suggest everybody who's tuning in to tell us their name. Okay, I don't know who's asking this. We've got Reliance Industries bought at levels of 3,062 at 150 shares bought, and this is a slightly elevated level. Recent correction or drop in the stock price of as much as 10% or more. Saurabh, I'm curious what you make of this, and would you suggest buying at this point, holding on? What's the view here?
In my opinion, Reliance Industry will always remain a portfolio stock. I mean, you can invest this company for years to create wealth. At some point in time, it runs, and some point in time, it just makes consolidation. I think in the last annual general meeting, there was the expectation about any kind of announcement on the demerger side. That didn't materialize. I think that disappointed the market. I think the major trigger will now come into the ending of the financial year when their chip making facility will get inaugurated. In my opinion, I think it is not. This is not the best time to invest more money. I mean, in this stock, if you have a plan, say for the next 3 to 5 years, then it makes sense. You can accumulate at these prices.
View coming in on Reliance. The next question is from Ajay Kumar, who's from Punjab. Now he wants a view on Tata Steel. He's bought 250 shares at 165 a piece. He's not mentioned whether he wants a long-term view or a short-term view. So Ayush, I'll come to you on this one. How does Tata Steel look to you on the charts?
So talking about Tata Steel, we've seen some pressure in the metal stocks where Tata Steel is also seeing some profit booking from the higher levels of 183. Well, it has broken an important support zone of 153 and it's currently trading around that levels. The next support zone will be at around 140, but overall the stocks look positive. It is taking good support of its trend line. So I think we should continue to hold this stock, and there's going to be higher returns in the future for this stock.
All right. We've got a question on Equitas Small Finance Bank. We've talked about one small finance bank. I think it was Ujjivan Small Finance Bank earlier on in the show. Manoj Gupta has got this question. Did you just ask about this? No, right? All right. So 85 rupees. Sorry, I'm a little distracted because looking at the market and looking at the screen as well. But 85 rupees per share is the buy price. 1,000 shares have been bought. The question is, should they hold on? 68.5 is the current market price. Ayush, what's your view on the technicals?
Well, the stock is looking very weak. It is continuously taking the resistance of its downward sloping trend line. Should exit from the stock at the higher levels, or maybe once it crosses 70, you should exit the stock.
All right. Well, the next question is from Sunil, and he's holding 300 shares in JK Tyre at an average price of 165 per share. He wants to understand, should I continue to hold or add more? Ayush, your view on how JK Tyre is panning out on charts?
Well, JK Tyre is currently trading it near its support zone on a weekly chart and as well as monthly chart. So definitely should hold it. Once the stock crosses 400 levels on the closing basis, we can see higher levels towards first target will be 435 followed by 450. So should definitely hold this stock.
All right. The next question is JK Tyre. So JK Tyre is done. We've got NBCC, which so Birla Corp is the next counter. George has got this question. He's got 100 shares which he's bought at levels of 1,432. The stock is currently trading at 1,143, given up a little bit of ground. Hold or sell is a question. On the technicals, Ayush, do you recommend that he hold on?
Talking about Birla Corp, it is currently going to test its support zone, which is at around 1100 levels. So till the time it is holding 1100 levels on the monthly closing basis, should continue to hold this. Once that is broken, then you should exit from the stock.
All right. Well, the next question is from Anbu. This question is particularly on NBCC. She's bought it at 102. And she wants a view whether she should hold or sell the stock. Ayush, your view on NBCC?
Talking about NBCC, it has broken its 200-day moving average on the closing basis, and even today it has taken the resistance of that level. So I recommend here to exit from the stock. And if someone wants to re-enter once it crosses 102 level on the closing basis, then should re-enter again. But I think for now we should exit the stock.
All It's time, gentlemen, for the rapid fire segment, and this both of you all are familiar with this. We'll take as many questions as possible over the course of 2 minutes. I'd request you to keep your answers as short as possible. The first question is on Marksans Pharma, 300 shares bought at 37 rupees per share. Govind Bhatia from Dubai is asking whether it should be held on to on the fundamentals. What's the view, Saurabh?
Hold it.
Hold is the view. Dhampur Sugar is the question that we're taking, and PJ Sharma is asking whether it can be held on to. 228 is the buy price, slightly elevated. Ayush, on the technicals?
Hold with the stop loss of 190.
Okay. Tata Motors bought at a price of 944 rupees per share. Can it still be held at this juncture is the question. I don't think that there is too much of a rush to sell. So, Saurabh, on the fundamentals, would you hold?
Fundamentals are weak now. Better to exit.
Okay, exit. Rao from Guntur is asking about the same counter. So it's a 1-year time frame. Bought at price of 980 Tata Motors. Ayush, for 1 year, would you hold or exit?
No, I would exit it.
Okay. Steel strips wheels, not a counter we talk about every day, but it is in the auto anch space. It makes essentially your strips for the wheels. Bought at a price of 220. Abhishek from Delhi wants to know a long-term view. Saurabh, what's the view?
Good company, hold it.
Okay, Raghavendra from Belgavi in Karnataka is asking about Rajdhani Metals, which he's bought. Okay, I'm going to avoid that question. DCB Bank I'll take instead. 117 rupees per share, 68 shares bought. Ayush, on the technicals, would you hold DCB Bank?
Hold with the stop loss of 109.
Okay. NHPC, Yelahanka, Ravi from Yelahanka in Bangalore is asking about this. Bought at 99 rupees per share, 1,100 shares. Would you hold on, Saurabh, on the fundamentals?
Hold it for next 2-3 years.
Okay, State Bank of India, we've already, I think, taken a technical view on the fundamentals. Would you hold, Saurabh?
Yes, it's a hold.
But is it a buy?
You can accumulate.
You can accumulate. Prabhakar is asked that question. So I think we've gotten quite a few questions answered. Saurabh as well as Ayush, thank you so much for joining in and for answering all of the questions that you did. Always a pleasure having you on the program. And that brings us to the end of this particular edition of Ask Profit. Thank you so much for tuning in. From Mahima and myself and the team that put the show together. I keep doing this. I keep nearly ending this. Thanks.
I thought you might say segment,
right.
but
yeah, thank you. Okay. Unfortunately, I've gotten so used to ending this show at the end of the rapid fire segment that I nearly ended the show. And thank you so much, everyone, for telling me we're not ending. All right, let's talk about Zomato, because that really is one of the stocks in focus. Forgive me, my brain goes into autopilot mode sometimes. The stock is recovered from the low point of the day, up about 0.6% or thereabouts.
Yes.
And it's on the back of earnings. The question that I have, Mahima, beyond the earnings and whether or not we should look at it sequentially or on a year-on-year basis, the question that I have is, it's got over 10,000 crore rupees in cash. And it's planning to raise 8,500 rupees through a QIP. What's it going to do with all the money?
Absolutely. So a couple of things, which are kind of raising concerns for Zomato are one of these things that you rightly mentioned, that they are already sitting on a cash of roughly 10,500 and they're still raising 8,500. Now what the management has said is that they want to strengthen their balance sheet further, which is why they're raising this kind of cash, and they'll be using this cash for further infrastructure development. So I think we'll have to wait and watch as to how this cash will be utilized overall. But, certain things to point out. Firstly, why the stock is recovered. The possible reason could be that they have hiked the platform fee just, a few hours ago because of the festive season. So yesterday, if you had put an order on Zomato, the platform fee was 6 rupees. But today, it's almost 10 rupees. So in terms of percentage, that's a significant hike of 40%. So I think it's because of that that the stock is now turned positive. It was down almost 4.6%. During market open, but it's recovered from that and it's up around 0.5% right now. In terms of overall performance, Q2 was not very bad though for Zomato. Food delivery, quick commerce, all of these grew in high double digits, even high triple digits for quick commerce. HyperPure, another segment which is really auguring growth for the company, grew around 98%. So good growth there as well. District app will go live in the next 4 weeks is what the management has said.
So the platform fee is what right now?
It's 10 right now. It was 6.
Wow, it's moved up. It's practically
yes.
doubled. And Swiggy's what?
And Swiggy, if I'm not very sure of that, but I think I'll check and definitely get back after the next link.
Okay,
probably.
so you owe me something at
definitely.
lunchtime, and I'm going to hold you to that. But in the meanwhile, we have to move to breaking news. The government has warned social media platform X.com, which is the former Twitter, that allowing bomb threats to be posted on the platform could amount to abetment to the crime. It's quite a big statement to make, and this was discussed at a virtual meeting between officials of the Ministry of Electronics and Information Technology, or MEITY, airlines and representatives of those social media platforms, X and Meta, were at that meeting. Aishwarya Jain from NDTV 24/7 is joining us with the latest updates here. Aishwarya, what can you tell us? It's obviously a developing story, and the government taking a hard stance here.
What we have been told is that last night, Joint Secretary METI Sanket as Bonway had conducted this meeting. He chaired that particular meeting yesterday night and called the social media platforms X and Meta as well. The airlines, which includes Air India, Vistara, SpiceJet, also were called, and certainly they were asked as to what actions they have taken on such social media handles from which the threat calls were received, and also there were the social media post that was done as well, to which they were pulled up. According to our sources in this particular meeting, the Joint Secretary went on to extent of saying that the present situation amounts to social media X writing crime, and they did not took any of the action against such social media platforms. Apparently, these platforms were identified by the government. Remember, there were several meetings which were going on in the past as well. The Civil Aviation Ministry has roped in all the agencies, including the Ministry of Home Affairs and now METI as well, to identify those individuals who are behind this. And had been several instances where we have seen that few people had been detained as well. And now a major step has been taken where a strong statement had been given by the METI that, the situation has amounted because of abetting crime of these social.
Thanks so much, Aishwarya, for getting us those details. Certainly something that we'll come back to you, of course, over the course of the day to get updates on. But there is another big update, and this is a setback for the edtech firm Byju's. It's coming from the Supreme Court. The top court has rejected the settlement between Byju's and BCCI. Varun Gakkar is joining us with the latest development here. This is really, Varun, the sticking point and the issue that Byju's has been facing in terms of staying afloat, right? It's been taken to insolvency court, and this is a development from that case itself, right?
Yeah, so in a big setback to the embattled edtech firm Byju's, the top court has set aside the NCLT order, or the NCLAT order that put an end to Byju's insolvency process back in August. Now, a little background to the case before we delve into the details. In August this year, the NCLAT approved Byju's settlement with the BCCI, thereby putting an end to its insolvency process. Now, according to this settlement, Byju's committed to settling its dues to the tune of nearly rupees 158 crores with the BCCI. Now, this prompted US-based lenders backed by Class Trust LLC to move the apex court against the NCLT-approved settlement based on the allegation that the money that was being used for the said settlement was siphoned from them and that the sources for this money was questionable. In addition, it was Class Trust's contention that Byju's owes it nearly rupees 8,000 crores and that the NCLT approved the settlement based on a meager amount of rupees 158 crores and put an end to the insolvency process itself. Now, the top court then heard the matter at length for nearly 2 days, and the judgment has now been delivered. In toto, the top court verdict essentially means that the insolvency process for the edtech firm will continue. And while setting aside the NCLAT verdict, the top court said that the NCLAT did not provide adequate reasoning while approving the settlement process with the BCCI and iterated that the due process of law was not followed. In addition, the court has directed that the settlement amount of rupees 158 crores needs to be returned back to the committee of creditors, and this money has to be retained in an escrow account. Now, the case has also been sent back to the National Company Law Tribunal for a fresh adjudication on the issue of whether the settlement was lawful or not.
The summary of this is basically that the insolvency for Byju's will continue. I mean, 8,000 versus 158 crores, that's, that's a very insignificant amount.
Yeah,
So
no doubt.
that's the Supreme Court verdict on that. And just a clarification, Swiggy platform fee is still 6 rupees for now. But moving on, the government is likely to review scrapping windfall tax on crude. This is as per reports from Bloomberg. Quoting the PMO advisor, he added that the imposition of windfall tax on crude oil has no relevance now. Vikas Srivastava, who tracks this space very closely, joins us with more details.
Yeah, hi. As you said, today a top government official here at the event at Biogas event in New Delhi spoke about this, that the government has started reviewing this windfall tax on oil and on crude oil. So basically in July 2022, government had introduced this after the Ukraine-Russia war. So the crude prices had crossed $100 at that time, and most of these upstream companies, especially ONGC and OIL, they started making a lot of windfall profits. To balance that profit, government had introduced it in July 2022. However, so basically if we talk about the windfall tax, it was almost as high as 30,000 rupees per ton, which was in September close to 1,850 rupees per ton, and recently it was reduced to zero. But what is more relevant and going to be more relevant would be if the geopolitical situation in Middle East increases or if it escalates, what will be government's stance after that? Because likely the crude prices may cross 100 once again. So would it be that government would again review the prices and look at windfall tax again?
Very important question to ask, and certainly something that has implications for listed companies as well. We spoke about a few of them, the oil exploring companies. Let's talk about Gujarat Fluorochemicals. It's another stock in focus, and Varsha is joining in to tell you what's happening here with the company. Varsha, what's the development here?
Well, hi Alex. So yes, a big development when it comes to companies. So Gujarat Fluorochemicals wholly owned subsidiary, that is GFCL EV, is going to raise 1,000 crore at 25,000 crore valuation. Now fundraise is led by Inox GFL and promoters and key investors. Now this fund will support the capex plans of Gujarat Fluoro in EV and ESS sectors. Now the key products that this company is going to manufacture is electrolyte salts, cathode materials, binders. Now all these chemicals are used to make lithium ion batteries. Now let's talk about the capex plan. So company is going to invest 2,400 crore of capex over the next 2 years. That's what they have said in the last con call, and they're aiming 2x asset turnover and at 25% EBITDA margin. And GFL also plans capex of around 6,000 crores over 4 to 5 years. Now there are also there's been engagement with global customers. They've engaged with 20 plus global EV customers, and the revenues from this are expected from second half of FY25. And lastly, if I were to talk about the market outlook, EV battery market is expected to reach at $300 billion by 2030.
Thanks so much, Varsha, for getting us those details. As we end this program, we are holding on to gains of about 0.2% for the benchmark index, and broader markets are also looking sanguine at this point. But that brings us to the end of this edition of Ask Profit from Mahima and myself, and this time we're actually ending the show. Thanks so much for tuning in. Do stay tuned. Lots more coming up over the course of the day, and this is NDTV Profit.
This Diwali, embrace the spirit of new beginnings.
A time for fresh opportunities.
Bold ambitions
and renewed dreams.
See the world through a brighter lens.
As you turn your efforts into profits.
Transform your goals into wealth.
And spark joy in your journey
towards happiness.
1, 2, 3, 4.
This festive season,
let money work for you.
And light up your future with prosperity. Let's celebrate growth,
wealth, and true happiness.
Profit Wali Diwali.
NDTV Profit's first Diwali.
From our home to yours.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Lord Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Lord Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Welcome. This is NDTV Profits Earnings Edge. We are taking stock of the quarter gone by for Can Fin Homes. It's been a strong quarter for the company, and it does seem like the stock is taking that into consideration, factoring the strength that we have seen in the quarter gone by. But let's take this up with the management. We have Mr. Suresh Iyer. He's the Managing Director and CEO at Can Fin Homes. Mr. Iyer, good afternoon, and thanks for taking the time out.
Good afternoon.
Well, Mr. Iyer, let's talk about growth, how you are seeing things, what is the trend, what are the trends that are playing on ground, and how quickly can we reach the 15% mark?
Sure. See, we've had a good disbursement in the second quarter. And in fact, in the first quarter also, it was good, but we had two zones, particularly, or two states, Telangana and Andhra, which were slightly soft for us. In this quarter, in fact, even the Andhra Pradesh has become positive, and we are seeing good amount of demand across the geographies. Mainly, our demand is coming in the 20 lakh plus segment, where we have seen growth in the 20 to 30 and 30 plus segment as well, across geographies. So that is what is pushing our disbursement growth, which has therefore helped us in improving our AUM growth from 9% to 10% in Q2. And going forward also, we expect that we should be able to continue this positive trend in disbursement which will help us further improve our AUM growth from 10 to about around 14% or thereabouts in the end of the year.
So, reasonable to expect the second half of this financial year will be the same as what we've seen in the first half?
In fact, normally it's a cyclical thing. The first half is about 45% of the disbursement and H2 is normally 55%. That's what is the general trend that is observed. So from where we are, we definitely see that the second half of the year will be much better compared to the first half.
Fair enough. So if you can also give us an idea on some trajectory when it comes to your net interest margins, how are things faring at this point in time?
See, in Q2, we've had an slight improvement in our NIMs, and it is at 3.75% is our NIM. And going forward, also we expect that the NIMs will be range bound, and we are given a guidance for 3.5% plus NIM, which we continue to hold.
Right, Mr. Iyer, can you give us an idea whether or not the mix in the disbursement is changing based on the various segments that you cater in at the moment? Are you seeing changes, or are you anticipating any changes going into the next couple of quarters?
See, we had already guided that our salaried segment is around 72% and self-employed is 28%. And we had said that we are a little comfortable even if it goes up to around 30-35%. So we are seeing a little bit of this, which is a conscious call that we have taken to slightly improve our SENP segment. Second, and also our housing segment, we are having the similar kind of a trend that we have a little scope to improve our LAP. So both in terms of the customer segment as well as in terms of a product, we are seeing a slight move towards SENP and a little marginal improvement in our LAP also.
All right. So can you also tell us and give us an idea about the ROAs right now, the return on assets, and is there any scope for a further increase, a rise in here?
See, ROAs, we are at around 2.2, marginally above that. So I guess we had said around 2.1 plus is what we are aiming at, and we will continue to hold the same guidance that ROA of 2.1 plus and ROE in the range of about 17 plus is what we are looking at.
So, investors in general are also curious to know about your plans with respect to branches. So where does it stand right now? The plans with respect to expansion in the number of branches going forward, and what does this mean for operational expenditure?
See, in terms of the branches, last year we had opened 14 branches, and this year we are targeting to add another 15 branches to that. And we are working on that. We've identified mainly branches in the north and the west, because that are the areas where we have a lower presence. About 28% of the business is coming from the northern and western zones. So we want to slightly improve on that. We are looking at tier 2 towns. So that we are looking at, these will help us more in the self-occupied residential property, mainly P plus C or plot plus construction kind of cases. That is what we are looking at in terms of the expansion, in terms of the branches.
All right. And so moving on, also want to understand this, there is some feeling on ground, and it's not just for your company, but in general, when it comes to the sector as a whole, that there could be a slight increase in delinquencies going down perhaps in the next few quarters. So what is your own personal reading here?
See, we have had, at least in Q2, our gross NPAs have come down from 325 crores to 320 crores. And in fact, we had last year the impact of restructured portfolio, but now we are seeing that even in the restructured portfolio, we are seeing some improvement, and we are witnessing recoveries in the restructured pool also. So going forward from a 0.88% gross NPA, by the end of the year, we are working towards somewhere in the range of 0.8 or below that. That is what we are targeting. So I don't see that NPA should go up from here or should see any further deterioration or any deterioration for that matter.
So that means that we won't see too much traction in increased provisioning going forward either. Would that be a fair assessment?
That is correct. We are looking at a normal year in which we are looking at about 10 to 12 bips in terms of credit costs. That's the guidance, and I think we should be there.
All right, sir. So there is hope, I wouldn't say expectation, but certainly hope that the Reserve Bank of India will go ahead and cut interest rates, and the expectation once again is over the course of the next 6 months, or rather hope once again. So under those circumstances, how long does it take before a company like yours can translate those into further cut rates?
See, we have a quarterly reset policy. So as and when we experience a reduction in our cost of borrowing and weighted cost of borrowing, we will be passing it on to our customers. So it's an annual, as we earlier had an annual reset, now we have a quarterly reset. So the transmission will be much faster for the customers.
All right. Well, Mr. Iyer, we leave it at that. Thank you so much for joining us and giving us all that clarity. Well, of course, that's Can Fin Homes doing very well in today's day of trade. We, in fact, have a lot of strength as well in Can Fin Homes. And, in general, of course, today itself on an intraday basis, it's advancing by around 5.5%. Well, a lot has already been said by the management with respect to their guidances, their indications on credit costs, in their indications or with respect to disbursements. And of course, they've also mentioned that, nearly 55% of your overall disbursement for the entire year happens in the second half, 45% being already taken care of in the first half. And it does seem like at the moment, considering we've already seen a little bit of a moderation in your NPA ratios, that of course always bodes well for the company, and because of that we are likely will not see, there's a lower probability of increased provisioning in the upcoming quarters. But let's take a look at how markets are faring right now. What we are seeing is a very, very quiet day of trade. And sure, while the Nifty trades with an advance of around 0.3%, we also made a low, and this low was, well below the mark of 24,400. But we've recovered, and as I've been mentioning, it is going to be crucial that the Nifty holds on to 24,500 on a closing basis, because the 50 daily moving average is just below 24,500. And should we see that traction, that positive traction coming in as far as Can Fin Homes is the Nifty 50 is concerned, well, you never know. We may either one see consolidation or perhaps about a short covering, which cannot be ruled out at the moment, considering we are certainly see that play out in some of your broader market stocks. And, in terms of a handful of gainers and losers too, we have plenty much else that is certainly working in and for as far as the markets are concerned. But from there on, let's address the earnings of Route Mobile. What we've seen is revenues on a sequential basis rising around 1%. We have seen your EBIT margins expanding by nearly 90 basis points to around 10.1%, and your net profit has risen around 32%. It's one of those quarters, once again, based on your net profitability, we are seeing a rise there. Let's get in the conversation going with the management of the company now. We have Rajdeep Gupta. He's a Group CEO and MD at Route Mobile. Rajdeep, good morning and thanks so much for joining in. Let's start with your assessment of the quarter gone by and how you're expecting things to pan out.
Thanks, Alan. Thank you for having me on your show. And I think, as we believe, Q2 always we have seen in past that it is a weaker quarter for us because of holidays in Middle East and European market. But in spite of that, we have done phenomenally well. If we talk about, we have achieved the highest amount of revenue ever in our history. So I think in terms of our assessment, we have done very well for the last quarter. There were a little bit headwinds in certain markets, especially in Europe. Our subsidiary MRM messaging, they have seen some kind of muted performance because of geopolitical issues in European countries. But apart from that, I think we are fairly balanced and well performed, and I think looking forward for this quarter now.
All right. Well, moving on, if you could actually tell me about what we can expect in the second half of the year as well. What are the areas that will drive growth moving in?
So if you see our strategic partnership with Proximus Group, the deal has actually consumed in mid-May this year, and we hardly have about 1 month of synergy, between the Telesign and Route Mobile. Probably this H2, we see that complete synergy between both the companies will be pan out in our portfolio, and we will have an advantage of working very closely with Telesign to get more revenue and more margin through them. Apart from them, I think we have also won some large e-commerce company based out of Asia, Europe. And we believe, I think that traffic is already started in our platform, and we do see a good traction happening with that customer. There are lots of large pipeline we have for our new product. And we believe that synergy between Telesign and Route Mobile, the kind of product which we have built on omni-channel, now we'll have a better market as compared to what we were selling it previously. Now we have access to Europe and entire North America, which will give us a more opportunity and more potential to sell our product in this market. And I think H2 will definitely going to see this kind of impact in our revenues.
Okay. Well, in the second quarter, you've spoken about your extended WhatsApp-based ticketing, which will include, of course, Mumbai Metro. The Proximus Group and Infosys have also formed a strategic alliance, and your company is involved there. Can you tell us a little bit more about these kind of specific developments and how they can actually, what kind of traction that can lead to the company for?
So last quarter, I think we have done two large partnerships. One is with Microsoft and one is with Infosys. And if you see, Microsoft is definitely looking out for lots of termination in emerging countries, especially with Latin, Middle East, Asia, and Africa. Route Mobile being a champion of this market, where I think most of the connectivity will be provided by Route Mobile, and we will directly see the advantage in our revenue coming through Microsoft. At the same time, we have also partnered with Infosys, where we will bundle a solution. We will go along with Infosys to all their customers wherever there is a CPaaS solution requirement. Knowing Infosys and their strength in telecom sector also, we believe our telecom product, especially on firewall as well as the CPaaS for the operator, will have a huge potential to work along with them. And it's a partnership where we both company needs to create a GTM together and go to the market and try to offer our solution to the existing customers of Infosys.
Moving and looking beyond, India at the moment, opportunities that you're seeing, what are the areas, what are the segments where you think that Route Mobile can cater to?
I think we are always very bullish about the digital product which we have, digital security product which we have built by Telesign as a company. And now we have access of the entire product stack, which we will definitely would love to take this product in the emerging countries where we have a very strong reach in terms of enterprise segment is concerned. And I think digital fraud is definitely one area where everybody is looking out for a solution, especially the fintech companies. And we will definitely try to take this solution to the markets where we are very strong with. And I think we are doing a number of POCs with our existing customers where we are bringing those stack to this market. At the same time, we also believe some of our stack, which is on WhatsApp, RCS, or email, can be now sold by Telesign. So it's a great opportunity we see between both the company where we will create a cross-sell and upsell opportunity within the existing customer base. And definitely there is a new logo we will definitely chase together.
All right. Rajni, we'll leave it at that. Thank you so much for joining us and taking us through the quarter gone by as well as what we can expect going forward. It's certainly very interesting and insightful for us to have that conversation with you, and look forward to having many more. But of course, we're looking at a fairly steady quarter for Route Mobile, and we'll be watching out for a lot of those developments coming in. But as far as I was suggesting, the markets are concerned, the Nifty 50 specifically is advancing by around 0.4%. But on to an exclusive where sources tell NDTV Profit that IDBI stake sale process is gaining pace, with the government to call financial bids by last quarter of FY25. And my colleague Shrimi has filed this report. Shrimi, over to you.
Much awaited IDBI Bank stake sale seems to have gained pace. As what we are picking up from our sources is that, government is going to call for financial bid in this financial year itself. In fact, in the fourth quarter is what they anticipated. In fact, they are going to give the virtual access of data to all the potential bidders by November itself. And then they are going to have a draft share purchase agreement where the RBI and the other regulatory approvals approval will be, assessed by these bidders. Remember, the expression of interest was invited in January 2023, where all these candidates have expressed their interest towards this stake sale and the disinvestment part. And now the potential candidate have also gone for the fit and proper criteria, which they now secured it. 4 to 5 candidates are what we are picking up from our sources has secured that fit and proper criteria, and then now they are moving towards the financial bids side of it, and we will soon get some sense that whether this the entire stake sale process will be moved to the next financial year, because after financial bid also it will take 6 to 8 months of timeline to conclude the deal. So we are tracking the story and we'll get more details on that.
All right, from there on, we move on to a very interesting development with respect to Gujarat Fluorochemical, and this is the other stock which is on our radar. Well, we have Varsha who is here to tell us what's happening with this company. Varsha.
So yes, a big development when it comes to companies. So Gujarat Fluorochemicals wholly owned subsidiary, that is GFCL EV, is going to raise 1,000 crore at 25,000 crore valuation. Now fundraise is led by Inox GFL and promoters and key investors. Now this fund will support the capex plans of Gujarat Fluoro in EV and ESS sectors. Now the key products that this company is going to manufacture is electrolyte salts, cathode materials, binders. Now all these chemicals are used to make lithium-ion batteries. Now, let's talk about the capex plan. So, company is going to invest 2,400 crore of capex over the next 2 years. That's what they have said in the last con call. And they're aiming 2x asset turnover and at 25% EBITDA margin. And GFL also plans capex of around 6,000 crores over 4 to 5 years. Now there are also there's been engagement with global customers. They've engaged with 20 plus global EV customers, and the revenues from this are expected from second half of FY25. And lastly, if I were to talk about the market outlook, EV battery market is expected to reach at $300 billion by 2030.
Okay, well, Varsha, thank you so much for getting us those details. Very, very interesting development indeed. But from there on, we move on and talk about Persistent Systems, another one of those stocks which is doing very well in trade today, up nearly 11%. Well, we had quarterly earnings, and it does seem like the street likes what they've seen. The IT firms reported a 6% sequential growth in its net profit in the quarter, and for the quarter ended September, and on year-on-year terms as well, we've seen a surge of over 23%, driven by the company's focus on AI-led services. But we spoke to the management of the company, and this is what they had to say. Listen in.
The quarter, as you rightly said, came in well. We had another good, strong revenue growth quarter, 18.4% year-on-year in dollar terms, 20% plus in rupee terms. And on a quarter-on-quarter basis, it was roughly about 5.3% in dollar terms. Now, this was led by our healthcare life sciences segment, followed by BFSI. We saw reasonably good growth in both the segments, followed by tech, which we are seeing a good revival. The EBIT for the quarter also came in healthy, a 22.8% year-on-year growth at 14%, which is flat quarter-on-quarter, despite the salary increase, which dings us by about 210 basis points. So we were able to overcome the negative effect of the wage hike that we had given, effective July 1st. And for you and your viewers, we basically kept the timeline that we had for the wage hike. We did not defer the wage hikes, as some other peers in our sector have done. So overall, broadly, a good quarter. Good segmental growth across and good client growth across. Happy to answer any questions.
Yeah. I want to start off with the geographical areas because for you, both America and Europe did well. The belief was that for all companies, product companies, services companies, US will probably do materially better only after the November election verdict is out of the way, uncertainty is out of the way, clients will take calls on budget there. What's happening there? Because you seem to have done well.
So Neeraj, see, in the last several years, if you look at it, there have been many different phenomena. There was the COVID phenomena, there was the post-COVID, there was the fears of recession, now it is the US elections. So all we have to do is, and sincerely, we are a small company in a much bigger, sector. All we have to see is where the customers' minds are at. What is it that they are looking at? If they are looking at revenue growth versus, cost optimization versus, saving from some areas, investing in places like AI and so on and so forth, we have to be able to work with them, and we have to build in the capabilities that we have been, if you look at our AI capabilities, we have been investing in that, and that has held us in good stead. Good market, bad market, and so on. So we are reasonably confident that will be the case going ahead as well. We don't control the economy. We don't control what happens in the macro in the world, whether it is in APAC or wherever else, Middle East and so on. But we control our reaction, and so far as a team, we've done well with our customers and they've grown with us. And we hope that to continue.
Yeah, but even sectorally, so not US has done well, BFSI has done well. What is this? Is this a uptrending piece? Because most people were thinking that it will actually trend lower. So how do you look at BFSI and US combined? Because that will be a big driver, not just from your perspective, I'm saying, but for the sectoral perspective.
Yeah, from the sectoral perspective, look, we are seeing some amount of spend easen up. Yeah, the people are worried about the elections, but you know what? With whoever comes in, the markets have to continue, the people have to do their business. So we are definitely seeing some amount of uptick in terms of, people looking beyond the short term. And we have been a gainer of that. We have also been a gainer of cost optimization. We have been a gainer of vendor consolidation. And I do think, people who are investing in AI capabilities, etc., will continue to gain market share. So yes, there'll be a little bit of loosening in the shorter term. Longer term, we'll see. But within that, people who are focused on their customers, on next generation technologies, services which kind of add value to their customers will keep growing.
Okay. Now, before I come to margins, a couple of other questions, Sandeep. One of them is on technology. I heard you mention in your opening remark that tech seems to have starting to perform, I think, 1% sequential growth. But the belief in the commentary that I've read from the analyst community is that the bottoming out process is underway. It'll probably bottom out in the next couple of quarters. Is there a dichotomy between what the street is understanding versus what you're thinking about?
No, so for us, if you look at it, we have been investing in our AI platform called Sasva. We have been evangelizing that with our tech customers. We've got very good traction on that. We are winning some good large deals, including in the quarter gone by. And we do believe, from what we see, the ramp up will happen over the next 2 to 3 quarters, big time in those. So we are expecting tech sector to kind of turn around for us, because tech for us versus tech for our larger peers are two different things. We are in the heart of the engine. We are in product engineering. We are their extended teams for product development, maintenance, professional services, 9 yards. Whereas tech for our other peers means IT into their CIO organization. And we are heavily focused on CTO, VP engineering, the business lines, and somewhat in the CIO organization.
All right, well, that's the management of Persistent Systems telling us all that is in store as far as the company is concerned and the future. But with that is all that we have on this edition of Earnings Edge. Lots more lined up on the other side. Keep watching NDTV Profit.
This Diwali, embrace the spirit of new beginnings.
A time for fresh opportunities.
Bold ambitions
and renewed dreams.
See the world through a brighter lens.
As you turn your efforts into profits.
Transform your goals into wealth.
And spark joy in your journey
towards happiness.
1, 2, 3, 4.
This festive season,
Let money work for you.
And light up your future with prosperity. Let's celebrate growth,
Wealth and true happiness.
Profit Wali Diwali.
NDTV Profit's first Diwali.
from our home to yours.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that'll help you move with the tide.
An unmissable trade.
If you want to be in the money.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
The Nifty and Sensex bounce back from initial losses as Nifty IT and Nifty Financials lead the recovery. Broader markets outperform benchmarks. Small caps pack big gains. Most sectoral indices trade in the green with Nifty IT leading the pack, followed by auto, media and consumer durables. After facing regulatory hurdles, Paytm finally gets the NPCI approval to onboard new UPI users. The stock reacted positively, jumping almost about 10% in today's trade as brokerages are bullish on customer additions. For the first time in half a decade, Indian Prime Minister Narendra Modi and Chinese President Xi Jinping will hold a bilateral meeting. This comes on the sidelines of the three-day BRICS summit. And as per Bloomberg reports, the government has called for the removal of the windfall tax on crude oil, with the Prime Minister's advisor stating that it has lost its relevance. Hello and welcome. You're watching Market IQ and I'm your host Pallavi Nahata. Gujarat Fluorochemicals announced today that the board of its subsidiary GFCL EV Products has approved the raise of 1,000 crore rupees at an equity valuation of 25,000 crore. The promoters of the Inox GFL group led the round in the fundraise along with several marquee investors. We have Devansh Jain, Executive Director of Inox GFL, to discuss more about this fundraise, and I'm joined by my colleagues Neeraj and Varsha for the same. Devansh, thank you so much for taking time out for us.
Hi, the pleasure to be with you.
So, to start with, I do want to know more details about the fundraise and any possible details you can share regarding who key investors are.
Look, so what we've done today is we've announced 1,000 crore capital raise in GFCL EV at a valuation of about 25,000 crores. Post this transaction, Gujarat Fluoro will continue to own about 96.2% of GFCL EV. We've got some of the largest family offices owned by some of the largest business conglomerates in the country to come in and invest. I won't be able to share specific names, but this is across auto, FMCG, steel, metals, and cement. So that's what we've done.
Devansh, good afternoon. Neeraj here. Congrats on this. What's the way ahead, Devansh? So what happens with regards to the entity itself? I'll come to the orders and other aspects, but is there a further fundraise because you have certain expansion plans as well? Give us some details about that.
Look, so what we're doing basically in GFCL EV, we've set out to build out one of the largest integrated battery chemical complexes in the world outside of China, probably the largest outside of China. And what that encompasses is we're setting up products across EV and ESS. And these are categorized into three parts. One is battery chemicals, where we're making the salts, the electrolytes, and additives. The second being the cathode active material, which is LFP. And the third being high-end fluoropolymers like PVDF and PTFE, which are used as binders on the EV side. Now, typically, the EV battery is about 40% of an electric vehicle's cost. And the products we make, depending on which chemistry you follow, would be about 30 to 40% of the battery cost itself. In effect, we control about 12 to 15% of an electric vehicle's cost. What we've done is we've announced a capex program of about 6,000 crores over the next 2 to 3 years. We've already deployed about 1,500 crores, which is equity, from Fluoro into GFCL EV. We have raised 1,000 crores at this point in time. There would be another round, which should happen in the near future, which would probably be another 1,000 odd crores. So overall, with the 1,500 crores of equity done, which we've already put in, 1,000 more which we are putting in, and an incremental 1,000 which we intend to raise, it would be large enough to effectively take care of the entire capex program, including the internal accruals which will play out over the next 1, 2, 3 years. As is known at the Inox GFL group, we're completely debt averse. We don't want debt in any of our operating entities across the entire renewable arm. We're net cash. And with this raise and the potentially another raise, we would be net cash across the entire chemical arm as well.
Very interesting. Okay, so Devansh, a follow-up there. I heard you say 1,000 crores of a further fundraise whenever in the next 1, 2 months, whenever you do it, or maybe earlier. You didn't give me the timeline. I'm just saying it out. So whenever you do it, is this happening at the you reckon it'll happen at the similar valuations with a completely different set of investors or the same set of investors? Part of my question is that. Part 2, will it be the same kind of a fundraise, which is a plain vanilla equity dilution, or do you plan to do it in a slightly different fashion?
All the options are open. We are negotiating with a couple of large investors at this point in time. Whatever we do is probably, in any case, this is the base. And it's hopefully only going to get better as we keep moving forward.
Okay, but all options on the table, so nothing concrete is yet. Okay, one more question from my end, which is around the progress of business as it stands. So now you're obviously going to be a key supplier outside China to a lot of global companies on the battery side. What are the kind of negotiations that have happened? When do order inflows start trickling in, if not already? Give us some sense of the business of this arm.
Look, so, I'll share what's already in the public domain. And to that extent, we've been working with some of the largest OEMs in the US, Europe, Japan, Korea. It's across more than 20 odd OEMs and, key suppliers to OEMs. It's a long gestation business. So we've been an early mover. We've been doing, we've been working on it for the past 3 years. We had our pilot plants where we had to set up capacity, then get approval, which is 9 to 12 months. Then you set up a smaller pilot plant, and thereafter is the commercial plants. So for many of the products, our commercial plants went live in Q1, early part of this financial year, or early part of this calendar year, in fact. That's LiPF6 electrolytes. We are currently in sampling and validation, and we expect to start commercial supplies from Q4 of this financial year. And then we expect to see hockey stick growth over the next 1, 2, 3, 4 years.
Mr. Jain, Varsha here. Good to have you. So I'm assuming that I understand that you have a capex plan of around 6,000 crores for next 4 years. Now, my first question would be how are you planning to do this capex? I mean, I assume that for next 2 years you're doing capex of around 2,800 crores. Number one, and number two, what is the revenue potential that you are expecting from this 6,000 crores of capex, and by when?
Look, so as we've put out in the public domain, we intend to do about 6,000 crores over a period of 3 years. We've already pumped in close to 1,500 crores. As I mentioned, we've raised 1,000 crores today. We intend to potentially raise another 1,000 crores, overall 2,000. So that with this 3,500 crores, we are fully funded from an equity perspective. Thereafter, the internal accruals are large enough to sustain the business and the growth as we move forward. Having said that, of course, Gujarat Fluoro itself is very, very strong profitability and EBITDA. The last year has been a little bit of a slowdown across the chemical sector, but we're confident as we move into the coming quarters, the business is looking very strong. I think in terms of revenue, we have mentioned we expect an asset turnover of about 2.5 times. And that's something which will play out over the next 1, 2, 3 years.
Okay. And also, are you going to list this EV in next 2, 3 or 4 years, say?
Look, I think it's well known across the group. We build our companies, we capitalize them well. And once they're self-sustaining, become of a certain size, we list them. So eventually, yes, the aim would be to list this entity, but I think the GFL board and the EV board will take an appropriate decision at the right time. But I would assume it would happen within the period you're talking about.
Devansh, one follow-up to the answer that you gave earlier. So if you, I heard you mention that you get in some bit of order flow in from Q4 and then a hockey stick effect. Is this coming in from specific geographies? Is there some sense can you give about the clients? Because I think when I spoke to a few people on the street between the morning when the announcement came in or last night when the announcement came in and right now that we are talking, everybody is wanting to know what are the kind of clients that this subsidiary has. You may not be giving names, but some color about the geography or the nature of the clients.
I will not be able to specify names. Having said that, these are the largest OEMs globally who we are working with. They are auto producers, they are battery producers. So we're working with virtually everybody. I think, what you need to understand is what's happening. Effectively, on the EV landscape, right, we expect the EV, the lithium battery market to move up from, say, about 1,100 gigawatt hours currently to about 5,000 to 6,000 gigawatt hours by 2030. Currently, 95% of the battery supply chain is coming in from China. And for example, in the US, with the Inflation Reduction Act, over a period of the next year and so, you have effectively the Chinese supply chain totally cut off. So the US market is just striving to get high quality supplies. Fluorine is a very, very difficult product to handle. We've mastered that for the past 30 years. We have our own fluorspar mines. So that's something which is playing out. Europe does not have a law like IRA, but they're trying to move away from China and have an alternative supply chain. So we are entering Europe through that route. And obviously in the Indian market, it's very small today. It's something which will play out over the next 1, 2, 3, 4, 5 years. We have battery capacities coming up in India over the next year or so. In the US and Europe over the next 12 to 15 months, a lot of front-end battery capacities coming in. So that's exactly where we would be supplying. Our capacities are expected to multiply multiple times from these initial capacities we've set up. In some products, it's obvious it's potentially almost 30 times what we've set up in our initial plans over the next 3 years to 4 years. So it is huge. Globally, barring China, you only have 1 or 2 or 3 players, small players out of Japan and Korea. So effectively, it's a huge TAM which GFCL EV is looking to address. We are extremely competitive in terms of CapEx and OpEx, probably virtually on par with the Chinese, not on par with the Chinese given they have enough other benefits, but compared to global players, I think we would be the most competitive and most integrated players for these products.
Final question, and this is from a novice really, but considering that all the noises speak about how the battery technology is undergoing a shift which will change maybe every year or every 3 years, if you will, would capacities that you're setting up be fungible to move from, let's say, lithium-ion to some others, should the technology for EV batteries change as well?
Look, first and foremost, I don't think it's going to be changing in the next 3 to 5 years.
Okay.
You must understand batteries are extremely complex. It's like ICE engines now moving to EV after a long period of time.
Okay.
You still have a lot of ICE, and that's going to go on because the entire ecosystem needs to develop. Having said that, I think the chemicals, which is the underlying piece is fluorine, and whether it's sodium or whatever it may be, a big chunk of that is dependent on fluorine. So effectively, yes, many of our plants are fungible. And I think we would be part of any and every chemistry which would play out in due course of time.
Great. Okay. Devansh, wish you all the best with the plans and the execution and more, and the hockey stick that you spoke about. Thanks so much for taking the time out.
Thank you, Neeraj. Pleasure to talk to you.
Yep, likewise, as always. Well, that's interesting, Varsha. The stock has come off today because there was a run-up in the stock, of course, earlier as well. But very quickly, 30 seconds, Varsha, you track this very closely before we wrap up. What stood out here?
So one thing is, what are the profit or rather the EPS or the net profit that they are expecting? One is that EBITDA margin of 25% they are expecting from this EV battery chemical, and the other thing is, so but we need to consider this, that these all numbers will come maybe after 3 or 4 years. But yeah, I mean, overall good development for the company because huge plans, so they good development, yes.
Pallavi, over to you.
Right, absolutely. That was an interesting interview. Thank you so much for that, Neeraj and Varsha. But with that, let's quickly take a look at where the markets are at. We're currently up by almost about third of a percent, clinging slightly higher to the 24,500 levels. We did start off on a weaker note, but we've continued to gain some momentum through the course of trade today. We're of course going to be watching out for where we close today, especially given the volatility we did see in the markets yesterday. But currently on the Sensex as well, we're up by about a third of a percent and in the green by over 230 points, clinging close to the 80,460 mark. Let's also take a quick look at the top contributories of the Nifty 50. Now, among the better performing stocks is of course Bajaj Finance. While it was a slightly mixed set of numbers, most of the numbers were in line with estimates. We did see some concerns on the credit costs, but along with that, we're also seeing strong performance from HDFC Bank, Infosys and TCS. Well, on the losers side, we have ICICI Bank, L&T, NTPC and M&M. In terms of sectoral indices, most of them are currently in the green, and we're seeing IT in the top gainers with currently clocking gains of almost over 3%. Media, auto, services are some of the other sectors performing well. Let's also take a very quick look at the broader markets, which are performing even better than the benchmarks. The Nifty Mid Cap 150 up by almost about 1%, and the Nifty Small Cap 250 up by almost 1.5%. With that, let's move on to some big news that came in a short while back. The government is likely to review scrapping windfall tax on crude. Now, this is as per reports from Bloomberg quoting the PMO advisor. He added that the imposition of the windfall tax on crude oil has no relevance currently. Vikas Srivastav, who tracks this space, joins us with more details. Vikas.
As you said, today a top government official here at the event at Biogas event in New Delhi spoke about this, that the government has started reviewing this windfall tax on oil and on crude oil. So basically in July 2022, government had introduced this after the Ukraine-Russia war. So the crude prices had crossed $100 at that time, and most of these upstream companies, especially ONGC and OIL, they started making a lot of windfall profits. To balance that profit, government had introduced it in July 2022. However, so basically if we talk about the windfall tax, it was almost as high as 30,000 rupees per ton, which was in September close to 1,850 rupees per ton, and recently it was reduced to zero. But what is more relevant and going to be more relevant would be if the geopolitical situation in Middle East increases or if it escalates, what will be government's stance after that? Because likely the crude prices may cross 100 once again. So would it be that government would again review the prices and look at windfall tax again?
All right, thanks a lot for that update, Vikas. Let's also take stock of the 16th BRICS summit that is currently underway. Prime Minister Narendra Modi discussed the issue of early discharge of the remaining Indian nationals in the Russian army during his bilateral meeting with the Russian President Vladimir Putin. PM Modi briefed Russian Prime Minister Putin about his engagements with the Ukrainian leader Volodymyr Zelensky and noted India's stance to contribute in bringing harmony to the region. Additionally, the Prime Minister will also be meeting Chinese Premier Xi Jinping to hold bilateral meetings days after border breakthroughs. NDTV's Kadambini Sharma joins us with more details on that.
Well, first of all, let me tell you that within few minutes now, there will be family photo of BRICS leaders, and this is the day of the summit. So there will be family photo, and after that, there would be a closed plenary and an open plenary where the leaders will give their statement. Now, the bilateral about which we are talking can happen only after that. So we are expecting it to happen sometime in the late afternoon. Now, what has happened here is that we saw how the announcement was made about petroleum agreement which has happened between India and China, and the expectations were that now that it has been announced just before the BRICS summit and PM traveling for BRICS summit, that there will be a bilateral, and it was announced that way. It was confirmed by Foreign Secretary only last evening. So what exactly has happened, that too is very important to understand. What has happened is that all after this discussion, intense discussion, there is now the understanding is that the patrolling and grazing rights would be what those were in 2020. However, the agreements which have been reached in before this final agreement, this patrolling agreement, were not open. That also has been clarified. So this now this is something which is actually in the pending areas, which were the pending areas on which agreements had not been reached. So those are the areas about which this patrolling agreement is. And this is exactly what Dr. Jaishankar also had said at NDTV World Summit. Now, very early in the morning, this breakthrough happened and the information was given. Now, after that, the bilateral which is supposed to happen today, all eyes are on that bilateral, because this is the first formal bilateral between the two leaders and happening after 5 years. It is being looked at as a kind of thaw in the relationship, because we have seen what has happened for the last 4 years. It was on the back burner. The relationship was on a back burner. There are no direct flights. There might be some other there were efforts by China so that there could be a better relationship and better trade and communication, but that did not happen, because India said clearly that as long as the situation at LSE remained the same, this will not happen. So now this formal meeting is taking place, bilateral is taking place. We'll have to wait and see what comes out of it, but definitely the meeting itself is very important, because it is the first meeting after the Galwan clashes.
All right, and with that, on to some updates closer home. Coming in from the national capital that's currently engulfed in smog. The air quality still remains in very poor category in the national capital, despite the Commission for Air Quality Management invoking stage 2 of its anti-pollution plan under GRAP. The situation shows little improvement. And with that, let's move on to some sports commentary. The Commonwealth Games came out with a big announcement that excludes badminton, hockey, cricket, and a few more games from the 2026 editions. Now, this comes as a major setback for the Indian contingent, as the bulk of the country's medals came from the disciplines which are removed from the list. In the 2022 Commonwealth Games, India grabbed a total of 61 medals, having 22 gold, 16 silver, and 23 bronze medals. The quadrennial event is expected to commence from July 23rd to August the 2nd in Scotland this year. And lab-grown diamonds are taking the spotlight once again, especially after Trend's recent launch of its new jewelry brand, POM. But how do these man-made diamonds measure up in the eyes of the Indian jewelry lovers? My colleague Maitri Seth brings us the sparkle and the story behind the rising demand for lab-grown diamonds in this special report. Take a look.
What if I tell you that you can buy a real diamond ring which may cost you for 25 lakh rupees in general for 2 lakhs now? Surprising, right? Well, this is quite a possibility if you don't care where your diamonds are made. The new age lab-grown diamonds provide the benefit to customers to buy their diamond jewelry for at least 50% lower price or even more.
So we've seen actually a lot of growth simply because the awareness levels have suddenly ballooned, it has skyrocketed. Ever since last year, since Modi ji gifted that lab-grown diamond in June, since then the awareness, we've seen a 100x spike in interest levels on lab-grown to start with. Earlier, there was a time when we would educate maybe 7 out of 10 consumers on what is lab-grown. Now it's maybe down to maybe 1 or at best 2 consumers that we need to explain about lab-grown. Money definitely is one clear advantage.
Even Bollywood A-listers and influencers are seeking these lab-grown diamonds out. With lab-grown diamonds costing just 1/10 to that of natural diamonds, companies in this space are registering an impressive growth of 50% in each fiscal.
This product, this has a lab-grown sapphire in the center and all lab-grown diamonds on the side set on 18 karat gold. Now such a ring is costing you only 1.5 lakhs, while in natural diamond this would be minimum 10 lakhs.
Lab-grown diamonds have also unlocked the creativity in jewelers. For instance, a Batman-shaped solitaire, which would have been unthinkable with natural diamonds, can easily be cut with lab-growns. And customers seem to be excited about being able to buy more diamonds in a variety of styles.
I bought lab-grown diamonds few years ago when it was there, and that time I was a little skeptical. But now, after years, when my doubts have been cleared, I have been only buying lab-grown diamonds. So a diamond is a diamond only, because they are grown exactly in the same technical conditions which are grown in blood-grown diamonds.
For me, it's more value for money. I get to save money. I get to buy more jewelry. My daughter will love it. When she gets married, she will have solitaires to wear.
Lab-grown diamonds already dominate about 60% of the US diamond jewelry market. Now, Indian conglomerates like Trent are in that race. Concerns do remain though. Lack of awareness about lab-grown diamonds and confusion about their originality have not been wiped out. Jewelers hope that advertising and word of mouth would do the trick. In Mumbai, with camera person Vivek Amre, Maitri Seth for NDTV Profit.
Well, are you planning to purchase yourself a lab-grown diamond this festive season? Let us know. But that's all we have on the show for now. Do stay tuned to NDTV Profit for more news and updates. Thank you for watching.
This Diwali, embrace the spirit of new beginnings.
A time for fresh opportunities,
Bold ambitions
and renewed dreams.
See the world through a brighter lens as you turn your efforts into profits.
Transform your goals into wealth.
And spark joy in your journey
towards happiness.
1, 2, 3, 4.
This festive season.
Let money work for you.
and light up your future with prosperity. Let's celebrate growth,
wealth, and true happiness.
Profit Wali Diwali.
NDTV Profit's first Diwali.
From our home to yours.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
As we've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
As we've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
When the whole day passes like a blur, the news just whizzes past. And you
Hi, thanks so much for joining in. You're watching the Mutual Fund Show on NDTV Profit, and my name is Alex Matthew. Like the name suggests, the show gets you actionable insight on everything mutual fund related. And today, the first part of this conversation is going to give you insight on how fund managers view the current market dynamics, and also will give you insight on how a very popular scheme is currently looking at the market. Joining me at the start is Raj Mehta, Fund Manager at PPFAS. Raj, thanks so much for taking the time, and pleasure having you on the program. A lot of people are looking toward you for guidance and also to try to understand what your thought process is when you're looking at the kind of swings that we're seeing in the market and the drawdowns that we're seeing. So if you were to look at the market and how it's behaved over the last few weeks, what stands out to you?
Yeah, firstly, thank you for having me on the show. Our view on the markets for the last
few months has been that it is in the relatively overvalued zone, and hence it's really difficult to find attractive opportunities to buy into this market. And cash has built up over a period of time. So if you look at the cash levels as on the last month end, it's around 18 to 19% of the portfolio for the flexi cap, and similar levels for our tax saver fund as well. So it's really hard to find attractive opportunities at this point in time, and hence this cash buildup.
That's exactly part of what I want to talk to you about, because we've been talking about this cash buildup for a few mutual fund schemes, and yours has stood out because so many people track your scheme as well. Is that you've done this in the past, and you've done it on strategic occasions in the past. In retrospect, it has always panned out that it has worked in your benefit. What, according to you, are the key reasons why you've done it in the past when you've had similar cash positions?
Sure. So our investment style has always been that we don't force ourselves to remain invested at all points in time. Whenever we feel that the valuations are stretched, and we are not able to find attractive opportunities, we are happy to remain in cash as well. We look at cash as a balancing figure in the portfolio. So if we find any attractive opportunities today, tomorrow, happy to deploy it. If we are not able to find, happy to keep it in cash and wait for the opportunities to come by. So if you mentioned a couple of occasions where we have had cash built up. So just to mention a couple of them, in late 2017 or early 2018, when the mid cap rally was at its peak, we had about 30% cash in the portfolio. It was not to do anything to do with the Nifty levels, but it was to do with lack of opportunities in the market to deploy this cash, and hence we had built up this cash. And once that mid and small cap rally peaked out, we were able to find opportunities in the mid and small cap space and deployed that money immediately. Similar buildup was seen in the COVID times when cash levels were at 12-13% in March of 2020. And just in 15 to 20 days time, we are able to deploy almost all of it, and the cash levels came down to 2 to 3% of the portfolio. So that helps in downside protection, that helps in minimizing drawdowns, and that helps in risk-adjusted returns over a longer period of time.
Raj, but I'm just curious what you have to say about, and of course, and nobody's asking you to justify moves in the very short term. I'm just curious what your response has been to the 6.7, 6.8, or more than 6.5% fall in the benchmark, more than 7% fall in the broader markets. I'm talking about the small cap. Has that provided you with any opportunities to deploy some of the cash that you accumulated, and that, as you pointed out, stood at 18-19% at the end of September?
Not yet. So not yet able to find the valuations to be in our zone as of now. Probably a few more rounds of correction, be it time correction or price correction, and maybe we'll be able to find some opportunities. So not at the moment, but maybe in the future.
I'm just delving a little deeper into this cash strategy, because I think a lot of debate has happened already, and it's great to talk to you in person about it, because the criticism of this strategy has been that while valuations have been uncomfortable for some time, and therefore from your perspective it's not appropriate to deploy the cash, they've not changed, and in fact, if anything, they've gotten even more stretched. And so as a result, you've not been able to participate in a broad-based bull run, because I looked at the cash position last year also. It was pretty elevated, Raj. I mean, it was in double digit last year as well. So in that time frame, you've seen a run up in equities, and so to that extent, you've missed out on the opportunity that the Indian equity markets have provided. What do you say about that?
So that's correct. So we have always communicated it to our investors that in raging bull markets, we'll probably underperform the markets, and maybe in the short term we'll underperform. But over a longer period of time, I think that once we see a drawdown, maybe we'll be able to, beat the markets by a decent number. So if you see 1 week back, maybe we underperformed the benchmark, but in a week's time, we have been beating the benchmark now. So it's just a matter of time of short-term underperformance. We are okay with it as long as we outperform over a longer period of time on a risk-adjusted basis.
That's a fair point. And I guess more important than anything else, and really the conclusion of all of these conversations, Raj, is as long as your investors are aware of the strategy that you're employing, they are going to be okay with it because your performance speaks for itself, really. And I think we can put the matter to bed with that. But I'm curious about what you've done in terms of the sector rotation, and I've looked at the portfolio construct as of the end of September, and I've compared it with a year back. And I see in terms of sector, you have a significant change in banking, in power, and a certain amount of a change in gas transmission, agri. IT has decreased very substantially. Can you take me through the sector rotation that you've undertaken in the fund?
Sure. So we look at companies on a bottoms-up basis, irrespective of the sector that it is a part of. So most of these changes have been on a bottom-up basis. Private sector banking, of course, has underperformed over a 3 to 4 year period now, and remains to be in the reasonable valuation zone in a market where it's hard to find opportunities. So that's the sector where we are upbeat on, and hence the weightage has gone up to around 20% in private sector banks altogether. Power is a space where we like. We feel that India has remained underinvested, especially on the thermal side. Renewable hasn't picked up to the expectations that everybody had, and hence, at least in the next 3 to 5 years, we don't see thermal going anywhere. So we have a couple of PSU names in the power sector. IT, so we haven't sold any IT names. It's just that we haven't added because the valuations have creeped up in the past year. So with the increase in the AUM, we haven't added incrementally to the IT names, and hence the weightage has come down.
Okay, that's a fair point. I also looked at a substantial fall in the overseas equity. Now, this is also a conversation that has been often had, Raj, but just to drive home the point, it stands, and correct me if I'm wrong, it stands at only about 12% right now, down from what, 16% even a year back. And this is at a time when the companies that you hold have also done quite well. So the underlying has actually gone up. Can you explain why it, and one of the big draws, Raj, for those who remember the management of the fund from the years prior, before all the restrictions came through, is 27, 28, nearly 30% allocation to international. So this is a far cry from that.
Sure. So we would have liked to have added to those positions, but the problem has been that the whole mutual fund industry has been hit with a industry-wide limit, which is $7 billion. So we cannot remit any additional dollars, and that limit has been exhausted for 2.5 years now. SEBI and RBI are working on it, but they still haven't raised that limit. So because of which, what has happened is that all the inflows that have come in the last 2.5 years have been incrementally only deployed in Indian stocks. So because of which the foreign percentage has come down from 30% to about 13%. So we haven't sold any of it. We would have liked to have added to those names, but we have to play within the rules that the regulator set for us.
Okay. I've also noticed the addition, Raj, of certificates of deposit to the extent of what, 3.5 or 3.25%. What's the thinking here? Short-term debt?
We, as you rightly mentioned, that we have had cash for the past year or so. So given that most of the cash is deployed in either overnight money or arbitrage or short-term debt paper. So depending on the spreads that are available, either on the arbitrage side or in 1 year short-term debt, depending on the spreads that are there, we try to move the cash between these segments. So it's an alternative to cash, given that overnight money was at 6.5, 675 levels, and short-term debt was 7.5 levels. We thought that it was better if we put it in short-term debt, and it's equally liquid, so not that much of a problem.
Okay. So two possibilities that could potentially change your mind, I would think. on deploying funds. One would be if earnings far outshoot what was expected, and so therefore valuations relatively look cheap, or valuations correct. The latter might be more likely than the former, but what factors need to be, or what factors would you need to see play out for you to start deploying in a strategic manner?
Most likely that the second scenario will play out. Whether it's a time correction or a price correction, that is a question that needs to be asked. We have seen some numbers coming in for the second quarter, which were a little soft. The demand has been soft on the rural side. On some of the MFI space, we have seen two-wheeler numbers coming out. Consumption numbers have been a little weak. So yes, maybe the earnings slow down, and because of which there's a PE rating that happens, or maybe the earnings remain at these levels, and the re-rating, the PE re-rating which was happening, that cycle stops, and we may have a longest period where the valuations don't go up and they stay over there. So a time correction is also possible.
Raj, thank you so much for taking the time. Pleasure having you on the show, and season's greetings from all of us here at NDTV Profit to you, your family and the team.
Thank you so much. Same to you.
All right. Let's talk about this a little bit more in detail. And incidentally, we're joined now by Kirtan Shah, Founder and Chief Executive Officer at Credence Wealth. Thanks so much, Kirtan, as always, for taking the time, and season's greetings to you as well. Welcome back. As I understand it, you're coming back from foreign shores, and the first conversation that you're having with me in a while. So I do want to talk about the cash positions, and we have spoken about it at length in the recent past, but I'm curious what you have to say about that. And also there's some data that we pulled up about the relative outperformance / underperformance of small cap actively managed funds since the 27th of September, very short term period. But there has been an outperformance relative or relatively less under loss of value compared with the benchmark for all but 3 in the sector. Does that tell you that these fund managers have read the signs much in advance and have already allocated based on that?
Alex, thank you so much for having me on the show. It's always a pleasure, and greetings to everybody who's watching us and the entire team. Alex, I have a very different view. I actually belong to the camp who believes that as a fund, you should try and avoid taking cash calls. The data that you just spoke of is very short term for us to really be able to draw any conclusions out of it. Because if I have to just give you a counter data to that, I see a lot of these funds have been standing on cash for over 3-4 quarters. And just in the last 1 year, just at the Nifty levels, we are up close to 30%. So there has been a significant underperformance. Also, if at all you've been standing cash for such a long time and the markets have gone up so much, and whenever you talk about taking cash calls, it is like timing the market, right? You are saying that markets are expensive. I don't want to deploy new cash at this point in time. And the cash is not only the cash that you have right now, but the incremental cash that you keep taking in as lump sum and new SIPs. Now, as a fund, you are taking a call that probably markets are expensive. I will not deploy at this point in time, which is a timing call that you are taking, and you've got to be right on 2 fronts. First is when you don't deploy, the markets don't go up, because if the markets go up, then you're losing out on the opportunity. And when the market starts correcting, at what point in market do you really want to enter? Is a 5%, 6% fall a good fall to enter? If yes, do you deploy everything? So there are a lot of moving elements. I'm sure fund managers are far more better at doing this versus probably a retail investor. But I think as a fund, if your objective is very clear that you will stand cash, then it's okay. You can take cash calls because you mentioned that in your objective. But as a fund, if that's not your objective, I think you should avoid taking cash calls.
Yeah, that last point is very important as well. I hope that you heard and found useful the conversation that I just had with Raj from PPFAS, and he said that they have often over the course of the last several years done this, and they have communicated it to their unit holders as well. But it's not just them, right, Kirtan? There are so many funds that have currently taken that cash call. You have certain data on that.
I think yes. Talking about PPFAs first, very honestly, there are two funds that I've been tracking for a long, long time, and these fund houses often take cash calls and they make it a point to communicate, which is PPFAS and ICICI. I saw them doing very similar in 2020. And I saw a lot of funds do this in 2008 as well. To give you some data I was looking at, I think keeping a cash of 3 to 5% is pretty normal, is because when you have 3 to 5%, you want that kind of cash to make sure that if at all there are some redemptions coming up, you have enough liquidity to make good for the payments. But if you have beyond 5% as cash in your portfolio, this is surely a tactical bet that you're trying to take, where you think that the money that you have is not investable at this point in time. I was looking at some data at the end of September, and there were close to 18 equity schemes, which had more than 10% of cash at the end of September. And there were 106 schemes which were holding more than 5% cash. And this was across multiple AMCs. But I think PPFAS and ICICI, two AMCs that in my last 14, 15 years of doing this and tracking, I've often seen them take cash calls.
Okay, that's a fair point. The other aspect is, and I've wondered this, Kirtan, of course, maybe I will ask a few more fund managers what they think about this, is that if you've gotten used to, and I'm going to draw an analogy, maybe it'll make sense to you and you can comment on it, okay? If you've gotten used to taking the bus every day and you know that the bus is going to be late, you will take the opportunity on a few occasions to, get to the bus stop a little late. But if the bus has gotten much faster and is on time and perhaps even ahead of the time, then you're going to miss the bus. Is that the case with the Indian equity market?
I think, Alex, look, like I did mention to the last comment also that we were discussing, my problem here is that there are 2-3 moving elements, Alex. First, we are missing out on the entire equity piece in terms of liquidity that is getting pushed in by the retail investors. Both of us know that probably 95,000 crore worth of FIIs have sold money and equally DIIs have bought, right? So a lot of cash that was sitting at the end of September has got deployed in October. Now the problem is at the levels at which new SIPs are coming in, and the majority of the retail investors who's buying every small dip that you are seeing in the market, this cash is only going to keep increasing at the mutual fund level, is my understanding, because of new lump sum investment coming in and new SIPs or continuation of the SIPs that is happening. Now, if this situation is only going to be even bigger of a problem going forward, because more and more retail investors will come in, I am slightly skeptical of how quite often will you really be able to take this cash call? Because I've been hearing that the markets are expensive. And let me tell you, I do believe that mid-small markets are, let's say, expensive. But how often will you not do anything with the cash that is coming in? Because the best way to do this is stop taking new money in the fund, which not a lot of other funds are doing. So what you're doing is you're not stopping to take new cash in the fund, but when the money comes in, you don't know where to deploy, and hence you are spending cash. I think if you're able to draw a line between this, I think that's the right way to move forward. But like I said, if a fund's objective clearly states that, you are okay with taking cash calls, I'm okay if the fund manager is taking cash calls, because that's communicated and investors should know about it. But if there are funds who are not communicating and taking cash calls, that's something that I'm not really okay with.
That liquidity factor is absolutely key, Kirtan, because I can't remember a month in which you've seen 90,000+ crore of selling by a foreign institutional investor cohort where you've seen the benchmark fall just 6.5%, where you've seen that velocity and volume of selling. But there are several queries that have come through, Kirtan, and I want to take the first one from Shakib, who's written in. He's 21 years old, and I'm glad that he is starting his investment journey so early. He says that he wants to start his investment journey with a 10,000 rupee SIP and a 10% annual SIP. His time horizon is 25 years and he's got a moderate risk appetite. What fund should he consider investing in? Because it's a very long-term horizon.
I think, like you rightly said, I'm really happy that young investors are coming in, and congratulations, Sakib, for deciding to start your SIP journey. There are two things that I am very keenly looking at here. I'm very happy that the investor is educated enough to understand that he should do a 10% annual step up. So many congratulations on that. And at the same time, the time horizon is very interestingly large at 25 years, which is brilliant. But because the investor has a moderate risk appetite, I'm not sure how strongly a small cap fund would fit in, because in a general context, if you have a 25 years of investment horizon, I would have really loved to recommend a small cap, but because he is moderate risk, I'm trying to avoid. I think you can split your investments across SBI Contra, ICICI Large and Mid, and Kotak Emerging, by which you will equally spread your investments across large and mid, which is good for a 25-year of investment horizon. And I'm slightly restricting myself to do anything on the small cap because you've mentioned that you don't want to take aggressive risk.
Which is perfectly fine. And I'm glad that he's cognizant of his risk-taking ability as well, which is another sign of maturity. And kudos to you, Shakib, for having that thought process. Arun, who is 25 years old, not too much older, Kirtan, and so therefore congratulations to Arun as well. He says he's a state government employee and his goal is wealth creation. He's probably not thought about what he needs the money for. His time horizon is 15 years. He's got a few stocks that or rather a mutual fund scheme that he's invested in. UTI Nifty 50 Index Fund, the DSP Nifty Next 50 Fund. He's got the ICICI Mid Cap 150 Index Fund, the Small Cap 250 Index, Motilal Nifty 250 Micro Cap Index Fund, and the Parag Parikh Flexi Cap Fund. The only actively managed scheme is the fund manager that we spoke to today. Everything else is in the passive space. Would you suggest that he change anything?
I think I'm glad to look at diversification across market cap. He's very smartly put money across everything which was possible from the Nifty to the micro cap index. So I think he's done a great job. My only suggestion will be, if you have a 15-year of investment horizon, and because he's not mentioned what's his risk appetite, and I want to assume that because he's got 15 years, he probably might lose out on a large opportunity, and hence suggesting to reduce a little bit of large cap, because across UTI 50 index, DSP 50 next index, and PPFAS, he has a lot of exposure to large cap. So if you can reduce a little of large cap and spread that across mid and small, it'll be great.
Last question, quick one. Elamaran, who is 31 years old, is planning for his retirement. He's planning to start investing 5,000 each in large and mid cap 250 index and multi-cap fund. Is this a good combination? Large and mid cap 250 index and a multi-cap fund. What's the view?
I think I would rather suggest that you go for large, mid and small separately. Historically, an equal weight portfolio in large, mid and small has done much better on risk adjusted. So versus what you're suggesting, I would suggest do large, mid, small independently and equally invest across them.
I know that you have this view, 1/3 each in the various market capitalizations, and you've pointed out in the past as well that it has done incredibly well. Kirtan, as always, absolute pleasure having you on the program. Thanks so much for taking the time.
Alex, thank you so much for having me.
All right, that brings us to the end of this edition of the Mutual Fund Show. Hopefully it's been an insightful one for you. Do let us know what you think about this program, and if you've got specific questions about mutual funds, then you can send them on that number that you see flashing on your screen. It will eventually come to you. But do stay tuned. Lots more coming up over the course of the day. This is NDTV Profit.
This Diwali, embrace the spirit of new beginnings.
A time for fresh opportunities.
Bold ambitions
and renewed dreams.
See the world through a brighter lens as you turn your efforts into profits.
Transform your goals into wealth.
And spark joy in your journey
towards happiness.
1, 2, 3, 4.
This festive season.
Let money work for you.
And light up your future with prosperity. Let's celebrate growth,
wealth, and true happiness.
Profit Wali Diwali.
NDTV Profit's first Diwali.
from our home to yours.
I truly believe that this is not only India's decade, but India's century because of several radical reforms that India has carried out, structural reforms, digitization, the focus on infrastructure. And it is going to be India's century. And I really compliment NDTV for launching the NDTV World Channel. This will enable us to take the message of India to the rest of the world.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news.
Hello and welcome. You're watching Large Trades, a show where we talk about all kinds of bulk and block deals in market-moving stocks and sectors. I'm your host, Mihika Barve. And let's just take a quick look at how markets are faring right now. Well, the Nifty 50 is up more than 0.2% right now. We have 28 advances on the benchmark as compared to 22 declines. When you talk about, the counters that are gaining the most, we have Bajaj Finance, which is up over 5% in trade today. It did post its Q2 numbers, as well as the other two Bajaj counters, Bajaj Auto and Bajaj Finance, seeing gains of over 2% in trade right now. Some of the stocks that aren't doing so well is NTPC and ICICI Bank, both under pressure, seeing cuts of over 1.5%. When you look at the contributions, in terms of contribution, what's contributing most to the Nifty 50 gains, we have HDFC Bank contributing 35 odd points, Bajaj Finance Finance contributing 24 points, and Infosys and TCS contributing 12 to 22 points respectively. When you look at the broader markets, they are clearly outperforming. We have the Nifty Small Cap 250, which is up almost 2% in trade right now. When you look at some of the stocks that are gaining or seen significant strength in today's day of trade, we have Deepak Fertilizers, which is advanced over 15% in today. GMDC up 13% on the back of strong Q2 numbers, which we will be addressing in today's show. First Source, Amber Enterprises, both seeing gains of over 12%. Some of the counters on the Nifty Small Cap that aren't doing so well, we have Chennai Petroleum down about 10%, under pressure on the back of a weak Q2. Rajesh Exports and PNC Infratech also seeing cuts of 3 to 4%. Also want to highlight 3 counters, Ambuja Cements, Bharat Heavy Electricals and NTPC. All of these counters did see some shares traded in block. The most was traded in Ambuja Cements, which saw 2.24 million shares change hands, and the stock is flat but with a positive bias. When you look at the sectoral indices, and the one that does stand out is the Nifty IT, and that's been the story since the start of day today. That's on the back of Coforge posting a strong Q2 result. The index is up 2.5% right now. We also have some strength in media as well as metals and auto pack. Something that's not doing so well is pharma. But let's start the show with an NDTV Profit exclusive that the government is now believed to be mulling the revival of MTNL. Now, bankruptcy and merger plans have been ruled out for now, and my colleague Shrimi joins us with more details on the same.
Yeah, Mika, good afternoon. So what we've given to understand that the government approach is on the revival of the MTNL, and there has been talks on the, whether they will take it to the bankruptcy route or even merging the entity. That is completely ruled out at this point of time. So government approach is being that how to address the short-term issue, which is the restructuring of the loans and how to have a bailout conditions to repay the loans which they have taken. Remember, the total exposure stand at around 8,000 crore, and MTNL started defaulting on the bank loan repayments. So that is one. And second is how to sort of repay the long-term debts of MTNL, because the debt obligation is huge, is about 28,000 crore, and for that they are looking to monetize land assets of about 40 to 50,000 crore. But the government said that MTNL should submit the details of land assets, because each land has some challenges and issues, including the state approvals and regulatory approvals. So all that details government asked to submit MTNL, and meanwhile MTNL also been asked to sort of cut operational cost and share resources with the BSNL, and in fact the spectrum allocation which has been there with the BSNL to be also shared with the MTNL.
For giving us those details, we can pull up MTNL. The stock has advanced 9% in trade today, and it keeps on buzzing. And obviously, we'll get you the details as we get more coming in. But another stock that's been the talk today is Zomato. Now it opened 4.6% lower, but it has paired up all those losses and now up almost 4% in trade today. And it posted its Q2 numbers yesterday. It's also hiked its platform fees, and we have Mahima joining us. Mahima, what worked for Zomato's Q2 and what didn't? And it's been a very volatile day of trade for the stock. Can you explain this to us?
Absolutely, Mika. So as you rightly mentioned, the stock did tank almost 4% in open trade today, and the stock has completely recovered from that losses now. And the major reason for this is because platform fee hike. They've raised the platform fee from 6 to rupees 10. That's almost a 40% hike. So this will boost, of course, their revenues going forward, which is why the street is viewing it positively. So this is one of the reasons that is working for Zomato. Another thing which is working for Zomato is overall, metrics, the operational metrics in terms of food delivery. The gross order value across business segments have grown, but for food delivery, it's grown around 21% YOY. For quick commerce, it's grown around 122% YOY. Going out, it has grown around 171% YOY. So all of these metrics are working well for Zomato, even in terms of revenue. Well, food delivery grew around 21%. Quick commerce did see a 129% growth YOY. Going out saw 214% YOY growth, and HyperPure saw around a 98% growth in terms of revenue YOY. But now the question is that what is not working well? Net profit has taken a hit. It's missed estimates as well. So this is on the back of heavy tax paid on their treasury income. Now, generally for a company like Zomato, treasury income cannot be as high as 10%, but for Zomato, it is as high as 10%, and this 10% of the total revenue, which is kind of concerning. Other highlights, well, they've approved QIP of roughly 8,500 crores. Now, this is also, there's also a question mark to this because they already have a cash balance of around 10,500 in hand right now. So the management has given the reason saying that the fundraise is to strengthen the balance sheet, but we'll have to look forward to see as to what the management uses the cash for. And lastly, in terms of the commentary in terms of margin, they've said that margins are not expected to expand going forward in the few quarters because of the investment that they're making in infrastructure and building more dark stores. And overall, what they're seeing is that capex increase will happen, and in this quarter also capex increase was on account of expansion of stores. Brokerages, on the other hand, except for Macquarie, which has been really bearish and has given a target price of 100, otherwise brokerages are pretty positive when it comes to overall Q2 performance, and the commentary also remains positive, but there are slight cuts in terms of margins as well as earning estimates from the brokerages. So this is the overall view of both good and bad sides of Zomato's Q2 results.
Thank you, Mahima. Yes, we had a slew of brokerages come out in the morning. While price targets were hiked, the estimates in terms of earnings were cut. But the next pack that we have in focus are the minerals and mining sector, and two stocks stand out. One is NMDC, and the second one is Gujarat Mineral Development Corporation. Now, JMDC saw an intraday high of almost 12.85%, is at its peak, at close to its high right now. Volumes over 8.5 times its 30-day average, and NMDC, went as high as almost 4.5%, and volume stood at 0.7 times its 30-day average. When you talk about JMDC, well, it's on the back of strong Q2 results. Their revenues shot up 54% on a year-on-year basis. EBITDA grew 2.7 times to 141 crores. Margins have expanded significantly, around 1,000 basis points to 23.8% this quarter, and net profit was up 71% to 128 crores. Now, when you talk about what led growth, well, first was the mining segment revenues, which showed 64% year-on-year to 553 crores. So even though their power segment saw a 45% downtick, the mining segment is 93% of the company's revenue, and that's what drove strength. And the margins expanded 100 basis points despite the 2 times higher royalty expenses that the company had to pay out because of the latest Supreme Court ruling. When we talk about the production highlights, well, lignite, which is their core business, so the sales were up 81% to 16.59 lakh million ton this quarter, and the sales value of the lignite sales also grew 88%. The second stock is NMDC. Now, this is India's largest iron ore miner, and it has hiked prices for the second time in the month of October 2024 itself. And this is for the iron ore lump as well as the iron ore fine prices have been hiked by 600 rupees and 400 rupees respectively. So when you look at the iron ore prices in the month of October itself, prices on October 1st for lumps and fines, for lumps actually stood at 5,750. This has been hiked to 6,350 effective today. And iron ore fines, which stood at 5,010 rupees at the start of October, are now priced at 5,410 rupees. So price rise is actually positive for NMDC simply because higher prices means higher revenues and realizations for the company. And when you talk about why these price hikes actually reflect the global rise in iron ore prices, which have been seeing an uptick because of China's stimulus measures that have been announced in the past month, and this is expected to improve the entire metal market demand and price outlook. And the price uptick was also supported due to inventories at the Chinese ports falling by 146.6 million tons in September 2024 itself. So that also supported prices. But we move on to the next stock, and that's Amber Enterprises, which is clocked 82% rise in Q2 revenues and has turned profitable. And with Puneet joining us now with more on this to tell us what they expect from the other EMS companies as well this quarter. Puneet, Amber up almost 15%. What led to this?
Well, it's been a very strong quarter for Amber, especially, with a strong 81% revenue growth, as you rightly mentioned. But I just want to talk about Amber in this particular segment and deep dive into what led to this profitable growth. We also had the con call highlights as well as what brokerages made out. So 81% revenue growth, 91% EBITDA growth, and what's important is that the revenue growth was expected to be around, roughly around 30 to 40%, and that's come in double of what analysts had expected. EBITDA was also expected to be about 83 odd crores. It's come in at 114 odd crores, while margins came at 6.8%, up 40 basis points. And PAT also came in at roughly 20.9 crores versus expectation of just 3 crores from analysts. So a beat on all fronts is what we can rightly say. When you look at what led to this particular growth was, of course, the division and the segmental breakup. So the consumer division grew roughly 97% in terms of revenue. When you look at the electronic division as well, it grew 98%, and this includes the PCB business of the company, which is used in electronics as well. And the railway division had a subdued quarter, 6% degrowth. And the company mentioned that due to less ordering of the Vande Bharat trains in this particular quarter, that's now shifted to H2 of this fiscal year. So that's the reason of the subdued revenue growth of railway business. When you look at the EBITDA margins of the company as well, it's been very strong beat on all counts. 160 basis points improvement in the consumer business, while very encouraging electronic business has grown by roughly 250 basis points. And as you can see, less revenue growth in the railway business has impacted the margins as well. When you look at, the key things was about the mentioned in the conference call as well. That's one of the positives as well. They mentioned that, 3 key aspects in this particular conference call. They mentioned that the groundbreaking ceremony of, the new Tamil Nadu PCB plant has happened in this particular quarter. And they're expecting that, another JV which they have with Korea Circuit, which is for PCB manufacturing and assembly in India, that's also going on in this particular quarter. They've started doing that. Another one is, the ownership of Ilgin, which is Amber's subsidiary, has a 70% stake in this JV with Korea Circuits, while the Korea Circuits has about 30%, and they are awaiting a new scheme by the government for electronics. This will likely be announced in the next 3 to 4 months, is what the management has highlighted. When you talk about the future guidance of the company, that's one of the positives. They have gone into washing machine now. They're part of the consumer division, which is non-AC business, as we call it. They are expecting production to start in H2 of this fiscal year. They've already onboarded 4 customers as well. That's one of the key positives. Apart from that, the railway division will commence new facility in Q1 of FY26, and they're expecting orders in the next 3 to 4 months specifically for this. And they've also said that the JV with Eugen Motors is another key thing that they've started in the railway division, which will also start in Q1 of FY26. Brokerages are still to come in. We have Kotak Securities until now. They have a target price of 6,000 rupees per share, which is much lower than the current market price, but they have hiked it from 5,190 earlier. And the key thing that they said was the channel inventory of ACs are at all-time low, and that augurs well for the next 2 quarters. They've raised their estimates by 5 to 9% between FY25 and 27. So overall, really strong show by Amber, beat on all counts. Back to you.
Pri, just for a quick second, when you talk about the other EMS players, are there any players that are expected to have, a standard results for Q2?
Well, I'll just mention a couple of them, with Dixon Technologies being one of them. It's expected to report its results tomorrow. There is a 84% growth expected for Dixon Technologies, while an 80% profit growth. The other ones, Keynes, of course, matching it with 65% revenue growth. And Syrma is the next one I want to mention, the last one. Friday is when they report results on the 25th of October. It's going to be a 40% revenue growth, but margins are going to be impacted slightly for Syrma in this particular quarter. It's expected to fall by 90 basis points. So overall, Keynes and Dixons are going to be positive numbers. PG Electroplast will be one which will be watching out for growth, and Syrma might be affected because of margins.
Thank you so much, Paneet, for giving us those details. We, move on to the next stock, and that's Canfin Homes. It's earnings season, and this stock has been buzzing on the back of earnings itself. It spared some of its, days high, but is up 6% nonetheless. And we have Varsha joining us. Varsha, what worked for Canfin this quarter?
Well, thanks, Mika, for that. So let's just quickly see the numbers. If you see, the net interest income for the company was up 10% year on year, while the operating profit was up 19% year on year. Again, a good thing. And provision were at 38 crore versus 46 crore last year, which was down 17%. If you see, the profit after tax was up 32%, and the gross NPA ratio, which is actually the gross and net NPA ratio, is very important when it comes to banking and financial. So that the gross NPA ratio were at 0.88% versus 0.76% last year, and the net NPA ratio was at 0.47% versus 0.43% last year. Now, when you talk about NIMs, so NIMs were at 3.75% versus 3.57% last year, which was up 18 basis points. Now, if I were to talk about the takeaways from the last quarter, what actually companies was expecting, so margins was expected to sustain even if the rate goes up, and they were expecting a growth of almost 15%, and they're going to open branches in West and North.
Thank you, Varsha, for giving us those details. But, stay with us because another stock that's on our radar is Gujarat Fluorochemicals. And, Varsha, what's happening with this count? I believe it's a fundraise.
Well, the stock is down actually, but let's see what is the announcement which is made by the company. So Gujarat Fluorochemicals has formed a subsidiary. So its subsidiary GFCL EV is raising 1,000 crores. 1,000 crores of funds at 25,000 crore valuation. Now this fundraise will be led by Inox GFL promoters and key investors. Now the funds will be used to support capex in EV and ESS sector. So let's see what are their key products. So they're going to sell electrolyte salts, cathode materials, binders. Now all these battery chemicals are used to make your lithium ion batteries. That's what they're going to deal with. If you talk about the capex plan, so they're going to spend 2,400 crores of capex in next 2 years, and they're aiming 2x asset turnover at 25% EBITDA margin. Also, they have a plan of 6,000 crore investment over 4 to 5 years. They're also engaging with 20 plus global EV customers, and revenues are expected from second half of FY25. Now, if I were to talk about the market outlook, what's the industry? So EV battery market is expected to reach $300 billion by 2030, and lithium battery demand is projected to grow 5 to 6x by 2030. Now, just a rough calculation where the profit of battery business can be. So if we do 2,400 of capex in next 2 years, so assuming by FY29 or by FY30 they're gonna have a revenue of around 4,800 crore at 25% EBITDA margin. So they'll have an EBITDA of around 1,200 crore. Now, so if you see the EV EBITDA multiple is around 20x basis 29-30 FY29 and 30. And just talking about the profitability, what profits this company can make. So assuming a PAT margin of around 16% and revenue of 4,800, PAT comes to around 768 crore. If you take a PE multiple of 35, valuation goes to around 26,000. And if you see the current valuation that they've given is around 25,000. So, but this is all taking into perspective of capex of next 2 years, because how remaining capex will be done, because they're going to raise money further as management had said to NDTV Profit. So all will the next leg of growth or the next leg of funds or the next leg of capex will actually be depend on the execution capabilities and other external factors that company will operate in. And the stock is down actually. If you see, the stock is around 4 to 5%. Now this is in the anticipation. The stock has run up, and maybe investors are booking their profit, because if you see the stock returns in last 1 year, the stock has given almost 67% of returns to its investors. In last 6 months, the stock has run up almost 20%. In last 1 month, 2%.
Thank you, Varsha, for breaking that down for us, and we'll see how it plays out for the company. But the next stock that's on our radar is Chennai Petroleum, which has been under pressure. The stock has tanked 10.5% right now, and this is on the back of its Q2 numbers. Now, revenues are down 29% on a quarter-on-quarter basis to around 12,000 crores versus 17,000 crores just last quarter. And the company slipped into losses. It posted an EBITDA loss of 675 crores versus 663 crore EBITDA profit that they saw just last quarter. Net loss stood at 634 crores versus profits of 375 crores last quarter. Now, a weak quarter was expected, just the extent of the weak quarter was unknown, and this was because of a weak global refining segment worldwide. We saw the benchmark for refineries, which is Singapore gross refining margins, actually dipped 62% on a year-on-year basis during Q2, and this was set to have an impact on all the refineries, and that's what we saw in Chennai Petroleum itself. The company posted a gross refining margin of around 2.393 barrels, which is down about 71% on a year-on-year basis, because a year ago they had a level of $10.34 per barrel. And just for your reference, gross refining margins are basically the money that the company earns when during its refining process. So it's subtracted at the refinery product selling price versus the price of of which they actually buy the crude. But that's what we have on Chennai Petroleum, and the next company in focus is Persistent Systems. And like I said at the start of the day, the Nifty IT is something that's been buzzing all day, and we have Rucha joining us. Rucha, what stood out in Persistent Systems Q2 numbers? The stock is up 10.5%.
You're right, Mihika. So Persistent System is up in trade today. It hit an intraday high of about 12.5% roughly. Now, second quarter earnings reveal that revenue was up around 6%, whereas EBIT margin came in flat at around 14%. Net profit was also up by 6%. But what stood out for the company is the strong order book. Well, the total order book in terms of 12-month TCV, that is total contract value, has come out as $529 million, which is up around 14% QOQ. And the ACV, that is annual contract value, came in at about $348 million, which is up about 3% on a quarter-on-quarter basis. The new wins also was up about 25% in terms of total contract value and was up about 10% in terms of annual contract value. Now, talking about the segmental mix, well, the revenue mix in terms of BFSI contributed around 31.5% to the revenue this quarter versus around 30.5% last time. Healthcare and life sciences also contributes around 27.8% for the company. Well, North America is the segment or is the area which contributes the most, around 80% in revenue. Now, talking about client matrix, well, the top 5 client contributes around 31.5% to the company. Talking about margin walk, well, margin came in flat because the wage hike impacted margin by about 210 basis points, and ESOPs, which the company had announced a couple of months back, also had an impact on the margin by 130 basis points. But largely good order wins is what the company is really, and is what the street is actually really happy about. Lastly, let's talk about the share price of Persistent Systems. Well, Persistent System, as I mentioned, is up about 12% in today's trade, but in terms of last 6 months, well, the company has given 61% return to the shareholder, and in last 1 year, the stock has almost doubled. But we'll see what the stock has to give in the coming days to its investors.
Thank you, Rucha, for giving us those details. But another IT stock that has been buzzing in trade today is Coforge, and it's up over 10% as well. Rucha, what can you tell us here?
Right. So you rightly mentioned Coforge is also up in trade today. Well, Coforge also hit an intraday high of about 12.5% and is up currently about 11% in trade today. It consistently has been outperforming since the start of the day. Well, here also 2Q numbers are surprising positively. Well, revenue was up 27.5%. EBIT margin came in at 9.5% versus 8.5%. Net profit is up 67%. So stellar numbers is what we can see over here. While talking about margins, well, margin was impacted because of wage hike and consolidation of the Signity acquisition. Of wage hike is what almost most of the IT companies have undertaken this quarter. So wage hike impact is normal for IT companies in this kind of a particular quarter. But let's talk about the order intake and the executable order book. Well, organic executable order book over the next 12 months is up about 3.5% quarter-on-quarter basis. Talking about well, the segmental analysis, BFSI again over here as well contributes most, 30%, actually more than 31% of the total revenue. Americas also contribute majority of its revenue. Well, on a QOQ basis, America was up around 55.5%. So that is very good for an IT company. Well, North America or America's segment as a whole has been weak for most of the IT companies. So strong growth over here is what is appreciable. Talking about people matrix, well, the company added around 1,440 employees in the second quarter, but the management in the con call highlights said that it remains focused on driving EBITDA margin expansion along with robust growth rate, and it aims to achieve EBITDA to OCF of around that is operating cash flow of around 70 to 80%. But let's talk about the share price of Coforge. Well, today, as I mentioned, the share price is up around 12%. 12%, but in the last 6 months, it has given 44% of returns to its investors, and in last 1 year, it is up around 53.5%. So the mid-cap IT space is really doing well, and the large-cap IT results, which we saw a couple of days back, also, posted a healthy growth around BFSI and healthy commentary around the BFSI and the North America sector. But now we'll see whether it's turn for the mid-caps to outperform or the large-cap IT companies to do so.
Got it. Thank you so much, Rucha, for breaking that down for us. I just want to mark how the benchmark, the Nifty 50, has slipped into the red. We started, the show in the green, and now it's down about almost 0.1% with ICICI Bank, L&T, and M&M dragging the benchmark down. But with that, we're completely out of time on this edition of Large Trades. But do stay tuned to NDTV Profit, India Market Close, coming up next.
This Diwali, embrace the spirit of new beginnings.
A time for fresh opportunities.
Bold ambitions
and renewed dreams.
See the world through a brighter lens as you turn your efforts into profits.
Transform your goals into wealth.
And spark joy in your journey
towards happiness.
1, 2, 3, 4.
This festive season.
Let money work for you.
And light up your future with prosperity. Let's celebrate growth,
wealth, and true happiness.
Profit Wali Diwali.
NDTV Profit's first Diwali.
From our home to yours.
I truly believe that this is not only India's decade, but India's century, because of several radical reforms that India has carried out, structural reforms, digitization, the focus on infrastructure, and it is going to be India's century. And I really compliment NDTV for launching the NDTV World Channel. This will enable us to take the message of India to the rest of the world.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
the whole day passes like a blur. The news just whizzes past. And you're trying to stay informed.
Well, quite a turnaround from yesterday's session, but you have to admit that the market has also come off a little bit from the levels that it was trading at. So bring up the intraday of the Nifty and you will see what I'm talking about. There's a bit of a cool off in the last half an hour or 40 minutes of trade. The peak was somewhere here, but the last half an hour has seen a slide. Maybe the mid cap and the small cap indices also should be pulled up just to see what's happening there, because broader markets were outperforming. They still are doing better. So about 0.8% or 1.2% for the small cap index, and those are doing okay. But the large caps have just had a bit of a cool off. I mean, is Bajaj Finance no longer 6% higher, or are there other factors to this? I mean, just saying whether the losers have come off a bit, or is it some of the whether the gainers have come off a bit, or is some of the losers sulking more? I reckon the latter. So you're seeing an ICICI Bank now down 1.5%. You're seeing Axis SBI down as well. Reliance Industries in the red too. So therefore, some of the banking names, save for HDFC Bank, are in the red. And the gainers, very strong moves for the Bajaj Troika, of course. Bajaj Fin still about 5.5% higher. Tech Mahindra 2.3% along with HCL and TCS. So IT is kind of thwarting that little bit of downtick that is coming in from ex-HDFC Bank banking stocks. But trust me, viewers, the real gains or the real moves are happening at the broader end of the spectrum. And Agam, I mean, some of the up moves really in the session today, relative to the down moves yesterday, the up moves are breathtaking.
Absolutely, and it's not just short covering, right, Neeraj? I reckon a lot of these up moves are backed by earnings for a lot of these counters. So a whole host of them, in fact, which are in fact advancing and on good volumes too. So actually, we'll take a look at the small cap index, which is of course outperforming the benchmarks, but the mid cap index is also up by around 8, well, there you have it, 0.7 of a percentage point, and again above the mark of 21,000. Let's talk about a handful of these key movers, right? Because they're really clearly moving on the back of the kind of traction that we've seen with respect to earnings gone by. And well, the mid-cap IT space today stands out. And we have seen a 12% up move for Coforge, a near 11% up move for Persistent Systems. Emphasis also leading the gains, building on the gains that we've seen over the previous few days as well, on the back of good, strong earnings coming through. But let's look beyond the mid-cap IT space, and there are plenty of other gainers as well. So you have the likes of Amber Enterprises reacting to that strong earnings coming through. Zomato has not only recovered, but recovered from days lows. Covered all its red, and now it's actually now advancing by around 3% at the moment. And Canfin Homes showing a lot of strength on account of that strong disbursement number that we've seen in its quarterly earnings, as well as the decline in the key operating metrics, specifically the the NPAs. But on the other hand, we have severe weakness in the likes of Chennai Petro, again reacting to earnings. Gujarat Fluorochem, the update here is positive. It does seem like we're looking at a bout of profit taking. And of course, M&M Finance, while the numbers do look good, but there's plenty in there where the street has not taken kindly to, especially when it comes to miss in some of your key expectation and key metrics. But all in all, we're certainly looking at an improvement in your broader markets, and that perhaps is the big takeaway today. I'd reckon that a lot of bulls, when it comes to the mid-cap and the small-cap space, will be heaving a sigh of relief today. Neeraj.
Okay, well, sigh of relief for sure, but select stocks under pressure, as is the norm. Ruchit Jain, lead analyst at 5paisa, Johnson with his thoughts on the technicals, and Shivangi Sarda, analyst equity and derivatives and technicals at MOFSL, join in. Both of you, thank you so much for taking the time out and being with us. Shivangi, to you first, obviously so, ladies always. How are you watching the action today? Because yesterday it seemed like all was gone. 24,750 was taken out with near ease. And today, to the last half an hour, we've given up some of the gains on the benchmarks, the large caps at least. How are you seeing the Nifty action?
Of course, very good afternoon. Thank you for having me. So we've seen that there has been some sort of a pullback move over here, but I don't see any reasons to cheer up, because this is just minor pullback that we've seen in the index. If we look at the weekly basis, the index is still facing somewhat of a call writing zone, which clearly indicates that upside remains capped for the indices. Now, there has been a lot of selling pressure in the mid cap, which is, of course, having a lot of pressure on the broader market breadth. So in that case, we are looking at some sort of a range-bound move, some volatility here, because there has been some bargain buying at these levels, but then again, upside remain capped. So 24,250 is the important support that we're looking at, which will act as a make or break zone here. And 24,750 is the next hurdles that we're looking at for the Nifty index. Now, of course, Bank Nifty has remained comparatively stronger than the entire broader market. And even though we did see a sell-off yesterday, but heavyweight, especially HDFC Bank, have been holding this banking index. Now, the reason why the overall markets are drooling up, because of course there is a lot of global concerns, and the dent is of course personal in our market. But Bank Nifty, if we look at the heavyweights, they're still kind of performing, and we're looking at some outperformance here till the level of 52,000 zones here, and 51,000 being as a make or break zone.
All right. Fair enough, Shivangi. But Ruchit, come in on this conversation too, right? Because, just a few days ago, we were looking at a lot of writing around the 24,500 put. I believe, if I'm not mistaken, there are some crucial daily moving averages around that mark as well. And that said, on the higher end, we continue to face that resistance around 25,000. How are you addressing and approaching the benchmark now?
Yeah, hi, very good afternoon to everyone. Agam, if we see in this entire month of October, has seen price-wise correction mainly because of FIs selling. While they have sold very aggressively in the cash segment, in the index futures also they have short positions of about 66-67%. In fact, if you look at their long-short ratio, they started the series with around 81% long-short ratio. And as the series progressed, this ratio has now come down to around just 33% long position. So I think until we see any kind of reversals in that data, I think the pullback moves are likely to get sold into. From the options data, what we can make out at that for 24,400 might act as a temporary support for the markets, because there has been some put writing seen over there today. But if you look at the call options, then significant writing is there in 24,600, 700, even 800 options. So at every pullback moves, I think markets are likely to see face hurdles because of the call writing positions which are there. So upside seems to be kept on the index front. I think there have been good stock-specific bounce back today, mainly because of the oversold setups on the mid-cap index. IT is the only index that is looking positionally positive. But apart from IT, if I look at the other sectoral indices, none of them are showing signs of bottoming out yet. So we are very selective in the markets from here on. Any pullback moves, I think, should get sold, and we could see some further downside in the near term.
All right. Shivangi, based on that, your picks for today?
Absolutely. So I'm looking at some of the exchange-related counters, which are looking quite positive. MCX is on my radar, which is clearly respecting its 20 daily exponential moving average, and given a fresh breakout at the higher zones, which clearly indicates that strength is visible here despite the market weakness and volatility. Now, of course, growth is fueled by rising F&O volumes and the new product launches that we're seeing in this category. And of course, with the technology overhang, the retail participation has also increased. So, which is why MCX is well positioned for a sustained growth over here with scalability. So this is one pick which is looking quite positive. And from the last 15 months, we've seen that any minor declines have been converted into buying opportunity here. So next targets that we're looking at for MCX is 7,000 levels with a support of 6,600 zone. Now, the second pick, which is on my radar, is TVS Motor. This stock has comparatively held on as compared to the other peers in the entire space. And we're seeing that on a weekly basis, it's respecting its small channel that has been created from the last 3 to 4 weeks. Now, even on the month-on-month basis, we are seeing buying clearly visible here. And this is one stock which has faced less of a dent here as compared to the other names. So definitely this is one of the stronger names. And we are expecting around about 2840 targets here. So recommending a buy here with a stop of 2680.
That's Shivang. Those are Shivangi's picks. But Ruchit, what about you? Stocks that are looking interesting to you this afternoon?
Well, only IT is one sector where stocks are looking interesting to me, and Mphasis would be my pick within that space. Because the stock has been forming a high top, high bottom structure. We have seen many of the mid cap IT names showing up move supported by good volumes. I think that trend could continue, or relative outperformance to the markets could continue going ahead. So Mphasis can be bought from a trading perspective with stop loss below 3,000 for potential targets of 3,300 and 3,350.
Okay. Single stock, and that one too is up 4%. Result, what some of the other IT companies have done, and what have they done? Let's get in Rucha to talk about this, because Rucha, I don't think too many people would have anticipated a double-digit return on such expensive names, but what are showing in the quarter?
Right, so let me talk to you about Persistent Systems. Well, the 2Q earnings really surprised the street positively. Well, our revenue was up about 6%, but margin largely came in flat because of a wage hike impact. As we can see over here, EBIT in absolute terms was up about 6%. Net profit was also up about 6%. But what really surprised the street positively is the total order book of Persistent System. Well, the 12-month TCV, that is the total contract value, was up about 14% QOQ to come in at about $529 million. And in terms of ACV, that is annual contract value, that also was up about 3% QOQ. Now remember that IT major like Infosys reported a dip in the total contract value. So this is really positive for a company like Persistent System. But the new deal wins was also healthy, up about 25% in terms of total contract value and up about 10% in terms of annual contract value. So new deal wins and the total order book also remains healthy for the company. Talking about segmental mix, well, BFSI saw a good growth, which contributes about 31% of the company's revenue, and North America, which contributes about 81% of Persistence revenue, also saw a healthy growth over here. Now, talking about margin walk, as I said, that EBIT margin was impacted a bit by wage hike by about 210 basis points, and also ESOPs, which impacted the margin by 60 basis points, and that is why that revenue growth is not converted to margin, and margin came in flat at about 14%. But this is what the management said, that they are seeing an uptick, especially in the banking space. But let me move on to talk about Coforge. Well, this one is also hit an intraday high of about 12.5% in today's trade. Here numbers very stellar. Revenue was up about 30%. Margin came in at about 9.5% versus 8.5% in the previous quarter. Net profit up about 68%. Now, the company also added 13 new clients in the second quarter versus 10 clients in the first quarter. Well, talking about the segmental breakup, Americas, which contribute the most of the company's revenue, grew about 55.5%. Well, BFSI, which contributes about 30%, also saw a healthy growth in terms of Coforge. Talking about what the management said during the conference call, well, they said that cross-selling between Coforge and Cigniti is progressing as per expectation. Now remember that Cigniti was the acquisition made by Coforge a few quarters back, and it also expects growth to remain broad-based across all the verticals. Now remember that these mid-cap IT companies had given more returns than the large-cap IT companies already. Well, Coforge has doubled in last 1 year for its IT investors, but then going down the line, we'll see whether large-cap is doing well, because large-cap names like IT and Infosys are also reviving on the back of rate cuts, especially because of the growth in the BFSI segment. But we'll see whether it's mid-cap or large-cap which will do well in the coming future.
Well, thanks for that, Rucha. For now, mid-cap and select pockets are doing well. Sandeep Kalra of Persistent spoke to us, in fact, earlier about the quarter gone by's outlook on H2. Listen in.
We had another good, strong revenue growth quarter, 18.4% year-on-year in dollar terms, 20% plus in rupee terms. And on a quarter-on-quarter basis, it was roughly about 5.3% in dollar terms. Now, this was led by our healthcare life sciences segment, followed by BFSI. We saw reasonably good growth in both the segments, followed by tech, which we are seeing a good revival. The EBIT for the quarter also came in healthy, a 22.8% year-on-year growth at 14%, which is flat quarter-on-quarter despite the salary increase, which dings us by about 210 basis points. So we were able to overcome the negative effect of the wage hike that we had given effective July 1st. And for you and your viewers, we basically kept the timeline that we had for the wage hike. We did not defer the wage hikes as some other peers in our sector have done. So overall, broadly a good quarter. Good segmental growth across and good client growth across.
It's showing in the way the stocks have reacted. Deven Choksi of DR Choksi Investment Managers with us. Deven, good afternoon. Thanks for joining in. I want to start off straight off the bat with the topic that we were talking about, which is a select mid-cap IT, which has done so well in the quarter that the street has chosen to give it a strong thumbs up. Double-digit gains for Coforge, for Persistent, and as a result of which some of the other mid-cap IT names have done well. What have you made of those numbers? Enthusing enough to buy into them? Or would you use the rally to sell if you had them?
Hi, Neeraj. Good afternoon. Absolutely spot on. I think the earlier part of our discussion also alluded to the mid-tier IT companies showing remarkably better performance compared to the frontliners. The frontlining companies definitely have their own challenges, but they are also overcoming those challenges. These guys are, I think, relatively smaller in size, but I think having a niche customer to operate with, that is where probably I think they are scoring relatively better, amount of orders if I have to put it across. In fact, I think more than orders, though the orders are happening in the subsequent quarters as per the commentary of the management, it is the body language and the confidence of these promoters and the management which speaks, I think, good amount of comfort for investors like us. Because we always thought that I think the worst is over for IT companies. The vertical-wise, the niche play is basically, I think, assuming significant high amount of opportunity. We believe that the AI-led computing is going to open up new user industry segments for many of the IT companies. Up till now, people have been talking about the automobile and the aviation, but I think we believe that I think the scale is now getting extended to even the tech employed in healthcare, even the tech employed in media, and I think so is the case with I think the other e-commerce players also in the retailing segment. I believe that I think most of these players have the ability to basically I think service the customer, and I think with these new contracts coming in for them, gives more amount of visibility. So we like the underlying strength of many companies, including the ones which we are discussing today on the show.
Right, Deven, good afternoon. Agam here. What are you making of Bajaj Finance, the earnings here? It does seem like all the challenges that the management is portraying for now has been taken into our consideration, and even after that, it does seem like investors are rewarding Bajaj Finance.
Yes, Agam, good afternoon. Well, I think this particular company has shown a remarkable ability to keep adding the newer verticals within the financial stream or the finance stream that they are working with. If on one side, if the Bajaj Auto per se is pulled out of the equation, they have added other two-wheeler to add into the portfolio for financing and the scale of the numbers significantly. On the other side, suppose if the MG kind of company coming up with a model for renting out the battery, and I think this company has already got themselves present in battery financing. What I like most about this particular company, they are absolutely, I think, on the ground. Wherever they see the opportunity, I think they create the size out of that opportunity and size it big. Like for example, battery segment in Bajaj Finance case, I think could be somewhere around 14,000-15,000 crore already. Now, if this is a growth area, they are already present into this particular area. Earlier, I think the housing finance business, within the housing finance business, I think the different verticals which they ended up creating, and now it's a separate company listed altogether. I think this company has the ability to probably drive it through. The numbers looks pretty interesting from the AUM growth point of view. They continue to grow AUM. What has been a little bit more challenging is the NIM pressure at this point of time, largely because of the fact that I think some amount of higher cost got factored into the borrowing, which I believe that in subsequent quarters, I think is going to play out well, because now they're pricing their loan also accordingly. So from that perspective, I don't see too much of a problem. I believe that I think this company is overcoming whatever the consolidation phase in which they were operating up till now. And I think would likely to show relatively smarter performance going forward.
Okay, SBI Life numbers on your screen as well, but the numbers below estimates, so bear that in mind when it comes to this particular stock. What else? We've seen stocks fly around. Deepak Fertilizers, for example, is up a whole 15% in trade today. Really strong show. We already spoken about the likes of Persistent and Coforge, which have done really well for themselves. But a clutch of other names really flying around in trade for sure. Vishnu Software, 11% if I'm not wrong. So that one too is packing a punch. Which of the results, Devendra Choksi, have you liked the most thus far? Because a lot of them have given a positive commentary, but not necessarily good reportage.
Yes, you are right, Neeraj. I think in this particular quarter, suppose if I have to take a discussion forward, say company like Supreme Industries. What we like most about them is that I think they have got the complete product portfolio aligned to the consumption space in the, for example, in the real estate space, a piping division. Similarly, there are other products I think which are going into the different other verticals, user industries. This company is upfront and candid in saying that in this particular quarter, because of the monsoon season, the offtake hasn't happened as much as I think it would happen in the normal quarter. So this is a typical character of this particular quarter itself. In the third and fourth quarter, they are absolutely very clear that I think the offtake is going to be on a larger side, on a higher side. Now, when you hear this kind of commentary, you probably realize few things. As an investor, I think you need not look at everything on a quarterly basis as far as the numbers are concerned. While the big picture is still in place, I think you should look at how exactly it is unfolding. And that's what I like about the results, I think, which companies like Supreme Industries talked about. Similarly, I think we mentioned already IT companies, and I think their results along with. Even the finance companies, I think, which I believe, Bajaj Housing Finance, which we talked in reference, but is again, I think, showing a typical growth. Even Canfin Home, I guess, I think, is showing a typical growth character. So in my viewpoint, I guess, I think the housing finance business growing at a steady pace of around 20% plus rate of growth. The retail finance business growing at a higher rate of growth. I believe that I think these are some of the possible numbers I think which are likely to show subsequently better performance more than I think the second quarter. So I would not keep second quarter as a base. I would keep I think this particular quarter as a quarter in which I think the normally second half is prepared. So that's what I think most of these companies are likely to come up with the numbers in the second.
All right. One of the bigger movers of late, of course, has been BSE, but along with that, we've also seen quite a bit of a correction in BSE after it hit a life high just a few days ago. And it does seem like we're seeing about a short covering today, but it was very near to the mark of 5,000 just a few days ago. And the question really is that, are we done with that bout of correction? Shivangi, if I can take this question up with you, what is your assessment on BSE and what levels would you keep in mind at this point in time?
Absolutely. So, Agam, we've seen that BSE has moved by more than 100% in this calendar year so far. And, we've seen spectacular returns here. And the way this stock has consistently moved in the last, if I may say 2 months, it has been, quite, understandable that there is some sort of a correction here. But I believe these stocks have still, this entire space stocks are still doing quite well. And this stock has, still retraced near about 4,000 levels, and which is a crucial level here. So I believe there is still, steam left in the stock, and we could look at, the next targets of 4,400 here. With a support of 4,100 level. So, as soon as the market stabilizes and recovers, this stock is, going to be one of the first to move. Yeah.
But between the two exchanges, you like MCX more than BSE, Shivangi?
Absolutely. BSE has somewhat sentiment, or I may say correlated to the, broader market. So that is why we're seeing a bit of a sentiment dampening here in BSE. But of course, MCX has been resilient despite the market volatility. So definitely at this point of level, MCX is looking quite positive. But as soon as the market recovers and stabilizes, BSE is sure to be one of those sectors or stocks, to move and catch hold of this rally.
Okay, Shivangi, we'll leave it at that. Thanks so much for taking the time out and being with us on the show today. All right, some numbers, Heritage Foods and then Lloyd's Metals. So Heritage Food is down 5% because the revenue number doesn't look all that great. Lloyd's Metal, net profit is up 30%. That's the one flash that I have. Let's see if the other details come in. But on Heritage Foods, revenue is up single 4-digit on Heritage. But the margins expanded quite meaningfully. As a result of which I thought that the margin performance looked strong. But the street clearly disappointed with the revenue growth numbers. In Lloyd's case, revenue and profitability 30% apiece, not bad. Okay, NIT, learning numbers too. Flat revenue performance, margins dipped a little bit, net profit down 5%. Let's get in Mr. Vijay Thadani, co-founder of NIT, joining in to talk about the numbers. Mr. Thadani, good having you. Thanks for joining in. On a sequential basis, on the revenue front, seemed a very flattish quarter. Is this how it was supposed to be, or did you miss a trick? And what's the outlook ahead on the top line?
First of all, I'm not Vijay Thadani. He is the co-founder. I'm Sapnesh Lala.
Okay, Mr. Lala, excuse me for that.
No problem.
Thank you for joining in, Mr. Lala. Yeah, of course.
Thanks for having me. It was a quarter which was below our expectation. We were expecting a quarter with a couple of percentage points growth. However, we did notice middle of the quarter that things were not going as well with some of our customers, specifically in the professional management consulting and professional services segment, as well as the real estate contract we have in North America was not catching the sentiment given the interest rates were still continuing to be high. Outside of those two, so you are right, the revenue came in a little bit lower than what we expected. We did retain the profitability. We added 2 new customers, 2 market leaders, one in energy and one in FMCG. We did improve on our visibility. So as you look ahead, or as we look ahead, we feel that the second half will be significantly better than the first half. We felt that we may be able to start accelerating our year-on-year growth in Q2. That was not to happen, but we think that we will see acceleration in YOY growth in the second half.
Does that alter the trajectory of what you would do sequentially as well? So I understand YOY growth will be strong. Since the street was looking at your numbers sequentially, they looked a bit flattish. But does this strong YOY growth change the sequential nature of the growth as well? And can it happen at better operational metrics than what you've done in Q2, Mr. Lala?
So we think that, our business has seasonality in it. We do, because training is a contact sport, and a number of countries in Europe are on holiday in summer. And so we have a seasonally flat quarter. This quarter is typically flat from a sequential perspective. We do pick up steam as we get into calendar Q4. So that's next quarter, October, November, December. And then that trajectory continues into the fourth fiscal quarter. Overall, from a year-on-year growth perspective, like I was pointing out, we think that we'll see acceleration going into October, November, December, and then we will catch momentum in our fiscal fourth quarter. Overall, for the year, we are expecting a 7+% year-on-year growth.
Lala, in terms of pricing your services, is there a big difference when it comes to segments related to technology and telecom as compared to, say, something like a BFSI or life sciences? Is there a substantially wider difference? And under those circumstances, are we also expecting a change in the mix as we move into the second half of the year?
Our pricing doesn't necessarily change from segment to segment. Given that our focus is learning, the pricing is not affected by the segment. The pricing is really affected by what we do. We do feel that over time, not in the next 1 or 2 quarters, but over time, we will start seeing a premium on pricing as we start incorporating AI into our solutions.
Well, in that case, Mr. Lalla, if you could just give us an outlook on the second half of this financial year then. If you could give us any idea with respect to growth on terms of revenue as well as your operating metrics.
So we expect mid-single-digit growth in the third quarter and significant double-digit growth in the fourth quarter, such that for the year, we will end up with a 7% plus growth year on year.
So Lalla, we'll leave it at that. Thank you so much for joining us and taking us through the quarter, as well as what we can expect going forward. Of course, the stock at the moment, right now, is under pressure, down 2%, but not too much in the decline for now. On that note, we slip into a short break, and on the other side, we get you much more with respect to markets. Back in just a bit.
This Diwali, embrace the spirit of new beginnings.
A time for fresh opportunities.
Bold ambitions
and renewed dreams.
See the world through a brighter lens as you turn your efforts into profits.
Transform your goals into wealth.
And spark joy in your journey
towards happiness.
1, 2, 3, 4.
This festive season.
Let money work for you.
And light up your future with prosperity. Let's celebrate growth,
wealth, and true happiness.
Profit Wali Diwali.
NDTV Profit's first Diwali.
From our home to yours.
It's been more than a decade since I was on the ground here in India. I follow from a distance, but on the ground, what I see is the remarkable progress that India has made, and in particular, the success of the government in leading the nation into a better future. So it's very encouraging at a time when you see many other governments that are struggling to do anything right, to see a government that's really succeeding.
We're going to look forward to hearing this and a lot more from you. I'm not going to give most of it away, so stay tuned for that conversation with Paul Romer. Thank you so much.
Thank you.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Long Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
As we've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable show.
If you want to be in the money.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Lord Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators.
Welcome back. This is India Market Close. Amber Enterprises is buzzing in trade today after reporting in 82% growth in revenue in the second quarter. How were the results and what are the key takeaways from the conference call? We have my colleague Puneet joining us now. Puneet, what do you have for us?
Well, thanks for that. So, definitely a big beat on revenue. And what's impressive is that the analysts have projected a 40% revenue growth in this particular quarter. So, it's, doubled that kind of expectations in an 80% revenue growth. There's also been an EBITDA growth of 91% versus the analyst expectation of about a 35% EBITDA growth. So, a beat on that count as well. And that's translated into strong profitability as well, coming at 20 odd crores versus expectation of 3.5 crores in this particular quarter. So, it's a beat on all fronts. And that's led by the consumer and the electronics division. Now, the consumer division, as we know for Amber, is the room air conditioners as well as the non-RAC component as well, which includes the likes of washing machines as a component in this business. That's grown 97% in terms of revenue. The electronic business, which has the PCB assembly, that's grown by approximately 98%, while the railway division has been subdued, and that's largely because of lower ordering of Vande Bharat trains in this particular quarter as well as in the last quarter as well. And the management has said they're expecting that to be better in the next second half of the fiscal year, a larger ordering in that pace. That can also be reflected in the EBITDA margins as well. Strong growth of the consumer business, roughly about 160 basis points in EBIT margins. But the electronic division has higher margins compared to the traditional business, and that's grown by 250 basis points in this particular quarter. But what's important is that, because the stock started at about 3 to 4% up in trade today, and the analyst call happened at 9:30, and post that, we've seen the strong reaction in the stock, and that's largely because of a couple of major points that they said in the traditional business. They said that, while they've done a groundbreaking ceremony in Tamil Nadu for the new electronic plant, and this is in a joint venture with Korea Circuit, which will be manufacturing PCBs in India over the next 12 to 18 months. But they said for AC business specifically, there are two things. It doesn't matter to Amber that brands are exchanging market share amongst themselves. So Voltas has dethroned LG in this particular quarter. That was one important thing. Apart from that, they said the brand changing strategy to insourcing of manufacturing of air conditioners also doesn't hamper them, because they can sell higher components to them, which is a higher margin business. That was one key takeaway from me. And Kotak also, while we are awaiting most brokerages, has a buy call on the stock. They have raised the target price to 6,000 rupees. Now that's a bit below than the current market price. but they've raised it from 5,190 rupees per share, and they estimate a 7 to 8% growth in estimates over the next 2 years and up to 5 to 9% over the next 3 years. So overall, a big thumbs up to Amber Enterprises on all fronts. Outlook also seems very positive for the same. Back to you.
Okay, indeed. Thanks a lot for that. 13.5% higher. Richard, you want to come in and take a dig at this one first? Has it run its course? Because it's been very, very choppy the last 3 days.
Yes, there has been volatility, but the overall trend still has been strong. If you look at the stock performance compared to recent market correction, so I think the stock has shown a good outperformance, and that is likely to continue because on the broader time frame, that high top, high bottom structure is still there. So I think the best way to ride this trend is to keep trailing stop losses on existing positions. Now 5,500 to 5,800 is a very strong support zone on any kind of dips. So if any existing positions are there, then they can continue to hold on longs with stock below 5,500.
TVS Motors numbers on your screen. 23% uptick in profitability. Margins have expanded a bit as well. Revenue slightly below, if I'm not wrong, 13.3% higher in trade. So not quite a Bajaj Auto. I think the commentary from TVS would be interesting to notice, but watch out for this one. Devin, quick thoughts here before we get to the other story. TVS Motors numbers, margins at 11.7 versus 11%. EBITDA up 20%, net profit expands, I think 23.5%. Right. Any thoughts on these numbers, Devin?
Neeraj, haven't, I think, had a chance to look into it in detail. But from what you are narrating, I believe that I think the numbers are more or less in line with, I think, the expectations, including on the margin front. The important part in this particular quarterly results that we are seeing in some of these cases, the companies have started getting some benefit out of the revival in the two-wheeler segment and at the same time premiumization of products. That is reflected in the margin, and the revival is reflected into the sales and the profit numbers. In my viewpoint, I think it would be interesting to see how post-monsoon, when the purchasing power starts kicking in the rural India, how it will probably start generating better demand, particularly for the likes of Hero and the TVS from the rural India. It's going to be interesting to watch out for. Otherwise, from the valuations perspective, as I see it, almost everything is priced in. So good luck for continued growth in the business. Because if the growth disappoints, the market will not accept, I think, the valuations which are currently at a level at which it is fairly valued at.
What's really happening right now with TVS Motor Company is that it was anyways pricing in a very strong quarter. What's happened is that there's just a notch of a miss when it comes to both profit as well as your top line. And you know how things are. Whenever you have a company which is richly valued, even a small dent, very, very small dent, even though you have about 20% growth in your EBITDA and about over 20% growth in your profitability, you are going to see that sharp knock, which is why TVS Motor Company has now fallen off from its day's highs, and it's now looking at a cut of around 6.5%. But on that note, let's get in my colleague Mihika to tell us about okay, well, maybe we can wait for that.
I wonder, I'm not a biker, and therefore I'm interested, if maybe you are, I'm just asking. So Bajaj Auto gave an outlook which wasn't the rosiest.
Yes.
TVS has missed estimates. I was looking at the exchange, we still don't have the outlook, at least. But does it, I mean, the last leg of auto in the current year was two-wheelers, because we know four-wheelers are facing an issue. That too seems to be coming under a bit of a cloud.
Yes. So Neeraj, firstly, Bajaj Auto is very much focused on the premium segment. TVS is slightly mid, and it does seem like while they are seeing growth, the concerns that Bajaj Auto had laid out there with respect to their own earnings for the festive season, it does seem like that's something which is going to weigh down on TVS Motor Company as well. Of course, we'll await what the management has to say. The only thing that could potentially change things around for TVS Motor Company is if they do in fact indicate a stronger, festive season for TVS Motor Company as compared to what Bajaj Auto has said. For a reminder, the management has suggested about a 5 to 6% growth for the festive season in terms of sales. So it's going to be a wait and watch as to what TVS Motor Company tells us about what they are expecting for the third quarter coming through. It's going to be the largest quarter, obviously, because of the festive season. But on that note, let's go and take stock of a company which has actually made a very interesting announcement. It's under pressure, and that's Gujarat Fluorochemicals. But the update here seems to be a positive one still. Let's get in my colleague Varsha to tell us about the latest with respect to their plans in the EV space. Varsha, good afternoon.
Well, thanks Agam for that. So we all know that Gujarat Fluorochemicals subsidiary company, that is GFCL EV, is going to raise 1,000 crore, and which is at 25,000 crore valuation. Now we all know what the deal is and everything, but let's see what lies ahead. What is the capex plans, and what can be the profits for the battery chemical business be? So they're going to invest almost 2,400 crore in the next 2 years, and they have a plan to invest 6,000 crore in next 4 years. And if you see the revenue realization, so the asset turnover is almost 2x. So the revenue that they're going to realize is at 4,800 crore by, let's say, FY29, because there is gestation period involved when it comes to EV battery chemical business. So they are expecting an EBITDA margin of around 25%. So that makes up EBITDA of around 1,200 crore by FY29. Now, if you just calculate the EV EBITDA multiple, stands at around 20x basis FY29. Now let's go let's just deep dive and see what net profit this company can see. So revenue at 4,800 crore, profit margin at a conservative level takes 16%. So the profit comes to around 768 crore. And if you take a PE, that is price to earning multiple of 35x, the valuation comes at around 27,000, which is in line with what Gujarat Fluorochemical has given, around 25,000. But this is taking into perspective the capex for next 2 years. They are also going to raise more funds, as said by management, to NDTV Profit. Now what lies ahead depends on the execution capabilities and the other external factors. Now this is a positive development for the company, but the stock is down 5% in anticipation. The stock has moved, but this may be just a profit booking. Now why I'm saying this, because if you see the last 1 year returns for the stock has given almost 67% returns to the shareholders, while in last 6 months the stock is up around 20%.
Okay. Well, thanks a lot for that, Varsha. 7.5% down now for Gujarat Fluoro, so bear that in mind. Just before I get in my colleague Puneet to deep dive into TVS, Deven Choksi, a word on Gujarat Fluoro, has run up massively, but has done the EV deal and the stock has cracked on the news. What would you do here?
Well, I think only one thing which gets answered here is that I think the subsidiary which is getting into the larger part of the supply towards the electric vehicle storage battery mechanism, I believe that I think the valuation is fully priced in. Today, if you look at even the trailing 12 months, I think numbers, then also the valuation stays well above 100 times price earning ratio. Now, I think if you have to even minus the subsidiary and its valuation, still you are not cheap. I think that's where probably I think the major challenges are going to be in this market, that all other fundamentals remain in place, all the possible outlook and the potential remains in place. But at the same time, I think when they are richly valued, probably even the good news will not help you in probably scaling up in the market. And that is going to be reality for one and many other stocks within respective sectors. So one will have to be careful. One would like to buy these kind of companies when it is available at a corrected price valuation, and also I think rationalize on the time valuations.
All right, Deven, well, we leave it at that. Thank you so much for joining us and taking us through your views on all the questions that we had for you. But we are going to take the matter around TVS Motor Company forward. Let's get in my colleague Puneet to tell us what he makes of these numbers. Puneet, what are you spotting here?
Well, it's a definite miss on the numbers specifically, because revenues was expected to be around 9,419 odd crores, while it's come around the 9,200 not, but the miss is slightly because that's impacted margins by around 20 basis points as well. Estimates of around 11.9%, while profitability was expected to come in roughly over 696 odd crores, and it's come in about 663. So while the miss is not large, the reason is because Bajaj on the other hand had the numbers, it beat all analyst expectations, while the commentary was something that was cautious from the CFO at that time for Bajaj Auto in their conference call. So while numbers are a slight mess, we'll have to deep dive into this, but the interpretation will be that the 125cc segment, which we spoke at length about Bajaj as well, that might be one of the things that's affected here, because we've seen increased competition from Honda as well as Hero MotoCorp here with the launches of those two with Shine as well as other launches there, and the competition has heated up very significantly in that segment, and that might be leading to discounts as well, which has happened in this particular season. So now we've also seen the Bajaj 125cc launch a new one in this particular month itself, and that will increase the competition. So I think for TVS, while the numbers are slightly below analyst expectations, I think the conference call commentary scheduled today at 5 p.m. will be something to watch out for, because we saw the sharp reaction for Bajaj just on monthly numbers. So if the management can delve into how Navratri and Dussehra was, that'll be key. But overall, slight miss on the TVS numbers specifically, and that's impacted the margins and profitability as well.
Okay, thanks a lot for that, Puneet. And Ruchit, any thoughts on TVS Motors, the stock? Also, your top BTST or STBT as the case may be?
So I think TVS Motor today in the closing would be very important. The stock is trading around its 100 EMA support, which is around 2600. If the stock gives a close below 2600, which mostly likes to be the case, then we could see some further unwinding of positions, and next support is directly around 2380, 2400 kind of range. So it looks a bit weak. I think we should see that 2380, 2400 level getting hit maybe next 1 or 2 trading sessions itself. As far as BTST, STBT is concerned, pharma sector is looking a bit weak over here. Although this is one of the sector which in volatile times generally shows some positive move, but chart structures are showing something different today. Many of the pharma names are showing a breakdown of the important support, such as Alchem is there, Sun Pharma is there. So Sun Pharma would be one stock where I would recommend STBT going short in today's trading session, just from a day's perspective. One can go short over here. The stock has breached its 40 EMA support. So with stop above 1880, one can expect pullback move towards 1790.
All right. Well, on that note, we do have a slew of energy and oil and gas companies which are set to report their second quarters in the next couple of days. And Mika is now joining us to give us an walkthrough of all the expectations. Mika, over to you.
Yeah, as we have big energy as well as metal and oil and gas names that are going to be posting their earnings tomorrow and day after. Let's start with key earnings on 24th October, which is Thursday, and that's tomorrow's. We have NTPC, JSW Energy, Petronet, LNG, Mahanagar Gas, and Adani Total Gas. For NTPC, as per Bloomberg consensus estimates, revenues, EBITDA, and profits are expected to grow 4.5%, 4.7%, and 9.3% respectively on an annual basis. For JSW Energy, the revenues and EBITDA is expected to grow 11.9% and 38%, while profits may fall 20% on a year-on-year basis to around 684 crore as per Bloomberg consensus estimates. Petronet LNG EBITDA likely to rise 6% on a quarter-on-quarter basis because of higher utilization at their Dahej terminal, as well as lower LNG prices that will help drive performance. Mahanagar Gas, we have Nuvama, where volumes are expected to rise 8% on a year-on-year basis, and sequential fall in EBITDA and margins are expected due to Bloomberg because of high realizations and operating leverage. Coming to 25th of October, well, we have Hindustan Petroleum, Bharat Petroleum, and Inox Wind. Well, HPCL and BPCL, while the refining segment is expected to be weak due to lower benchmarks, the lower oil prices are expected to help the companies see healthy marketing margins on petrol and diesel, which is expected to support earnings. When we talk about their profits, well, as per Bloomberg consensus estimates, HPCL and BPCL's profits may jump 430% and 22% on a sequential basis. Inox Wind, well, Systematics believes that better execution is going to drive growth. Revenue growth of 106% on a year-on-year basis expected. Lastly, let's go to metals and mining's key earnings on 25th October, Friday. We have JSW Steel as well as Coal India that will report earnings. JSW Steel's, well, lower steel prices are expected to harm the company's earnings. Key financial metrics are expected to fall on an annual basis, and earnings will be impacted because of the 2,400 to 3,500 rupees per ton fall in steel prices. And lastly, we have Coal India, where as per Bloomberg estimates, revenue, EBITDA and profits may grow 4.2%, 28% and 24% respectively. And brokerages, however, the brokerage outlook is different. Axis and Nuvama do expect a 9 to 13% fall in EBITDA, so it'll be key to see how these earnings play out.
All right, Mika, thank you so much for getting us all those key earnings that we need to keep in mind. But Ruchit, well, a final take on potential buy today, sell tomorrow, or sell today, buy tomorrow ideas?
So one I've discussed, which was going short on Sun Pharma. I think if one is looking for to take any kind of contra trades over here, then one can look at Wipro for BTST as a BTST candidate. So ideally, IT is again the same sector where we are looking for buying opportunities, because that is only the sector that is showing strength positionally. And Wipro, I think the stock has consolidated for a while since last few weeks. So here the risk reward ratio is favorable. In case of a breakout, then we could see some good momentum over here. Keeping a stock below 538, one can take long positions for potential targets around 565.
But besides that, let's also take a look at something like an Aditya Birla Real Estate, because this is the other one which has been on a tear of late. And yesterday we saw a sharp knock, but it does seem like today we are looking at a little bit of recovery coming through. And the gains in Aditya Birla Real Estate is come through to quite an extent after the company has actually changed its name. Ruchit, anything that stands out for you with respect to this specific stock here?
Broader trend looks positive. I think it's just because of correction in most of the broader market stocks, we have seen some dip, but the stock has very strong support around 2600. Until that level is intact, I think these dips would get bought into. So it could be used as a buying opportunity with stock below 2600.
Ruchit, one outlier today in IT is KPIT Technologies. After the numbers, it's actually come off about 2.5%. Any chart check, any trade here? 3.5% now, in fact.
So if you look at last 3.5 months, the stock has traded within a broad range where 1600 has acted as a support. And in this 3 months, whenever the stock has rallied towards 1850, we have seen some selling pressure over here. So today's follow-up move post the numbers is not that good. And also today's correction has been supported by higher than average volumes. And whenever we see sell-off supported by high volumes, then there could be a relative underperformance in the near term. 1600 would be very crucial support level for the stock to watch out for. In case if that is breached, then expect some price-wise correction. Otherwise, that could be a case of time-wise correction where within the entire sectoral move, I think the stock can show some relative underperformance in the short term.
Certainly not cheap. It will be important to hear from the management what they have to say, though their quarterly guidance seems to suggest, or the presentation seems to suggest that they are maintaining what they have said that they will do for FY25. Would be interesting to see that. By the way, Syngene numbers out. Remember, first half was anticipated to not be that great for the CDMO companies or CRO companies, and Syngene is kind of delivering their EBITDA flattish, margins a little bit off, bottom line numbers a little bit off. The question only is, in Syngene's case particular, what is the commentary that they are giving for the second half, and I think that will determine what the stock does. Again, a stock which is consolidated in the recent past. I can tell you, I mean, any fundamental analyst would tell you the same thing, that we need to wait for their commentary. So while we wait for that, let's try and see if the technicals tell you something. Ruchit, Syngene, any thoughts?
Momentum readings are not that positive, and I think major support which I'm looking at on the weekly charts is coming around 790 to 800 kind of level. So maybe we could wait for some dip towards that 790, 780, where in case the stock stabilizes, then the risk reward ratio would become favorable to take some contra trade. But here there is no trade setup, considering the stop losses are too far if we do any kind of bottom fishing over here. But 790, 800 I think would be a good support zone for the stock.
Okay, Ruchit, we'll leave it at that. Thanks so much for taking the time out and being with us on the show today. Let's start wrapping up the markets. 1 minute and 30 left. Clearly, the broader markets have the action. So I'll very quickly mark what the large caps have done, and a bit of a disappointing close, considering that we were well and truly in the green and ending circa 24,400, if you will, about 25 odd points higher than that. So a bit of a disappointing close for the large caps, but the mid caps and small caps have done well. So those indices are doing okay. Still off the highs of the day, by the way, mind you. But bring up the heat map for the large caps before Agam takes over for the mid caps and the small caps. A lot of red and a lot of pain in autos in particular. Look at M&M, look at iShares, both of those have come off. There is weakness in Hero MotoCorp as well, down about 0.73%. Tata Motors 0.25% lower. So that has looked wobbly. What's looked okay, Bajaj Finance, Tech and IT, then Tech Mahindra, HCL, TCS. And HDFC Bank is giving support. If yesterday it was ICICI Bank, today, HDFC Bank. But large caps, a disappointing close, Agam. Mid caps may be better.
Yes, certainly a tad better, but I wonder if the last 15 minutes have actually changed things for the broader markets. So the mid-cap index, it has come off from day's highs. It's still up around 0.4%, so there has been outperformance. As is the case of small-cap index, but it's holding on to the 1% gain. So that's clearly a positive. Let's take a look at the market breadth as well to see whether or not it has been favorable in general. It has. So about 3 gainers for 2 losers, and in terms of your big movers as far as the BSE 500 or the NSE 500 are concerned, well, we do have up move of around 14% for Deepak Fertilizers, Amber Enterprises up around 11%, Coforge, Persistent Systems, all of them advancing by around 11% respectively, and Godfrey Phillips as well, looking at an upward of 9%. What do we have in terms of weakness? Gujarat Fluoro, looking at a knock of around 7%. Rajesh Exports, we have names like ABB India as well as Siemens. Both of them were testing life highs just about 3 sessions ago, and since then they have come up by quite a bit as well. So while there are more gainers than losers in the broader markets, well, today I reckon, Neeraj, it's more stock specific, and the momentum towards the stocks which are advancing are more than those which are losing out.
Yeah, but in some sense better than yesterday, but the close may be a bit disappointing. But with that, it's a wrap on this leg of India Market Close from Agha and me and the team that put this show together. Thanks so much for watching.
This Diwali, embrace the spirit of new beginnings.
A time for fresh opportunities.
Bold ambitions
and renewed dreams.
See the world through a brighter lens as you turn your efforts into profits.
Transform your goals into wealth.
And spark joy in your journey
towards happiness.
1, 2, 3, 4.
this festive season.
Let money work for you.
And light up your future with prosperity. Let's celebrate growth,
wealth, and true happiness.
Profit Wali Diwali.
NDTV Profit's first Diwali.
From our home to yours.
I would like to congratulate NDTV on its World Summit 2024. This morning, the Honorable Prime Minister inaugurated the session, and it was a very inspirational talk by our Prime Minister, talking about not just India's role on the world stage, but also how India can play a role in the entire humanity across the globe. How India's aspirations can be the global or the world's aspiration. I think Indians have taken a lot of pride in seeing how India has been built in the last 10 years. Watching Prime Minister extol the virtues of what has been achieved and what lays ahead for India and the world was truly inspirational.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
this session couldn't have been better timed. We are supposed to speak about India's century. We speak 12 hours after India-China announced not just de-escalation, but coming back to the 2020 pre-conflict status. And that, I think, is a stepping stone for the India-China relationship normalization. And I think that should be, I feel, rightfully the first question on which we start this conversation. Mr. Mehbubani, how do you read the changes that have taken place, the diplomatic resolution in terms of the India-China standoff? It took 4 years, but your thoughts on diplomatically resolving what was a big standoff between India and China?
Well, first of all, let me congratulate NDTV. You picked a very special day for the for this meeting, and you chose you knew this was coming, that a big breakthrough was coming in India-China relations. It's actually quite amazing to have this breakthrough, because the depth of suspicion between India and China was very serious. Hopefully now they can do so. But I want to emphasize also here that I want to emphasize to you also that this is part of a larger global change that is happening in the world. It's important to emphasize that we have never, the amount of global changes we are seeing is unprecedented, right? We are moving into what I call a new, let me quickly describe the new world, a new 3M world. First M, multi-civilizational. We are no longer dominated by the West. The West can no longer run the world. In fact, the West is losing itself. And then secondly, it's multipolar, and there are other powers also emerging in this world. And thirdly, it's multilateral. So it's a different world. And it's in this context that you're seeing the changes between China and India. Both are adjusting to a new world that is coming in a positive way.
Indeed. And you mentioned multipolar, you mentioned multilateral. Again, these efforts towards normalization happen on the eve of a very significant multilateral framework, the BRICS framework. As someone who's studied China very closely for decades, as someone who understands this region very closely, I want to understand from you, sir, that does this pave the way for the next phase of India-China relationship? What would that be? And also India-China relationship in the context of the multilateral frameworks that you're mentioning, whether it's BRICS, whether it's several others. How do you see that in the context of what the two countries have managed to achieve just 12 hours back?
Well, I think certainly the most important organization that both China and India belong to is BRICS, and you can see that that this is one club that is a sunrise club. Everybody wants to join BRICS. Lots of new members. The G7, by contrast, which used to run the world, is a sunset organization. Its power and influence is diminishing. Its share of the global GNP is diminishing. When this century began, the G7 economies were much bigger than the BRICS. Now they're smaller than. So clearly, this is the one thing that is bringing China and India together. But also at the same time, I must emphasize that China's and India's rise is part of a broader Asian rise. And very few people in India would mention ASEAN, Southeast Asia, where I come from. But in the year 2000, Japan's economy was 8 times bigger than ASEAN.
now is 1.3 times big. And by 2030, ASEAN is going to be bigger than Japan, which was the second largest economy when this century opened. So there are structural shifts happening in the world that we have to be cognizant of. And by the way, both China and India want to work closely with ASEAN.
Indeed.
And it's a broader rise of Asia.
That's exactly what I was coming to. That when you mentioned that some of the newer economies are now set to become much bigger than developed economies, change the world order, how do you see that new world order? Where do you see role of India? We're talking about India's century. How do you see India's role in that new world order? And of course, the entire region, how it's likely to be reshaped in the next couple of decades?
Well, as you know, recently I published a column in the Financial Times saying it's time for the United Kingdom to give up its seat, in the permanent seat in the UN Security Council, to India. And I, by the way, that's not a frivolous point. It's a very serious point. I was ambassador to the UN for over 10 years. I know the history and background of the UN extremely well. And when the founders of the UN created the concept of the veto, they wanted to give the veto to the great powers of the day, not the great powers of yesterday, right? That's why Germany and Japan didn't get the veto in 1945. So similarly, after so many years, clearly the time has come to change the composition of the great powers of the day. And there's no question that India is already one of the greatest powers of the day. Its economy is now number 5 in the world. By the end of this decade, it will be number 3. And UK, as you know, is slipping down and will probably drop from the top 10 economies in the world. The UK, as a country, is lost. It's elected as a Prime Minister, Boris Johnson, who's a joker, who was succeeded by Liz Truss, who was a joke. So clearly the UK has lost its capability of playing a role on the world stage, right?
But do you see the United Nations?
UK's place.
Do you see the United Nations actually surviving these headwinds that the world is facing? Because the one thing that most experts agree on around the world is its redundancy and it's past its due date. Do you see that UN will survive these headwinds and it will reshape is a second factor, but do you see it surviving these headwinds?
Yes. I'm glad you said most experts. I'm really glad you used that phrase, most experts, because in the world that is changing so much, I can tell you that most Western experts are lost. And frankly, as our world is shrinking, as we become a small, interdependent global village, where we suffer from many common global challenges like COVID, like climate change, like financial stresses, we're becoming a global village. Now, you all know you can only survive in a village if you have a strong village council. And we need a strong global village council. So the need for the UN has never been greater. But why is the UN weak? The UN is weak not by accident, but by design. And the great powers, again the P5, have insisted that the Secretary General of the UN must be spineless. Now, if you pick Secretary Generals who are spineless, clearly the UN is going to be weak. But now when the need for the UN is growing, we must persuade the great powers of the day. It's time to change your attitude towards the UN and select strong, dynamic Secretary Generals like Dhaka Mashkol, like Kofi Annan, and then the UN will become stronger. But believe me, there is no alternative to the UN. Okay. Absolutely none.
Okay. So you've given headlines. We need Secretary Generals at the UN with some spine, with some ability to speak up. But then let me ask you a question or an area which I feel very strongly about, which is that a lot of strength for nations come from their economic heft. That is at the core of being able to really sit on the high table and make global decisions. at a time when there's a lot of conversation around India being at the center of global supply chains. Where do you see that journey? And in that context, do you see the Quad playing a major role? Do you see semiconductors being that big push factor, that tailwind, so to say, for us to really get into the middle of global supply chains?
Well, there's absolutely no question that India has got a magnificent opportunity to play a bigger role in global manufacturing, to play a bigger global role in supply chains, no question whatsoever. But to do so, I think it's important for the Indian economy to open up and integrate with the rest of the world. I'll give you a simple example. There's a regional free trade agreement called the Regional Comprehensive Economic Partnership that, as you know, India participated in the negotiations and so on and so forth. And India decided, it has a sovereign right to do so, not to join the RCEP. But the econometric studies show that India would add billions to its economy if it's integrated with East Asia. And as you know, most of the manufacturing today comes from East Asia. Japan, South Korea, China, ASEAN. They are the biggest sources for FDI, And you know what's amazing? Southeast Asia, ASEAN, has received more FDI than China, Japan, South Korea, India combined. But how did Southeast Asia do that? Because it integrated into global supply chains and into the Regional Comprehensive Economic Partnership. So the opportunities for India are magnificent. And many manufacturers would love to come to India if the conditions were right. But let me add also one other point, which is a delicate point for you, I know, Gauri, that, at the end of the day, if you want to join the global manufacturing supply chains, you still got to integrate to some extent with China. Many of the components still come from China. And indeed, if you want to, for example, become a major Apple phone production facility, which you can,
Mr. Mehbubani,
the components will come from China too.
On the integration with China bit, I think that is where India is fairly integrated. Even the last 4 years, when we continued to face tensions either at the border or diplomatically, our trade ties, they continued. So to that extent, I think the integration between the Indian and Chinese economies is fairly high. But I take your point about the ASEAN economies doing well. It's also because they themselves are a very integrated system and ecosystem to that extent. Then let me ask you two questions. I asked you about the Quad as well. That will Quad really be the inflection point for changing supply chains? Because they've been tentative about it in the past. But there are now voices within the Quad members saying that we've got to take the next step. Supply chain resilience is the next logical step. Do you see that happening?
Yeah, it'd be actually very good if the Quad stepped up its involvement in economic integration. That would be a very positive development. But as you know, the Quad declares that its primary role is to help cooperate with each other in humanitarian ventures, and as you know, there's a perception, which may be right, may be wrong, that the Quad was set up to counterbalance China, and so it is perfectly natural for the Quad to move on to that area. But as you know, Japan and Australia and the United States are already integrated with East Asia. In fact, the total trade that United States, Japan, and Australia do with East Asia is much larger than the trade they do with India. But if India steps up its trade with the Quad, that's a positive development.
You are sitting in Manila, sir, a country which has been very vocal in terms of it's been at the receiving end of aggression, especially at the seas. But this is not the conversation we are having. The conversation is about India's aspiration in terms of this region and its role and the roadmap. To that extent, I want to ask you about the Look East policy. The last couple of months, the Prime Minister, his government have really stepped up the pedal. We've invited countries from this region. The Prime Minister has made visits, for probably in some countries for the very first time, in some after 4 decades. How do you see the Look East policy that India is now embarked on with a renewed sense of urgency and commitment? Connect the dots for us in terms of its outcomes in the next couple of years, maybe a decade.
Well, I think, if I'm not mistaken, he also calls it an Act East policy now, beyond Look East. No, I think certainly I can tell you for a start, if you take Southeast Asia, where Singapore is part of, Southeast Asia has had for the last 2,000 years much closer links with India than with China. And if you look at the 9 Southeast Asian states, 9 have an Indic base. And amazingly, even in the Philippines, where I'm visiting now, when they organize an East Asian summit for the cultural performance for the leaders of, United States, China, Russia, everyone, they decide to have a scene from the Ramayana being performed in the Philippines, a Catholic country. So India's influence in Southeast Asia is very long and very deep. But as you know, there was a colonial era that separated India from Southeast Asia. We need to rebuild the traditional links. But the best way to do so is again through economic integration. It's good that ASEAN and India have a free trade agreement, but I think India needs to also integrate more with the other countries in East Asia too. And believe me, this is where the future markets are going to be. Let me give you just one statistic so you understand my point. The future economic growth, the markets are going to come from what's called the CIA countries. Now, CIA is not Central Intelligence Agency, by the way. CIA is China, India, ASEAN. Now, you add up the total population of the CIA countries, 1.4 billion, 1.4 billion, 700 million. It comes to 3.5 billion. Now, among these 3.5 billion people, in the year 2000, only 150 million people enjoyed middle-class living standards. Only 150 million out of 3.5 billion. But by 2020, the number had exploded to 1.5 billion. And by 2030, it will reach 2.5 to 3 billion. Now, never before in human history have you seen such an explosion of middle-class populations of this size and scale. Never. Here it's happening in our region. So for India to act east or look east, it is definitely going to have to integrate with this region. That's where the future growth markets are. And psychologically, therefore, I know many in India still want to look west to some extent, but the West is completely lost geopolitically and economically. And frankly, as you watch the populist parties, even domestically, the West is in trouble. That's not where the future growth is going to come. Certainly not from Europe. Certainly from the United States, yes, but not from Europe. So therefore, looking east and acting east is the future for India.
Indeed. And sir, final question as we wrap this up, which is that this session is called India Ascents, diplomatic high table that we want to be on. And I feel we are already on. I feel strongly about it that the ascent has started. We are on that journey. There are many voices that are coming in that we need to be a main player, if not an active stakeholder, whether it's in conflicts, whether it's in economic integration around the world. In your assessment, quickly, the top 3 things that we should probably be focusing on to increase the pace of this ascent.
Well, I think there's no question, you are right. India is already at the high table. But at the same time, when Prime Minister of India demonstrated that he could visit both Russia and Ukraine, he showed that India can play a very valuable bridging role. So certainly, if India stepped up its contributions in trying to find a peaceful solution for the Ukraine problem, that would be a tremendous contribution. Similarly, India is one of the few countries that can talk to the opposing sides, talk to Israel, talk to Iran, and certainly talk to all the Arab countries. And then here too, India can make a major contribution to solving a problem that is worrying the world a great deal. And as you know, finally, at the UN, I think it's time for India to make its case more clearly why it needs to become a permanent member of the UN Security Council immediately. And frankly, nudge the UK and say, okay, you've had your day. It's time for you to move on. And if India takes UK's seat on the UN Security Council, the world will cheer because they know that India will provide a perspective that will be understood both by the West and the East and the North and the South. That's a unique bridging role that India can play.
Indeed, indeed, Mr. Mehbubani.
This Diwali, embrace the spirit of new beginnings.
A time for fresh opportunities.
Bold ambitions
and renewed dreams.
See the world through a brighter lens as you turn your efforts into profits.
Transform your goals into wealth.
And spark joy in your journey
towards happiness.
1, 2, 3, 4.
This festive season.
Let money work for you.
And light up your future with prosperity. Let's celebrate growth,
Wealth and true happiness.
Profit Wali Diwali.
NDTV Profit's first Diwali.
From our home
to yours.
I think it's a brilliant session because if India doesn't start disrupting the rest of the world and showing the Indian way to innovate, I think we've lost an opportunity. And with the world in a crisis in terms of what's happening with geopolitics, with what's happening with health, I think this is the right time for us to come together with disruptive innovation, and I think that healthcare has a major role to play there.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future,
as we've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
I truly believe that this is not only India's decade, but India's century, because of several radical reforms that India has carried out, structural reforms, digitization, the focus on infrastructure, and it is going to be India's century. And I really compliment NDTV for launching the NDTV World Channel. This will enable us to take the message of India to the rest of the world.
listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that'll help you move with the tide.
An unmissable trade.
If you want to be in the money.
Nifty Sensex fall for a third consecutive session, record lowest closing since the 14th of August. Sectoral indices end mixed. Pharma emerges as the top sectoral loser. After facing regulatory hurdles, Paytm finally gets an NPCI approval to onboard new UPI users. Stock reacts positively, surges almost 10% in today's session. Government working on a bailout package for MTNL plans to look at revival of the ailing teleco as it's an NDTV Profit exclusive. Government rules out separate regulatory body for AI, plans to set up AI Safety Institute to put regulations in place. This is also an NDTV Profit exclusive. As Maharashtra goes into election mode, we look at prominent candidates from the state who could hold sway with voters. All eyes on Kazan as the Prime Minister is set to meet Chinese Premier Xi Jinping in a much-awaited bilateral at the BRICS summit. Could this reset ties between New Delhi and Beijing? Good evening and welcome. You are watching Profit 360 on NDTV Profit and I'm Nupur Talwar Suri. We begin as always with a look at how the markets have performed today, and the Nifty and the Sensex have fallen for the third consecutive session. The Nifty recorded its lowest closing since the 14th of August, in fact, and sectorally, Pharma has emerged as the top loser. And IT, of course, is leading the most. Agam Vakil joins us with a wrap of all the action that took place today.
Well, there was some hope of recovery in the markets today, but at least as far as the benchmarks are concerned, well, they've ended the day with marginal cuts. So there hasn't been recovery there, at least. We are looking at the Nifty closing below the mark of 24,500. It was a crucial level to some extent. And as far as the Bank Nifty is concerned, again, while marginally in the red, still below the mark of 51,500. Now, in terms of the Nifty and the constituents, let's take a look at the heat map and how things have fared. So while we do have a lot of gains in names like Bajaj Finance, Tech Mahindra, Tata Consumer Products, Bajaj Auto, we also have sharper cuts in names like M&M, Sun Pharma, Eicher Motors, and Shriram Finance. It's been a fairly mixed day of trade, and you shouldn't really go by the advance decline ratio on the Nifty 50, which is about 20:30, 21 to 29 to 31 to be precise. But in the broader markets, of course, you have about 3 gainers for 2 losers. Let's take a look at the broader market indices too. How has the mid-cap index panned out? Outperformance with respect to the Nifty, up around 0.5%, as well as the small cap index, which has ended with the up move around 1% too. But even in terms of your key movers with respect to the broader markets, it's been stock specific. So let's take a look at all those which advanced substantially and also those stocks which actually saw sharper cuts. We had Deepak Fertilizers, Amber Enterprises advancing by around 11 to 14%. Coforge, Persistent Systems as well, by advancing by just as much, up around 11%, with Godfrey Phillips also moving up around 9%. On the other hand, well, we have weakness in Gujarat Fluoro, which declined declined by nearly 7%, 6.5% cut for Rajesh Exports. Names like ABB India as well as Siemens, which were, well, testing life highs just a few days ago, are once again looking at a knock around 5 to 5.5% as well. All along, though, as far as the broader markets are concerned, there was a slight bit of recovery. But the question really is that, is this recovery sustainable? And we've seen that, at least as far as the benchmarks are concerned, well, there remain some, well, challenges with respect to technical aspects. But for now, it's been a quiet end to this trading session. Wait and watch on tomorrow.
All right, thank you very much for joining us with those details, Agam. Now, moving on, it is coming as a big relief for Paytm. The National Payments Corporation of India has granted approval to the company to onboard new UPI users after an 8-month ban. Now, according to the letter, the company will need to adhere to all NPCI procedural guidelines and circulars issued from time to time, including guidelines and circulars issued specifically on risk management, brand guidelines for app and QR, multi-bank guidelines, and customer data. And it is a big setback for the edtech firm Bajaj from the Supreme Court. The top court has rejected the settlement between Bajaj and BCCI, and Varun Gakhar has more details and is joining us now. So Varun, give us more details on what the Supreme Court said.
So in a big setback to the embattled edtech firm Bajaj, the top court has set aside the NCLT order, or the NCLAT order that put an end to Bajaj's insolvency process back in August. Now, a little background to the case before we delve into the details. In August this year, the NCLAT approved Bajaj's settlement with the BCCI, thereby putting an end to its insolvency process. Now, according to this settlement, Bajaj committed to settling its dues to the tune of nearly rupees 158 crores with the BCCI. Now, this prompted US-based lenders backed by Class Trust LLC to move the apex court against the NCLT-approved settlement based on the allegation that the money that was being used for the said settlement was siphoned from them and that the sources for this money was questionable. In addition, it was Glass Trust's contention that Bajaj owes it nearly rupees 8,000 crores and that the NCLT approved the settlement based on a meager amount of rupees 158 crores and put an end to the insolvency process itself. Now, the top court then heard the matter at length for nearly 2 days and the judgment has now been delivered. In toto, the top court verdict essentially means that the insolvency process for the edtech firm will continue. And while setting aside the NCLAT verdict, the top court said that the NCLAT did not provide adequate reasoning while approving the settlement process with the BCCI and iterated that the due process of law was not followed. In addition, the court has directed that the settlement amount of rupees 158 crores needs to be returned back to the committee of creditors and this money has to be retained in an escrow account. Now, the case has also been sent back to the National Company Law Tribunal for a fresh adjudication on the issue of whether the settlement was lawful or not.
All right, Varun, thank you for joining us with those details. Moving on, all eyes are on Kazan. The Prime Minister is set to meet the Chinese Premier Xi Jinping in a much-awaited bilateral at the BRICS summit. This could signal a reset in ties between the two countries. This comes amid the ongoing 16th BRICS summit in Russia. Now, NDTV's Kadambini Sharma is joining us with more on what's expected.
Well, first of all, let me tell you that within few minutes now, there will be family photo of BRICS leaders, and this is the day of the summit. So there will be family photo, and after that, there would be a closed plenary and an open plenary where the leaders will give their statement. Now, the bilateral about which we are talking can happen only after that. So we are expecting it to happen sometime in the late afternoon. Now, what has happened here is that we saw how the announcement was made about petroleum agreement which has happened between India and China, and the expectations were that now that it has been announced just before the BRICS summit and PM traveling for BRICS summit, that there will be a bilateral, and it was announced that way. It was confirmed by Foreign Secretary only last evening. So what exactly has happened, that too is very important to understand. What has happened is that all after this discussion, intense discussion, there is now the understanding is that the patrolling and grazing rights would be what those were in 2020. However, the agreements which have been reached in before this final agreement, this petroleum agreement, were not opened. That also has been clarified. So this now this is something which is actually in the pending.
सैंक्शन किए गए हैं। एनडीबी को डिमांड ड्रिवन सिद्धांत पर काम करते रहना चाहिए और बैंक का विस्तार करते हुए लॉन्ग टर्म फाइनेंशियल सस्टेनेबिलिटी, हेल्दी क्रेडिट रेटिंग और मार्केट एक्सेस सुनिश्चित करने पर प्राथमिकता रहनी चाहिए। फ्रेंड्स, नए स्वरूप में ब्रिक्स $30 ट्रिलियन से भी ज्यादा बड़ी इकोनॉमी है। हमारे आर्थिक सहयोग को बढ़ाने में ब्रिक्स बिजनेस काउंसिल और ब्रिक्स विमेन बिजनेस अलायंस की विशेष भूमिका रही है। इस वर्ष ब्रिक्स के अंदर WTO रिफॉर्म्स, ट्रेड फैसिलिटेशन इन एग्रीकल्चर, रेजिलियंट सप्लाई चेन्स, ई कॉमर्स और स्पेशल इकोनॉमिक जोन को लेकर जो सहमति बनी है, उससे हमारे आर्थिक सहयोग को बल मिलेगा। इन सब पहलों के बीच हमें स्मॉल और मीडियम स्केल इंडस्ट्री के हितों पर भी फोकस करना चाहिए। मुझे खुशी है कि 2021 में भारत की अध्यक्षता के दौरान प्रस्तावित ब्रिक्स स्टार्टअप फोरम इस वर्ष लॉन्च किया जाएगा। भारत द्वारा दिया गया रेलवे रिसर्च नेटवर्क का इनिशिएटिव भी ब्रिक्स देशों के बीच लॉजिस्टिक्स और सप्लाई चेन कनेक्टिविटी बढ़ाने में अहम भूमिका निभा रहा है। इस साल ब्रिक्स देशों में यूनिडो के साथ मिलकर इंडस्ट्री 4.0 के लिए स्किल्ड वर्कफोर्स तैयार करने पर बनी सहमति बहुत ही महत्वपूर्ण है। 2022 में लॉन्च किया गया ब्रिक्स वैक्सीन R&D सेंटर सभी देशों की स्वास्थ्य सुरक्षा बढ़ाने में मदद कर रहा है। हमें डिजिटल हेल्थ में भारत का सफल अनुभव ब्रिक्स पार्टनर्स के साथ साझा करने में खुशी होगी। फ्रेंड्स, क्लाइमेट चेंज हमारी साझी प्राथमिकता का विषय रहा है। रूस की अध्यक्षता में ब्रिक्स ओपन कार्बन मार्केट पार्टनरशिप के लिए बनी सहमति का स्वागत करता है। भारत में भी ग्रीन ग्रोथ, क्लाइमेट रेजिलिएंट इंफ्रास्ट्रक्चर और ग्रीन ट्रांजिशन पर विशेष रूप से बल दिया जा रहा है। इंटरनेशनल सोलर अलायंस, कोएलिशन फॉर डिजास्टर रेजिलिएंट इंफ्रास्ट्रक्चर, मिशन लाइफ यानी लाइफस्टाइल फॉर एनवायरमेंट, एक पेड़ मां के नाम जैसे इनिशिएटिव लिए गए हैं। पिछले वर्ष COP28 के दौरान हमने ग्रीन क्रेडिट जैसे महत्वपूर्ण पहल की शुरुआत की। मैं ब्रिक्स पार्टनर्स को इन इनिशिएटिव से जुड़ने के लिए आमंत्रित करता हूं। ब्रिक्स के सभी देशों में इंफ्रास्ट्रक्चर के निर्माण पर विशेष रूप से बल दिया जा रहा है। भारत में मल्टी मॉडल कनेक्टिविटी को तेजी से बढ़ाने के लिए हमने गति शक्ति पोर्टल बनाया है। इससे इंफ्रास्ट्रक्चर विकास के लिए इंटीग्रेटेड प्लानिंग और इम्प्लीमेंटेशन में मदद मिली है और लॉजिस्टिक कॉस्ट कम हुई है। हमारे अनुभव आप सभी के साथ साझा करने में हमें खुशी होगी। फ्रेंड्स, ब्रिक्स देशों के बीच फाइनेंशियल इंटीग्रेशन बढ़ाने के लिए प्रयासों का हम स्वागत करते हैं। लोकल करेंसीज में व्यापार और सुगम रूप से क्रॉस बॉर्डर पेमेंट से हमारा आर्थिक सहयोग सुदृढ़ होगा। भारत द्वारा बनाया गया यूनिफाइड पेमेंट्स इंटरफेस यानी UPI भारत की एक बहुत बड़ी सक्सेस स्टोरी है। इससे कई देशों में अपनाया गया है। पिछले वर्ष हिज हाइनेस शेख मोहम्मद के साथ मिलकर हमने इसे यूएई में भी लॉन्च किया। अन्य ब्रिक्स देशों के साथ भी इसमें सहयोग किया जा सकता है। फ्रेंड्स, भारत ब्रिक्स के अंतर्गत सहयोग बढ़ाने के लिए पूरी तरह से प्रतिबद्ध है। हमारी विविधता और मल्टीपोलैरिटी में हमारा दृढ़ विश्वास हमारी ताकत है। हमारी यही ताकत और मानवता में साझा विश्वास हमारी भावी पीढ़ी के समृद्ध और सशक्त भविष्य को सार्थक रूप देने में सहयोग होगा। आज की बहुत ही महत्वपूर्ण एवं उपयोगी चर्चाओं के लिए मैं सभी का आभार व्यक्त करता हूं। ब्रिक्स के अगले अध्यक्ष के रूप में मैं राष्ट्रपति लूला को हार्दिक शुभकामनाएं देता हूं। भारत आपकी ब्रिक्स अध्यक्षता की सफलता के लिए अपना पूरा सहयोग देगा। एक बार फिर राष्ट्रपति पुतिन और सभी लीडर्स का बहुत बहुत धन्यवाद।
Спасибо большое, уважаемый господин премьер-министр.
All right, so that was the Indian Prime Minister, Prime Minister Modi speaking at the BRICS summit. Do remember that we are all still awaiting that much talked about bilateral to take place between Prime Minister Modi and Xi Jinping. So there is a bit of a time for a pull aside at about 4:30. So that could be the expected time frame. The Prime Minister, of course, speaking out about how important BRICS is and the initiatives that are being taken over there. Well, moving back now, there is no word yet on whether CNG prices will be hiked after the government imposed a 20% cut on discounted gas supply or APM gas supply for city gas distribution companies last week. But imports of gas are set to increase. Vikas Srivastav caught up with the managing director of the Mahanagar Gas, who provided more details.
Right now we are getting around, there is 70% is being used in CNG, 15% in domestic and 15% in industrial and commercial. So domestic 100% allocation is coming from the domestic gas. Industrial and commercial is getting imported, and for the CNG part, it is currently, it was 70%, now it has come down to around 57%.
Going ahead, how much it's going to increase from imports? Because now government has reduced the APM allocation, so is that going to decrease? Your imports will increase indefinitely.
Imports will increase depending on the allocation which is available. So we are yet to see. The allocation may go up because the new fields are coming up. The HPHT gas is also there. And term contracts are available in industrial and commercial, and also to fund for PNG and CNG segments. So we can go into the term contracts to meet the shortfall.
Well, speaking to reporters after Nestle posted its worst ever quarterly numbers in 8 years, Nestle India CEO Suresh Narayanan flagged concerns over FMCG demand in cities. Now, he also spoke about how the middle class is shrinking while premium products are doing well. Sesa Sen was at that meeting and has more details.
Right, the FMCG companies are facing an urban dilemma, with the country's bustling megacities and metros emerging as the new pressure points, while rural is holding steady. During a media roundtable on Tuesday, Nestle India CEO Suresh Narayanan pointed out the changing dynamics of the middle class. He highlighted a concerning trend, which is the middle class is shrinking, leading to reduced spending over the last 2 to 3 quarters. This stands in stark contrast to previous years, when slow quarters typically rebounded quickly. The struggle is aggravated by skyrocketing inflation, with prices for key ingredients like cocoa and coffee surging. Coffee, for instance, is up nearly 70%, and cocoa prices have climbed nearly 2.5 times in the past year alone. As a result, Nestle has had to implement price hikes ranging from 15 to 30%, and the company forecasts similar increases this year in these categories as well. The CEO also highlighted intensified regional competition, especially in the noodles and chocolate segments, while well-known brands such as Maggi and Kit Kat have successfully navigated these challenges by strategizing around premium offerings. Munch is facing a downturn in demand. Nestle reported a decline in its volume growth for the September quarter, but Narayanan is optimistic. He aims to regain the impressive 6 to 7% volume growth the company experienced from 2016 to 2022. However, he cautioned that inflationary pressures pose a significant barrier, stating that the recovery pace will depend on stabilizing inflation rates. Back to you.
All right, thank you very much for that one. Now moving on to another NDTV Profit exclusive. The government is now believed to be mulling the revival of Mahanagar Telephone Nigam Limited or MTNL. Now bankruptcy and merger plans have been shelved and ruled out for the moment. And Shrimi is joining us with more details on this. Shrimi, we are given to understand that the government could be looking at an MTNL revival now.
What we have given to understand from government sources is that approach is to revive the MTNL and not going for bankruptcy route or even merging the entity. In fact, the government is looking at the financial crisis at MTNL in two parts. One is, of course, the short term and the immediate concern of repaying the loans. The total exposure is, as you know, is about 8,000 crores. So the banks and MTNL are in talks to sort of have a restructuring plan, and the condition is being worked out to have a bailout plan there. And the second issue is long-term debt, which MTNL has taken. Again, the debt obligation is about 28,000 crore, and for that, government is planning to sort of monetize the huge land assets of MTNL, and they are in talks with MTNL and ask them to give a detailed plan and the issues with each land which they are having, because all the land assets could not be monetized given the challenges of state regulations and public usage, etc. So the actual realization could be much lower than the estimated value of these lands, is what we are getting sense from the government. And besides, they also ask MTNL to cut the operational cost and in fact use the resources of BSNL, and the spectrum which has been allocated to BSNL can be also used by the MTNL.
All right, on to another NDTV Profit exclusive. The government is not considering setting up a separate body for the regulation of AI. This is according to officials at the Ministry of Electronics and IT. Rishabh has more on this and joins us now. So, Rishabh, the government essentially saying that there isn't going to be a separate regulation for AI, regulatory body rather for AI.
We have some news coming in from the Ministry of Electronics and IT that the government has ruled out that there will be a separate body that will be regulating artificial intelligence in the country. Instead, what is being proposed is an Artificial Intelligence Safety Institute, as well as the current practice that is to send voluntary guidelines to companies in the space on how to watermark and how to deal with deepfakes and other those issues. The government remains very, very cognizant of the risks that come along with artificial intelligence, and they've said that they will continue to engage with various stakeholders. We're seeing a bunch of new stakeholders that have emerged over the past couple of years. So no new framework on artificial intelligence currently.
Well, thank you for that, Rishabh. Now, the NCP, led by Ajit Pawar, has announced its list of 38 candidates for the Maharashtra elections. Pawar will contest from Baramati, a crucial seat for the party. NDTV's Jitendra Dikshit joins us with more. We will play out that later, but let's quickly go across to what's happening in Wayanad. Now, in a symbolic moment for the Congress party, Priyanka Gandhi Vadra has officially filed her nomination for the Wayanad by-poll today. For the Wayanad by-poll today, now do remember that we had heard about Priyanka Gandhi deciding to contest from this place. Now, Rahul Gandhi, of course, who has represented Wayanad from 2019 to 24, had to vacate the seat after retaining Rai Bareli in the last general elections leading to this by-poll. He urged voters to back his sister, saying, "What Wayanad has done for me is beyond words. Deep feelings are best shown through action." All right, now moving back to the other story that we are tracking is the Maharashtra elections. Now, the NCP, of course, led by Ajit Pawar, has announced a list of 38 candidates. And at this point, of course, we are told that Pawar will be contesting from Baramati, which is a stronghold for the NCP and a very crucial seat for them. NDTV's Jitendra Dixit has more on this and now joins me live. Hi, Jitendra. Jitendra, give us a sense of what the NCP has decided in terms of the candidates is going to file, and also tell us a bit more about the big names that we are seeing and who's been given what seat.
Hi Nupur, see almost both the alliances Mahayuti and Mahavikas Aghadi have finalized their seat sharing formula, and many parties of which are constituents of both these coalitions, they have come up with the list of their candidates. So the recent list which has come up is of Ajit Pawar's NCP, in which it has been revealed that Ajit Pawar is going to contest from Baramati Vidhan Sabha seat. Till a few days back, there were speculations going on that Ajit Pawar might be contesting from some other seat like Shirur or some other seat, or he might not contest at all. But now this has been made clear that Ajit Pawar is going to contest from Baramati seat. Another big name in his list is of Chhagan Bhujbal, who will be contesting again from the Yola seat in the Nasik district. Bhujbal has been contesting from this seat since 2004, and once again he has been given candidacy from this particular seat. Apart from these two names, if we talk about other parties whose list have come, so we can say that Devendra Fadnavis, who has been contesting from Nagpur Northwest seat since 2009, has once again got ticket from the same seat, and that will be a major contest for him in the state. Apart from Devendra Fadnavis, one interesting name is of Amit Thackeray, who is going to do his electoral debut from the Mahim Legislative Assembly seat. This is a seat which is considered as a bastion of Shiv Sena, and he will be entering the contest where the fight will be between Eknath Shinde's Shiv Sena's candidate Sada Sarvankar, who has been a 3-time MLA from this particular seat. Apart from this seat, there are other important seats where we are going to see tough fights between key candidates, like the Worli seat, where Aditya Thackeray had won the elections in 2019. It is yet to be revealed whether Aditya Thackeray is once again going to contest from the same seat, or his seat will be changed. This time MNS has given a candidate from Worli seat. Last time in 2019, when Aditya Thackeray visited Raj Thackeray to seek his blessings, Raj Thackeray had decided not.
All right, so that's what we are hearing in terms of the key candidates for the Maharashtra elections. Well, that's all we have time for right now in this edition of Profit 360. Thank you for joining us.
This Diwali, embrace the spirit of new beginnings.
A time for fresh opportunities,
bold ambitions,
and renewed dreams.
See the world through a brighter lens as you turn your efforts into profits.
Transform your goals into wealth.
And spark joy in your journey towards happiness.
1, 2, 3, 4.
This festive season,
Let money work for you.
and light up your future with prosperity. Let's celebrate growth,
Wealth and true happiness. Profit Wali Diwali.
NDTV Profit's first Diwali.
from our home to yours.
I truly believe that this is not only India's decade, but India's century, because of several radical reforms that India has carried out, structural reforms, digitization, the focus on infrastructure, and it is going to be India's century. And I really compliment NDTV for launching the NDTV World Channel. This will enable us to take the message of India to the rest of the world.
headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Thank you to all of you for joining us on day 2 of NDTV World Summit, and I welcome all my guests on stage as well. Now, there is a growing movement towards sustainable living with people not just making environmentally conscious decisions, but with companies also investing in sustainable growth. In this session, we'll focus on environmental, social, and governance framework, also better known as ESG, where companies, in fact, are focusing on this, and we'll explore the vital intersection of profit and purpose. As India aims to become a $5 trillion economy, embedding ESG into its core business models is one of the essential steps for companies to drive long-term profitability and sustainable growth. ESG principles are no longer buzzwords, but they represent a transformative approach to business that can drive long-term value. Our esteemed panelists bring a wealth of experience from various sectors to this discussion. I am joined by Gagandeep Sethi, Senior Vice President, Integrated Operations and Sustainability and Responsibility for Pernod Ricard, India. Mustafa Wajid, co-founder of Billion-E, which is, of course, a clean mobility platform. And Mr. Ajay Pillai, partner, sustainability and climate change at Deloitte. Thank you all for joining us on this discussion. Starting with you, Mr. Sethi, what are some of the sustainability goals for Pernod Ricard, and how do you merge profitability with purpose, and how is ESG one of the foundational blocks when you do that?
Thank you, Tanima, and it's a pleasure to be part of this panel. For Pernod Ricard, globally, we have a very comprehensive ESG program under the umbrella name, what we call as Good Times from a Good Place. It is super aligned to the ESG principles and the UN Sustainable Development Goals with its 4 elements, core elements of nurturing the terroir. Terroir is a French word, and what it means is the terrain, where the land, the Mother Earth, from where we draw all our resources. And we, being a company in the alcobev sector, it's grain to glass. So the starting point is the grain from the land. So everything that we do, while consuming those resources, we have to ensure we restore back the balance of the earth. The second most important element is around circular making, right? So while we produce products which delight our customers and consumers, we do it in a sustainable manner, right? In terms of maintaining the circularity, end-to-end value chain, right from the beginning, that is our backend, which is our suppliers, to the entire processing, which happens in our manufacturing facilities, and then the downstream in terms of the customer and the consumer, right? So that's the second element. The third element is all around valuing people. And that's the social cause, again, aligned to the ESG principles, where diversity and inclusion is a big impetus. And we are fully committed in terms of increasing the inclusion of gender in our workforce as well. And so those are the elements, and what India draws out of those elements is the cascade effect, right? So whether it is carbon neutrality, we are a water consuming product in terms of managing our water balance and hence our water targets. And also many steps that have been taken, which obviously will be alluded in the session for sure.
Right. Mr. Mustafa Wajid, if I can draw you into the conversation now, how is Billion E merging ESG into its core business model?
Yeah, thank you for that. Ellarigu, namaskara. My name is Mustafa, I'm from Bangalore. At Billion Electric, the question that she's asking specifically is focused on reducing the consumption of petroleum products in transportation. When you look at the environment issues as well as energy security issues, the two big elephants in the room are fossil fuels which are used for generating electricity, and the other one, which is equally large, is fossil fuels that are used for transportation. Just to put a number on this, India consumes about close to 150 million metric tons of petrol and diesel for transportation. This is apart from other fuels that we consume. You can imagine the amount of emissions that are coming. You can imagine the value of the imports that are going to be driven by this consumption. And at Billion Electric, we are trying to address, and hopefully we'll do a good job of it. We've already started deploying electric trucks and as an electric truck platform for logistics. So by bringing down the carbon emissions in the transportation sector, by the way, half of India's diesel consumption happens on the highways. And that's a very, very important thing to remember. So we are at it, and we believe that decarbonizing the transportation sector at one level is our corporate objective. And we will, the name Billion actually means that we would like to do 1 billion kilometers of decarbonized transportation. Now, whether this billion comes in a year or in cumulatively over 2 years or maybe even hopefully in a month as we go forward, this is something that we will see. Just to mention one thing, India's transportation requirements have multiplied by 3 times in the last 10 years. It's normally assessed in what we call as ton kilometers. And if you see the government publicate reports on this, 10 years ago we were at 1 trillion ton kilometers. Last year we crossed 3. So it's growing faster than the GDP. And that's because of increased urbanization, increased, I would say, consumerism, and also the e-commerce sector is also contributing to it. So that's something that we need to remember. And at Billion E, we would like to see how to reduce not just the decarbonization, but also make this transportation more sustainable. Thank you.
Mr. Pillai, if I can have your point of view now. Of course, the companies are going to discuss further on how they ensure that they are following ESG principles when in their business models. But what are some of the challenges you have seen firms facing when following ESG, and does it differ across sectors?
The key challenges I can put up top 3 or 4 challenges that I feel that the companies face. Number one is the quality of data and availability of reliable data to report on ESG. It requires a proper process to be followed at the operational level to have good data which can be reported. So the quality of data is right now very dependent on how tedious you are with the processes that you have in place, and it is doubtful at many places. Number 2 is the awareness level and expertise within the system for ESG to know that what is exactly expected from them to actually go out and report in ESG. So there are not many senior leadership members who are tuned to or aware of sustainability to the extent that is required. I'm not saying it is like that for everybody, but there are efforts being done for that. So, and third is the intent. As long as you believe that ESG is one more thing to be done, and the intent does not come from the top management that we really believe in ESG and we are not doing it to show somebody, but we really want to imbibe it as part of our business model, it will always remain, a sideline effect. So the quality of ESG will always be a challenge. And when you say sector-wise, well, different sectors have different parameters. For an IT industry, maybe data breach is a social issue. For an automobile industry or somebody who is water intense, availability of water, social license to operate, that would be. So sector wise these parameters change, but if you have policies and procedures which are in place, that should be similar for most of them.
Right. We'll discuss further in terms of regulations and policies as well. But coming back to you, Mr. Sethi, how is Pernod Ricard India innovating its production processes in order to align further with ESG goals?
Very important. Innovation has to be embraced, and we see it as a cornerstone as part of our endeavor to attain sustainable manufacturing practices. So it starts, there are various phases to it or elements to it. The first one is it starts with the design, innovation to design the product, the service that is for the offering, right? And much work starts there. We've aligned our entire innovation process, the stage gate, in terms the right decisions around ESG happen at the right time, which is stage 0 and 1, and not after or post you've launched the product, right? So that's the starting point. And how we ensure our business decision making is entwined at that stage. Are we going for a product or a service which will address the sustainability part of our objectives, right? And then obviously many examples of that, right? And many of the industry firsts, right? In terms of you'll have to push the scale there, especially some of the initiatives that we've done right again from the back end. Sustainable sourcing, right? In terms of our product is primarily ethanol, right? And ethanol can be sourced from various sources, and it can be manufactured in many ways. Some of them are very sustainable, many of them are not sustainable. But those smart choices and using technical innovation around those, switch of fuel from fossil fuels to biomass, which is more sustainable. Sourcing our primary packaging, secondary packaging materials like outer shipper cartons, which are FSC, Forest Stewardship Council certified, and touching almost 84% of our raw material is coming from that source. Those are the choices, and you innovate. Design to sustainable value. So degrammage, so primary packaging for us is glass bottles. It's one of the most sustainable, but it is highly intensive from energy standpoint when you manufacture glass. So the lower glass you use in your primary packaging is you're lowering the absolute energy consumption. Innovating in terms of reuse. Responsible consumption is obviously reducing the consumption, is also reusing as much you can reuse, right? So one big initiative, again, is around reuse of our bottles, which we call taking it back, the reverse logistics, washing them, bringing them to that impeccable quality, and reusing that. And for consumer, they won't be able to make out whether it is new or reused, right? So it has a huge, so that's also innovation of a sort. Green manufacturing, we've taken huge strides. One big switch from fossil fuels to biomass in our own facilities. Our group target on scope 1 and 2 reduction, which is carbon emission, which is due to burning of fuels in our own manufacturing facilities. Our group target is around 54% we have to achieve as per our SBT 2030. India is already sitting at 94%. So in many of these targets or objectives, we are leading the group because India is a huge volume, India is a huge consumption pool, and it has a huge impact and bearing on our group performance, right? So hence we are taking the lead in that aspect. Then using technology and innovation in our processes, right? Designing our processes the right way so that we conserve the resources and we avoid wastages in the entire value stream. There we use technology also. So all our lines and our production processes are internet connected, IoT. They are connected, the consumptions are being monitored, then advanced tools of AI are being used to analyze how and where the losses are happening and how they can be prevented, right? So innovation in its all form is being used and it is coming handy in terms of achieving the objectives that we have set for ourselves.
Right. I'm glad you mentioned AI as well. In fact, is that something that is being used more of late in terms of aligning your production processes with ESG?
Yeah. So the starting point to bring any improvement is to measure what is important, and there is more data, as Mr. Pillai called out. So much of data is getting produced. it is becoming difficult to manage and read through that data, right? So you have to connect your lines and your manufacturing operations, get the relevant data, but then there has to be a layer which then screens that data and converts that into information which is based on which some decision can be taken. And that's where AI comes in a big way. Also in terms of problem solving, it helps in a big way, right? So it is very useful.
A handy tool there. Mustafa Wajid, if we let's talk about carbon market and monetization of ESG. Now, the government has said that carbon trading scheme will be effective by 2026. But how soon do you see it maturing in the country?
Yeah, that's an interesting topic. We must remember that the legislation that was required to make this happen was passed only in December 22. It's less than 2 years ago. And this is a very big change. The vision of the government is to try and see how to create a carbon market like you have the stock market, to put it in simple terms. You must realize that the creation of the stock market took a hell of a lot of time. It's in our country, and digitalization, all that happened only recently in the last 2 decades. So I think carbon markets, the process is on. Policies are being contemplated and drafted. So yes, I think we are optimistic that we will see it kicking off in 2026. But as is with our country, there will be a lot of diverse issues. So to get them straightened out will take some more time. We are after all a very vocal democracy, and we keep objecting to so many things. So this will also undergo that treatment. But the important thing there is that for the first time, India will open up the possibility of monetizing carbon credits. So since this panel is headlined as aligning profit and purpose, by the way, I was just joking with everybody that that's a Bhagavad Gita topic actually. But we are trying to convert it into a commercial topic here. The reality is that carbon credits will come. It's not in the rear view mirror anymore. It's now ahead. It's looking at us in the face. There will be challenges, but good organizations who can understand this and change and adapt their processes. Like, for example, Gagan's team is doing, I think, a very good job of that. I think these will be the people who will generate these carbon credits. Because don't forget, there will always be a sector which will generate carbon debits. You cannot go away from it. For example, the steel industry, for example, the cement industry, and so on and so forth. So the reality is that there will be a very vibrant market. And there will be people wanting to buy carbon credits. I think a startling example of that was unfolded a few months ago when everybody realized that one of the biggest contributors to the Tesla bottom line in the US was carbon credits. Nobody had understood the implication of this earlier. But the reality is that Tesla sold carbon credits, and the guys who bought them were his competitors. General Motors, Ford, etc., etc. So I think we are changing that process, and I'm very optimistic that now that the legislation part is over, now the hard work has started. There will be some speed breakers and some potholes. Our systems are known for that, but that's our strength actually. The diversity and the width of opinion. So the process is much better, and I take great inspiration from the fact that the National Stock Exchange, for example, went through similar problems. But today, I'm very proud to say, and I've talked about this to people in other countries, that we have one of the most advanced stock markets in the world, if not the most. It's okay, there are always people who will try to play the fool, but by and large, we have leapfrogged, and I think our stock market is far ahead of some very mature stock markets which have been around for a century. So the reality is that we can do the same with our carbon markets. It will happen. Timelines in India must be a little flexible when we are doing something as radical as this. We saw it in the telecom sector, we saw it in the stock exchange, and I'm sure we'll see it in the carbon thing. But on a very positive note, it will happen. It's not in the rear view mirror. And decarbonization and sustainability can be monetized in the future and can add to companies' bottom lines.
But you're not putting a timeline to it just yet.
Well, I've lost enough hair to not commit numbers on calendars, dates. And 2026 is what we are all committed to. I come from the electricity sector, and electricity is one of the biggest problem areas for carbon. And therefore, we are all working hard at it. We hope to start trials sometime towards probably the end of next year, even before 26. And in 26, the idea is to go mainstream. But mainstreaming means that regulators have to be put in place. For example, we have SEBI, which regulates the stock market. Now, the question is still to be answered as to who will regulate the carbon market. So these are questions that will need answers. They may need some more parliamentary interventions. So it's a process, so let's be optimistic and look forward to it.
All right. Mr. Pillai, touching upon what Mr. Wajid was also talking about, regulatory frameworks in the country which exist, and how does that impact ESG, and are you an advocate for more regulations needed for that sector?
See, so far there aren't many regulatory frameworks for ESG. Actually, only the BRSR, which is mandated by SEBI, requires the top 1,000 listed by market capital to go out and report for sustainability. So largely sustainability reporting or ESG reporting is voluntary, and there are too many frameworks to actually look at and report against. But the thing is that if we want to make it more compliant, or if you want people to be more pushing towards reporting, then there is a need for bringing in more people into the folds of reporting, and not just the top 1,000 listed. Even in the top 1,000 listed, many are still not very sure what they have to report. And what we have currently in terms of regulation in India is very limited. But that is not the only thing that is forcing people to report. Many of our companies or manufacturers are in the supply chain for Europe and other countries, and Europe has a well-defined regulatory requirement and the subsidiaries operating in there, as well as if you have a bigger market, CSRD has come in Europe, and if you have a bigger market in Europe and you fall as large business, then also you will have to report according to their regulations also. So whether we want the regulation or not, we will be required to comply with the global requirements in a global market. So I may not be a bigger advocate of regulatory requirements, but there is a little lead, because we as Indians are not right now looking at ESG as something that is a part of business. But many of it is being reported because it has been mandated by SEBI, so we have to report. So there is a need where people voluntarily believe. There are big firms again, and there are a lot of big and small firms who are voluntarily reporting, and they are making a sincere effort also. I cannot paint everybody with the same brush, but I do see that there is a large majority still who have to wake up and see that ESG is required as part of, it's a global truth that, if you don't adopt it today, the entire supply chain, the markets, the lenders, the investors, everybody is going to push you towards that direction, and eventually you will have to adopt to that. So some amount of regulation, especially in the climate space and in the decarbonization space, is required. Yeah?
Right. And now I want to ask the question which probably, is one of the important challenges that companies face when it comes to following ESG or incorporating ESG in the business model. So in terms of costs or in terms of processes, what are some of the key changes that you've had to make for Pernod Ricard and Billion EE, and what are the hurdles that you've faced so far?
Interesting one. I think, first of all, it's more of a notion. It's a mindset. Personal experience has been that, to a large extent, the first few steps that we take in the ESG, it is profit neutral or, in fact, accretive, right? I mean, I'll just allude to some of the examples. Degrammage, right, of glass, degrammage of plastic, market bottle usage, sustainable switch of fuels. These are sustainable under the ESG principles, and hardly they come with a cost. And you improve your efficiencies, you reduce your losses, it's profit, right? I think till the tipping point comes wherein you've scratched the barrel. And I think there's a lot of opportunity which lies till we have reached that point. Once you reach that point is when that decision has to be taken, in terms of the investments, right? And I think those are some of the challenges which come. Some part of that challenge can be addressed when you are making fresher and newer investments. When you're talking of capital investments, you're augmenting capacities. Can we have ESG principles in the design stage itself? So at that time, it is incremental or marginal or no cost. but you have a design for sustainability from the word go. Re-engineering is where the larger investment would come in. And I think to the point Mr. Pillai mentioned, I think policy, support, capital investment, subsidies, but there's a lot to be done till that point. So we should not directly jump. So I'm not advocating that. It's basically, the advocacy is more around improve internally as much you can. And when the decision point comes, the policy support, regulatory support has to be there from an investment standpoint so that we take the right decisions in that direction.
Mr. Wajid, the same question to you. What are some of the challenges or hurdles you faced?
At Billion E, our focus and aim on which we've been making significant progress is to integrate renewable energy, electric mobility, and leveraging AI in the process, so that we make the transportation loop completely sustainable. We have been trying out several pilots in this regard, and hopefully we will demonstrate on certain routes or certain sectors the fact that we are using green electricity to run electric trucks and have a platform which is AI-based, which can keep track of the whole thing and ensure efficiency optimization. So by doing this, I think we will, in India, show the way to the world. Because we are blessed with a lot of huge resources when it comes to renewables. We also have a very large transportation requirement. Now the challenge is to integrate these two. This will require a lot of processes. Unfortunately, also requires a lot of engineering. It's a hard job. It's not easy to do. We are not blessed with the advantage of digital, where the power, the amount of power you're handling is less. Here we're talking of hundreds and thousands of megawatt of electricity. And this requires physical infrastructure to enable that. And if you're able to kind of get that loop going, we have done it in some cases in some pilot studies. We have discovered some new challenges, because how much ever gyan we have, the reality comes out only when we do it practically. And we are on the way, and we believe that next year we will demonstrate a completely 100% sustainable loop using green electricity with green transportation and leveraging the whole digitization piece, which is, of course, will include AI by default. So that's the perception at this stage. Thank you.
Okay.
This Diwali, embrace the spirit of new beginnings.